Yeah. So let's move on, friends. Let's discuss something in salary. Let's pick up the important things under the head salaries. Our first head. Are you all here? Are you all here? Now, listen. Say salary, in salary chapter, I have selected certain topics which are frequently asked. I have selected certain topics which are frequently asked, and we will discuss that topic in detail. Are you all with me? Are you all with me? All right. So we will start the next head, that is salary. So listen, friends. Salary have a lot of components. Salary have a lot of components. Whatever a person receives on account of employer-employee relationship have to be taken as salary. You are getting something from your employer on account of what? Employer-employee relationship. Then we can treat that as what? Salary. Are you all with me? So friends, listen. What all are the components of salary? Basic salary is there, dearness allowance will be there, then bonus will be there, commission will be there, allowances will be there, perquisites will be there, gratuity will be there, then provident fund will be there, retrenchment compensation will be there, leave encashment salary will be there, pension will be there. Are you all with me? All these receipts, your advance of salary will be there, arrears of salary will be there. Yes. Whatever that you are receiving on account of employer-employee relationship. That's what I've told you. In examination question, we are discussing everything in an examination question point of view. Are you with me? So whatever in question, whatever if it has an employer-employee relationship, if you can establish that, that have to be assessed under the head salary. Are you all with me? And the main one thing under salary is what? Allowances. That is the first main thing under salary. What is allowance? So allowance simply means a fixed amount paid by the employer to the employee to meet his expenses. Dearness allowance. Say for example, I joined a company in Salem. Okay, the company transferred me to Mumbai. My company transferred me to Mumbai, Maharashtra, Mumbai. So is the cost of living in Salem and Maharashtra, Mumbai same? No, the cost of living in Maharashtra was comparatively high. So the company is giving me a dearness allowance to meet up the extra cost of living. My salary will be the same, but they will give something extra. That is called as dearness allowance. Are you with me? Travel allowance. Every day I have to travel to different sites. Okay, say I am the supervisor of KS Academy. I have to travel from this branch to another branch, from that branch to another branch. Every week I have to travel. For this travel, I have to incur some cost. The company is giving me a fixed monthly allowance to meet up that particular cost. Traveling allowance, food allowance, entertainment allowance. You will get different types of allowances for the cost that you are incurring. Are you all with me? Whenever you are getting an allowance in income tax, you have to divide that allowance into 3. From the perspective of income tax, you have to divide an allowance into 3. Now one thing, friends, forget about 115 BAC. We will complete all the head, important things under the head. Then we will discuss 115 BAC. It is just like flipping the dosha. First side have to be prepared, then only you have to flip the dosha, right? So stick on to the old slab rates. That is the first side. Once first side is properly cooked, we will flip the dosha. We will compare everything and I will understand what is 115 BAC. Are you with me? But you have to be patient. Don't come up with BAC in between. It is both to the online as well as offline students. Don't come up with BAC in between, because I have clustered everything in relation to 115 BAC in the last chapter. This is the table. We call it as a comparison table. This is 115 BAC comparison table. We will discuss everything in relation to 115 BAC together. In between, if I start discussing, you will go mad. Okay, so for the time being, be patient. We will discussing 115 BAC towards the end. Now coming back to the point, listen. Allowances can be divided into 3. With all of the 3 splits. Number 1, fully exempt. That means certain allowances which is under, which we are about to discuss, are fully exempted. You don't need to pay any income tax for the fully exempted allowances. Second one, partly taxable. What is partly taxable? the out of that entire allowance, something is taxable and something is exempted or not taxable, we can say. That is called as partly taxable, or we can say partly exempted also. Are you with me? Third category is fully taxable. So we are not discussing fully taxable. Why? We will be discussing fully exempted and partly taxable. All other allowances will be fully taxable. Are you with me? Study the fully exempted as well as partly taxable allowances. Apart from that, everything will be fully taxable. Are you all with me? Are you all with me? Now, let's first understand which all are the fully exempted allowances. Can you read the first one for me? Allowances to High Court judges. Whatever allowance that you pay to a High Court judge, fully exempted. Especially house allowance paid to a judge for judges who do not avail himself an official house. That means normally the High Court judges will have a official residence. They will provide an official residence. Are you with me? There will be a judges avenue somewhere near to the Madras High Court. Everywhere there will be a judges avenue. That means the place where this judges resides. It will be like a villa. Okay. So say for example, one judge says that I don't want a villa. Rather you pay us what? An allowance for the house that I am living in. If that allowance is given to that particular judge, that is not required to be taxed in the hands of judges. Are you with me? Are you with me? So allowance to High Court judge, and which is that allowance which is exempted? House allowance paid to a judge. That is paid to a judge if he does not avail an official house. If he is availing an official house, that is what is the purpose of giving house allowance? Is it required? No. So if you are a judge and you are getting a house allowance, that will be fully exempted in your hands. How about the second one? Can you read the second one? Allowance paid by United Nations organization. Say you are working in a nodal office of United Nations organization in India. They have nodal offices in India as well. You are working as of a member or an employee of that UNO, United Nations organization's office in India, and you are getting allowances. That entire allowances received shall be fully exempted or not taxable. Can you read the second part? Allowance paid by UNO to its employees is not taxable. What is UNO? United Nations Organization. Whatever allowances that you are getting from UNO shall be fully exempted. What is the third one? Sumptuary allowance. Sumptuary allowance is just like an allowance paid to those persons who are in the honorary post. Okay, just like High Court judges and Supreme Court judges who carries this honorary post will get a sumptuary allowance. That sumptuary allowance is again fully exempted. Are you with me? And what is the last one? Allowances payable outside India under section 10 subsection 7. Allowances or perquisites paid or allowed outside India by government to a citizen of India for services rendered outside India are exempted from tax. What do you mean by this? Listen, we have embassy office overseas. Have you heard about Indian embassy? We have embassy offices. Say for example, we have an embassy office in Japan. We have an embassy office in Japan. Who pays salary to that Japanese embassy officials? See, the embassy office, Indian embassy in Japan is actually administered by Indian government. All the persons who are working in that embassy office will be our citizens. All the salary will be always paid by the Indian central government only. And there is a thing under section 9. What it says is, according to section 9, all the salary paid by Indian government to citizens working outside shall be deemed to be accrued or arised in India. Deemed to be accrued or arised in India. What do you mean by deemed to be accrued or arised in India? What they are saying is, Indian government, if they are paying some salary to Indian citizens who are working outside India, shall be deemed to be accrued or arised in India. What do you mean by this? Imagine the Indian embassy office in Japan. Our Indian citizens are working over there. Are you all listening? Are you all listening? Our Indian embassy officers are working over there. Indian government is required to pay them salary. But they are accruing the salary in Japan because they are providing services in Japan. Their receipt also is in Japan. That's why they have inserted section 9. All the salary paid by Indian government to that person who's working outside India shall be deemed to be accrued or raised in India. Deemed to be accrued or raised in India. What is deemed? We know that it is accrued outside India, but you have to assume that it is accrued in India. It is deemed to be accrued or raised in India. Are you with me? Are you with me? If say income tax department say it is deemed to be AK-47, then you know that this is a bottle of water. And online it is not coming. So say, what will I raise? Yes. Say this is deemed to be AK-47. Income tax department, if they say like that, then whenever you interpret Income Tax Act, this will be AK-47 only. We know that it is, I know that it is not AK-47. But if they are coming up with a deeming fiction, then you have to assume like that only. Are you with me? So, yes. So that's what they are saying. So here, whatever salary paid by the central government shall be deemed to be accrued or raised in India. Whatever salary. That means all the components of salary, they have to pay taxes in India. For all the components of salary, they have to pay the taxes in India. One of the component is allowance, which is fully exempted. That's what the government says. If we are giving you any allowance, you don't have to pay taxes for that particular allowance. For the basic salary, DA, commission, etc., you have to pay the taxes. For allowances, you don't have to pay any taxes. Are you with me? Are you with me? So that is the element that we were discussing. So coming back to that particular point, read this again along with me. Allowances payable outside India under section 10 subsection 7. That means allowances or perquisites. Perquisites are also exempted. That we will cover later. Paid or allowed outside India by government to citizens of India for services rendered outside India are exempted from tax. So you tell me which all are the allowances which is fully exempted. 4 types of allowances are fully exempted. Which all are the 4 types? Number 1, allowances to the High Court judges. House allowance to the High Court judge. Number 2, any allowance paid by the United Nations organization to its employees working in India. If they are not working in India, you don't need to worry about their taxability. Are you all here? Now, point number 3, sumptuary allowance received by the High Court or Supreme Court judges. And point number 4, allowances paid by the central government to Indian citizens who are working outside India. Over the 4 allowances, fully exempted. Don't pay any taxes for this 4. Is that clear? Is that clear? Now, moving on to the next one. What is the next one? The second category, that is partly taxable allowances. Let's understand which all are the partly taxable allowances. Now, coming back to the point, friends, allowances which are partly taxable. Partly taxable also, we can say that partly exempted as well. Both are same. Out of that, first one, can you read the first one under that? House rent allowance under section 1013A. So, what is house rent allowance? First of all, what do you mean by house rent allowance? You are staying in a rented premises. Your employer is giving you a allowance to pay your rent. That allowance you will make use to pay your rent. That is said to be what? House rent allowance. You received house rent allowance on account of employer-employee relationship. So department say that will be normally taxable under the head salary, but you can claim an exemption under 1013A. That's what we are about to discuss. So can you read the first sentence under that? House rent allowance granted to an employee is exempted to tax to the extent of least of the following. So least of the following shall be exempted. Which all are the limits? Number 1, HRA actually received. What do you mean by HRA actually received? The actual house rent allowance received by you is the limit number 1. What is limit number 2? Rent paid minus 10% of salary for relevant period. The actual rent paid minus 10% of your salary shall be limit number 2. What is limit number 3? 50% of salary for the relevant period if the house is situated in metro cities like Delhi, Kolkata, Mumbai, Chennai. As per the preceding census, we only have 4 metro cities. Number 1, Delhi, Kolkata, Mumbai, and we are sitting in one. That is Chennai. Or 40% of salary for the relevant period in other houses. So we will explain this. Listen. Say my employer is paying me what? A house rent allowance. That house rent allowance received by me shall be taxable under the head salary. But I can claim an exemption under 1013. Okay, what is this? What is this? What are you doing? Yeah, so coming back to the point. So listen, where were we? Completely gone out of the topic. Say for example, friends, my employer have paid me what? A house rent allowance. That will be fully taxable as a component of salary. That is the first thing. From that salary, from that component, I can claim an exemption under section 1013A. What all are the limits? Number 1, what is the first limit? The actual allowance received by me. That is said to be the limit number 1. What is limit number 2? Rent paid minus 10% of the salary. Now, first of all, what do you mean by rent paid? See, why I am getting a house rent allowance? Because I am staying in a rented premise. Are you with me? That rent paid by me in a year, you have to compute and take. Minus 10% of salary. But there is a problem now. What is the problem? What is the salary? Because only for computing salary, we are computing this HRA exemption. Are you with me? And for the time being, we don't know what is the salary. So department comes up with a definition for that. So department defines the word salary for the purpose of 1013A. What are the salaries for the purpose of 1013A? Salary for this purpose means basic salary, dearness allowance if provided in the terms of employment. What do you mean by provided in the terms of employment? Whenever you join the company, in the employment contract, they have clearly mentioned that we will pay you dearness allowance of say 10,000 rupees. And they will make use of that provided DA for computing your retirement benefit as well. And there is one more DA. You are working with me in Chennai. I'm transferred you to Delhi for 6 months. And I've said during the 6 months period, I will pay you DA. When you come back, I will now pay you any DA. That is a kind of an unofficial DA. That you never consider. If DA forms part of the retirement benefit or forms part of the employment contract or the terms of employment only, you have to consider it. Are you with me? Are you with me? Now, moving on to the next one, plus commission if it is expressed as a fixed percentage of total turnover of your employer. What is commission? Normally, the employer pays either fixed commission or the employer pays commission as a percentage of employer's turnover. Are you with me? If the employer is giving a commission as a percentage of employer's turnover, then only consider that. Otherwise, you ignore it for the purpose of computing exemption. Are you with me? While computing taxable salary, you need to take all the receipt. Only for the computing exemption and for what? And for this computing this limit only, you need to take basic plus DA forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your turnover. Just like a sales commission, yes. But that commission shouldn't be fixed, shouldn't be monthly. It should be a percentage of the total turnover of employer. Then only you have to take it. Otherwise, you have to ignore it. Are you with me? Are you with me? So, HRA actually received. Point number 2, rent paid minus 10% of salary. Now, let's do one thing. We'll name this salary, okay? We'll put a name for this salary. We will call it as standard salary. This is not an official name. This is just a nickname given by me, that's it. Are you with me? So what is standard salary? Repeat that standard salary definition. Basic salary plus DNS allowance if provided in the terms of employment plus commission if it is expressed as fixed percentage of turnover of the employer. So you take the basic salary plus DNS allowance if it forms part of the retirement benefit or if it is provided as per the employment terms plus commission only if it is a percentage of your total turnover. Are you all with me? Are you all listening? This is called as what? Standard salary. Repeat the definition again. Basic salary plus DNS allowance forms part of the retirement benefit plus commission if it is expressed as fixed percentage of your turnover. Hey, Thambi, repeat. Only then you will understand, okay? Only then you will study. Now, so this is what is called a standard salary. So what is limit number 2? Limit number 2, rent paid minus 10% of standard salary. Don't write standard salary in exam. Only write 10% of salary in exam. But for the understanding only, we are naming it as standard salary because the same definition is getting repeated. Are you with me? Now, what is the third limit? What is the third limit? 50% of salary for the relevant period. If the house is situated in metro city. That means if your house, that means the house in which you are staying is either in Chennai or in Delhi or in Kolkata or in Mumbai. Then the third limit is 50% of standard salary. If your house is in Salem or house is in some other city, then it shall be 40% of standard salary. Are you with me? Are you with me? So 3 limits we have. Either actual HRA or rent paid minus 10% of standard salary or 50% of standard salary if the house is in metro or 40% of standard salary if the house is in some other places. And what is salary? Standard salary. What is standard salary? Basic salary plus DA forms part of the retirement benefit plus commission if it is provided as a fixed percentage of the total turnover. Are you with me? Now let me ask you one question. What if I am staying in my own house? Or what if I am staying in a house where I don't have to pay any rent? No exemption. Because technically limit number 2 will become 0. Don't do it mathematically, okay? 0 minus 10% of salary will be negative. So whichever is lower will be negative and all. Don't do like that. So these are just exemption. Don't do it mathematically. Do it logically. If you are staying in a house where you don't have to pay any rent, you are not eligible for exemption. That full HRA, certain employers are very generous. They will pay what? HRA. Okay. So if the employer is paying an HRA and the employee is not staying in a rented property, then that full HRA will be taxable. What is HRA? House Rent Allowance. Is that clear? Is that clear? So the exemption is not available to an assessee who lives in his own house or in a house for which he has not incurred the expenditure of rent. So if you are staying in your own house or you are staying in a property where you are not required to pay any rent, don't pay any, you will not get any exemption for the HRA. I hope it is clear. Now quickly solve it, okay? Just go through this question number 1. It's a good question. It's your institute study question actually. So just go through this question. Yeah, I'll come to the doubts. Okay. Bro, blur is not a Bangalore. Okay. My God. Metro city doesn't mean you have a metro. Okay. Appadi irundha Kochi metro city da. We have a metro over there. Metro city means it depends upon the population. Okay. So let's solve this question together, friends. Listen. Basic pay is given, DNS allowance is given, commission given, motor car for personal use, house and allowance is given. Find out the amount of HRA eligible for exemption to Mr. Rajkumar, assuming that the period of rent, he paid a rent of 1,000 per month for his accommodation at Kanpur. DA forms part of salary for retirement benefit. So what does that mean? It forms part of retirement benefit means it forms part of employment contract. That's why they are making use or they are using it for computing your retirement benefit. Mr. Rajkumar exercises the option of shifting out of default tax regime. That means he don't want 115 BAC. Compute everything as per the old scheme for the time being. Then we will flip the dosha towards the end. Okay. So what you need to do is, first of all, you have to write the actual HRA received. How much is the actual HRA received? Actual HRA received. How much is the actual HRA? It is 1,000 per month. That is a rent. It is HRA. 900 per month into 12 months. How much will be the total? 10,800. Now, how do you claim exemption under section 1013A? Either actual HRA 10,800 or rent paid minus 10% of standard salary. So you should complete what? Compute standard salary. How do you compute standard salary? Take basic salary, that is 3,000 per month, plus take DNS allowance because it forms part of the retirement benefit. So you have to take that also, that is 600 per month, plus commission if it is expressed as a fixed percentage of your total turnover. But do you have to take commission here? No, because they are saying 6,000 per annum. That means it's a fixed commission in a year. They have to say it is a percentage and they have to give the percentage as well. They have to say the percentage as well as they have to give the turnover as well. Then only you should take the commission. Otherwise, ignore the commission. Are you with me? Are you with me? So, right now I have ignored that particular commission here. So, you tell me how much is the monthly standard salary? 3,600 into 12. And how much will be the total standard salary? 43,200 will be the total standard salary. So, limit number 2 will be rent paid minus 10% of standard salary. How much is the rent paid? 1,000 per month. So, 1,000 per month rent paid. Rent paid will be 12,000 for a year. Minus 10% of standard salary will be 43,200. Sorry. 4,320. 4,320. So can you tell me what is the second limit? Come again? 7,680 is limit number 2. 7,680 is limit number 2. Now what is limit number 3? 40% of standard salary. Why 40% of standard salary? Because he is staying in Kanpur. Kanpur is not a metro because we have only 4 metros. Delhi, Kolkata, Mumbai, Chennai. So 40% of standard salary means 43,200 into 40%. Can you help me with the math? 17,280. 17,280. So 17,280. Whichever is lower. Which is lower? 7,680 is the lower figure. So 7,680 you can deduct. And how much will be the remaining amount? How much will be the remaining amount? 3,120. So they are asking us to compute eligible amount for exemption. So 7,680 should be the final answer. Okay, this is the amount that you can claim as an exemption under 1013A. This is an important adjustment, not an important question. Why? They will never give such a question in exam. This will be an adjustment in a lengthy question. Are you with me? Are you with me? Moving on, friends. Let's move on with the next item. That is HRA was the first item that we have discussed. What is HRA? House Rent Allowance. Now let's discuss the other items in that particular. I got correct answer. Don't worry. I understood. Only for fun sake I said, okay. I understood. Very good, very good. Yes. Because direct tax is actually very dry and boring, so I have to make something out of this, right? So that's why I said, don't worry. Don't take it seriously, okay? Yeah. So coming back to the point, friends, moving on to the second item under the second category, which was the category that we were discussing. So friends, moving on, we will discuss the other one. Which was the category that we were discussing? Category number 2. That is partly taxable or partly exempted allowances. So second item under that is, can you read the heading? Special allowances to meet expenses relating to duties or personal expense is exempted up to the amount which is actually utilized for the purpose for which it was given to him under section 10 subsection 14 clause number 1. Very simple. The category which we are about to discuss, around 6 items are coming under this category. What is the speciality of this 6 category? Very simple. So the 6 category items are, the speciality is, if these types of allowances are given by the employer to the employee and the employee have utilized it for the respective purpose, then he can claim exemption. For example, first item, traveling allowance. Are you all with me? Item number 1 is what? Traveling allowance. Say you have received traveling allowance from your employer and it is for the official traveling and I have utilized that for the respective traveling, then nothing shall be taxable. But the problem is, I have received 10,000 and I have expended only 8,000. Then what will happen? 2,000 shall be taxable, or we can say 8,000 shall be exempted. That's why it is under the partly taxable category. If you utilize it full exemption. If you don't utilize it full, the balance will be taxable. If you utilize nothing, fully taxable. Are you with me? Are you with me? Yes, so the point is, where these category of exemptions, you can enjoy an exemption provided you have utilized it for the respective purpose. Now, what is the first item? Read again. Any allowance granted to meet the cost of travel on tour or transfer. It should be official, okay? Official. Whatever official traveling allowance that you get, you can utilize it for the respective purpose and claim exemption for that. Are you with me? Are you with me? Second one, daily allowance or per diem allowance. What is daily allowance? Just like daily bata. Not that bata company, okay? Daily bata. What is that? Say for example, I am in transportation, okay? I am an employee, I am a bus driver. I am a bus driver. Every day when I perform my duty, I'll get a daily bata for my food and other things. For my basic needs, my employer is giving me a daily bata. That is fully exempted if I utilize it. I'm getting 1,000 rupees every day and I'm spending 1,000 rupees for my food and other things. That entire 1,000 will be fully exempted. I'm getting 1,000, spending 800, then 200 will be taxable. Are you with me? Don't think that how department will know about how much I spend and all. For the time being, stick on to the theory. First you learn the compliance. Then we will discuss about the planning and evasion, okay? First you study the compliance and qualify the exam. Then we will think about the evasion. It is our responsibility to disclose everything. It is not the responsibility of assessing officer to simply come and pull your leg. Pay the taxes, pay the taxes, It's not like that. It's your responsibility to disclose everything by yourself. That is called as self-assessment in income tax. Are you with me? So think about the complaints. Understand the complaints, then you will understand the nothing. You study the complaints. That's it. Okay. You don't have to understand anything for the time being. Now, moving on to the third one. What is the third one? Any allowance granted to meet the expenditure incurred on conveyance in performance of duties of office. We say conveyance allowance. That means there is just like a cab from office to home and home to office, from one place in office to another place, one branch to another branch, like that. If you are getting a conveyance allowance for your transportation, you are getting an allowance, and if you utilize it for official purpose, don't worry, nothing shall be taxable. Then what is the next one? Helper allowance. Helper allowance means official. What is that? Your manager has given you some assignment. You have appointed an official helper. Are you with me? And for that helper, your manager is paying you not the company is paying you an allowance. And you are making the payment to that helper. Nothing shall be taxable in your hands because you are making that allowance to your helper. If you are taking some amount from that, then that shall be fully taxable. Are you with me? Official helper doesn't mean your domestic servant and all. Domestic servant is not an official helper. Are you all here? So helper allowance means it should be for the official purpose. Then what is point number 5? Research allowance. What is research allowance? You want to do some post graduation or you want to do some kind of research. Your employer is promoting that and he is giving you a allowance for that, and you're utilizing it for the respective purpose. Then balance amount, if any, only shall be taxable. The utilized amount shall be fully exempted. And which is the last one? Uniform allowance. As the name suggests, it is for the uniform. In our company, every employee have to wear a uniform. For that, your employer is giving you an allowance. That you have fully utilized. Nothing shall be taxable. Are you all with me? Are you all with me? Yes, sir. Very good. So this is what is the allowances. Okay. Conveyance allowance for personal purpose, sir. Is it taxable? If I solve any question there, only travel allowance, conveyance allowance, etc. How do we know this is for personal or official purpose? Your employer is giving you some allowance, okay, and the question says you have utilized it. That will be obviously for the official purpose. If the employer is giving you that, say for example research allowance, you can spend it. That is only personal purpose only. Okay, but you have utilized it, no problem. You will get the exemption. Travel allowance is normally, why should employer give you travel allowance for your personal travel? Just think, okay, employer will never give you travel allowance for personal travel. Okay, I want to travel to Ukraine. Will my employer give me a personal allowance for that? Sir, I want to travel to Ukraine. No. If they give that, that is not allowance. It is called as perquisite. We call it as leave travel concessions. And there is another treatment for that. Are you with me? So, travel allowance, daily allowance, conveyance allowance, etc. only for the official purpose an employer will give. Arati, hope you understood. Superb. Not visible, not clear. Okay. Is it visible and clear? I think yes, but there is some problem with this Zoom, I think. All right. So moving on, friends. So which all are the allowances that comes under this category? Please respond and repeat. Number 1, traveling allowance. Number 2, daily allowance or per diem allowance. Both are same. Daily allowance or per diem allowance. Then what is number 3? Conveyance allowance. Number 4, helper allowance. That is official. Number 5, research allowance. And number 6, uniform allowance. This helper allowance, personal means domestic servant. For that there is a separate treatment under perquisites. Are you with me? Yes, are you with me? Yes, that you will understand when we complete the perquisites. So it is like that. So category number 2, these allowances, if you are expended the amount for the respective purpose, it shall be fully exempted. If there is something balanced, then that balance shall be fully taxable. That's it. So moving on, friends, moving on with the next category. Can you read the heading? Small one comparatively. What is that? Special allowances under section 10, subsection 14, clause number 2. We have just finished clause number 1, where exemption depends upon actual expenditure. And what is clause number 2? Fixed exemption. What is fixed exemption? Irrespective of the fact that whether you have expended it or not, you will get the exemption. Whether you have expended it or don't expend it, don't matter. Don't worry. You will get the exemption. That is called as fixed exemption. And I have only selected certain important items under fixed exemption because there are a lot of items under fixed allowances. Fixed exemption. Hilly area allowances, compensatory allowances and all. There are a lot of items. I mean, if you are very good in your memory, study everything. Or rather, you study these much minimum. And what is the first one? Can you read the first one? Any allowance granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided such employee is not in receipt of daily allowance. What does that mean? I am a bus driver and I am not in receipt of daily allowance, and I am getting a allowance that is called as transport allowance. Income tax will treat it as a transport allowance. Then what is the difference between daily allowance and transport allowance? What's the difference between daily allowance? Daily allowance means for the daily duty. In certain employers, say for example, I am a tourist bus. We call it a stage carriage. Okay, I am a tourist bus or a stage carriage. Every day there will not be a trip. Every day there will not be a trip. During season time there can be. So whenever there is a trip, my employer will give an allowance. That is called as daily allowance. Are you with me? I am working in line bus. That means our ordinary bus. Daily there are trips. For those employees, some employer will give what? Monthly or yearly allowance. And that is called as transport allowance. Are you with me? Are you with me? The purpose is the same, but the treatment is a little bit different in income tax. If you're getting it daily, then you have to spend it daily, or you have to spend it for the respective purpose. Then you can claim exemption. If you are not getting it daily and you are getting it in a lump sum or monthly or weekly or whatever it is, then the treatment is like this. So read this again. Any allowances granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided that such employee is not in receipt of daily allowance. If you are receiving daily allowance, then the treatment is this. You check how much you have expended, that expended amount exempted, the balance will be taxable. If you are not getting it daily, you are getting it monthly, then the treatment is like this. And what is the treatment? 70% of such allowance up to a maximum of 10,000 per month shall be exempted. What does that mean? Let's see an example. Okay, listen. Say I'm not in receipt of any daily allowance and I am in transportation sector and my employer is paying me an allowance, not daily. Okay, the allowance that I get is say 20,000 per month. How much is my allowance? 20,000 per month. Are you with me? Are you with me? How much is my total allowance in a year? If it is 20,000 per month, and how much will be the total allowance? 2,40,000. How much can I claim as exemption under section 10(14) clause number 2? How much is my exemption? 70% of such allowance up to maximum 10,000 per month. So per month 20,000 into 70% is how much? 14,000. Will I get 14,000 per month as an exemption? No, I will not get up to 14. In such case, maximum 10,000 into 12 months, and that will be 1,20,000. The rest 120 will be fully taxable. Is that clear? Normally it is 70% of that allowance received is the exemption, but that 70% figure cannot exceed 10,000. So we can say either 70% or 10,000, whichever is lower. Have you understood? Either 70% or 10,000, whichever is lower. That's what they are saying. It is 70%, but it shall not exceed 10,000. Are you all here? Are you all here? Traveling allowance is only for person with disability. That is different. Okay, that is different. This is different. That is different. Okay, yes. Now, so this thing, they are not mandating that you should have a disability. Okay, don't worry. Moving on. Can you read the next one? Children education allowance. What is the purpose of children education allowance? You tell me. What is the main purpose of children education allowance? It is for the education of your children. Yes or no? Yes or no? Say if the employer is giving a children education allowance to you, when is the lunch break? Okay, I'll give you lunch break, don't worry. Okay, think about the topic right now. Don't think about lunch. So how much is the exemption, friends? 100 per month per child up to a maximum of 2 children. Are you all with me? If you are getting a children education allowance, your exemption is fixed. How much is the exemption? Huge figure it is. rupees 100 per month. That too. 2 children. Enjoy. Okay, they are saying rupees 100 per month per child up to 2 children. That's it. It was introduced in 1961. At that time, 100 rupees was huge amount. But right now, 100 rupees is like per day, the cost will be more than 100. Okay. So what to do? We have to follow this. So the point is, the interesting fact here is whether your children actually studies or not, you will get this exemption. That is what is called fixed exemption. Are you with me? Say your children is simply sitting at home and you are getting this exemption. You can take, you are getting this allowance. You can claim exemption. That's why it is called as fixed exemption. And how much is the exemption? 100 per month per child up to maximum 2 children. Not yet over. One more thing is there. Any allowance granted to the employee to meet the hostel expenditure on this child. Then, how much is the exemption? 3 times that of education allowance. Lavish. How much is the exemption? 300 per month per child up to a maximum of 2 children. Again, it's an old thing, but it's still relevant. Okay. So what they are saying is you can claim an exemption of up to 300 per month per child up to a maximum of 2 children. Are you all with me? Are you all with me? Children education allowance 100 per child per month up to maximum 2 children. What if you have 5 children? Out of 5, only 2 you can claim exemption. The rest 3 will be fully taxable. That only 2, maximum 100 per child. Are you with me? Are you with me? How about hostel education allowance or hostel expenditure? 300 per child, maximum 2 children per month. 300 per month per child, maximum 2 children. Yes. Now there is an interesting thing. I've told you that whether your children actually studies or not, you will get this exemption. Yes or no? But there is one thing. If your children actually studying outside India, you are not eligible for this exemption. Even if they don't study, we have no problem. But if they study overseas, you are not eligible for exemption. Are you all? But most of the, in India, most of the children will be definitely studying. So they are not restricting that. But what they are saying is, if your children is actually studying overseas, you are not eligible for this exemption. That allowance is fully taxable. Are you with me? You will lose that 100 per child per month up to maximum 2 children. Very loss. And you will also lose 300 per child per month, maximum 2 children also you will lose. Provided, read this note, no exemption is available in respect of education and hostel allowance received for any education of children outside India. Is that point clear? Is that point clear? Yes, sir. Yeah. So, give me a second. And you have to study one more thing, okay? You have to study one more thing here. Actually, I forgot to add that here, okay? So I'll write it here. Please take a note of it, okay? I forgot to add that here. One more fixed exemption you have to study. So I'll write it here. Please take a note of that in your notebook for the time being, okay? One more item. I accidentally missed it. So I'll write it here. That is, any transport allowance granted to under this category, under fixed exemption category, that is item number 1, 2, 3, 4, the fourth item, okay? Any transport allowance granted to an employee, who is blind, deaf, or dumb, who's blind, deaf, or dumb, or orthopedically or orthopedically handicapped. Handicapped with disability of lower part of the body. Of lower part of the body. Of lower part of the body to meet his expenditure, to meet his expenditure for commuting between his residence and place of duty. His residence and place of duty. Let's understand how much is the fixed exemption. They are saying 3,200 per month. The exemption is 3,200 per month. Actually, that space was for this traveling allowance, but I think it's got deleted, okay. When I prepared this, accidentally it got deleted. So 4 items were there under fixed exemption. Which all are the 4 items? Number 1, allowance given to an employee who is working in a transport system to meet his personal expenditure during his duty performed in the course of running such transport system from one place to another, provided such employee is not in receipt of daily allowance. How much is the maximum exemption? 70% of that allowance subjected to maximum 10,000 per month. Now, what is number 2? Children education allowance. And how much is the exemption? 100 rupees per month per child up to maximum 2 children. What is number 3? Hostel expenditure on his child. And how much is the exemption? 300 per month per child up to maximum 2 children. And the last one is available, exemption is available only if the employee is blind, deaf, dumb. Blind, deaf, dumb. Are you with me? Or one more possibility. What is that? Orthopedically handicapped with disability of lower part of body. What does that mean? He has some disability with his legs. He is getting a allowance to meet his expenditure for commuting between his residence and place of duty. Then how much is the exemption? 3,200 per month is the exemption. Are you with me? Is that point clear? So 4 fixed exemptions are there for the allowances. Are you all here? So these are the items that they normally test in exam. What is this? B set 741, Kalai Selvan 400. Is that some kind of an agent code or something? You are planning for some attack or something on me? So they are using some kind of code and all in the chat, okay? Now, listen. So the point is exemptions under allowances. That's what we were discussing. Category 1, fully exempted. Category 2, partly exempted. Category 3, fully taxable. Can you give me an example for fully taxable? Food allowance, then DNS allowance, then washing allowance, then dress allowance. Uniform allowance, exempted. They simply said dress allowance, it is taxable. Don't ask me, sir, uniform is also a dress. It's not like that. Uniform allowance is only for the purpose of uniform. Dress means any dress I can buy, including uniform. Don't worry. Dress allowance fully taxable. Uniform allowance only is exempted. Are you with me? Food allowance, drinks allowance, washing allowance. Then, come again? Entertainment allowance. interim allowance, festive allowance, then puja allowance, every type of allowance, definitely taxable. Apart from these two categories, whatever allowance that you're seeing will be fully taxable. Are you with me? Are you with me? First component done. That's all about the first component. Let me extend a little bit more. Okay, I'm not planning to leave you for lunch right now. Let me extend a little bit more. Why? Because afternoon there is a danger. What's the danger? If I stick on with the theory, no, you don't sleep. You will die. Sleep, very simple. Okay, you will definitely die because see, we have questions in salary. Okay, we have questions from salary, but the problem is, only after completing the salary topic, I'll be able to make you solve some questions because that question contains everything in related to salary. Past exam questions is normally like that. That's why I've given you some simple question in HRA. Let's not waste time by doing some basic questions, okay? Basic questions, we can make it color, but doesn't serve the purpose. Revision class, 4 days, past exam question. But only after completing the salary. So that's why I will definitely make it very dry, don't worry. Trust me on this. It will be very dry in the afternoon. But after the theory, what will happen? Maja varamata. Some mattandam varu. Okay. Maja ellam varamata. Some mattandam varu. Don't expect a lot of, entertaining session, okay? If it was regular, I would have definitely given you some entertainment also in between. But revision, no entertainment, okay? Yes, entertainment will come when the result come. Okay, when the result come, definitely you will get the benefit. Okay, no pain? No pain? Very good. So moving on to the next item, friends. What is the heading? Treatment of pension. Before that, let me address the online doubts. I forgot in between. Okay, yeah, they were discussing some kind of agents or something. Oh, they are asking about my material, okay. We can choose only first 2 children or any children you can choose. The most beneficial manner, okay. When is the lunch break? Don't worry, I'll give you, okay. We can choose only the first children, okay, no, any children, no problem. Allowance for per child is 1,000 per annum, but exemption is 1,200 per annum. No, it's an exemption. You cannot claim loss. Exemption means what? We will not tax you. If it is an expenditure, then okay. Have you understood? Say the allowance in total is 1,000 and the exemption is 1,200. Don't take 200 as a loss. Exemption always subjected to actuals. Otherwise, it will be deduction or expenditure. Then 3,200 only. Okay, that is something else. Oh, you are talking about on my website. Okay, free of cost. Day. Entertainment allowance, sleep mode started. Yarda, Aishu, don't sleep, okay? And home sipping tea, we feel sleepy. Don't sip tea. Problem solved, right? Transport allowance other than deaf or blind. Transport allowance other than deaf or blind. Yes, taxable. No gain. Already experienced painy result, sir. Don't worry. Okay, don't worry. Result allam pain illa. Effort than painful. Result na simply check and cry, okay? Adli enna pain. Understood, sir. Thank you. Lunch break, entertainment allowance, other than exempted allowance, taxable. For twin baby, twin na 2, right? Avloda. Adoda nirthadunga. Okay. Yes. Twin means 2 children. Done. Don't think about the third one. Problem solved. Okay. Yes. So we will complete the pension right now, friends. So the heading is treatment of pension. What is pension? Quickly tell me, what is pension? After retirement, you should have some nyam. Yes or no? You will not get what? Salary. So what the employer, he will give what? A monthly sum to the employees. You can make use of that monthly sum for your living after retirement. Are you with me? That monthly sum is said to be what? Pension. Are you all listening? Pension means any emoluments that you get from your employee after retirement can be called as what? Pension. Now listen, friends. Normally the pension is monthly. You will get the monthly pension. Are you all listening? Are you all listening? Say for example, I am an employee of this particular company and I am getting monthly pension of rupees 5,000. I am getting monthly pension of how much? Rupees 5,000. I required some urgent money. I required some lump sum money urgently. I have an option. It is just called as commutation of pension. Just like discounting bill from the bank, I can go to my employer and I can say that I don't want monthly pension. I am planning to planning to take a lump sum amount by commuting the pension. Are you all listening? I am planning to take a lump sum amount by commuting pension rather than accepting monthly pension. And this process is called as what? Commutation of pension. So you can divide pensions into two. When from the perspective of income tax law, you can divide pensions into two. Number one, commuted pension. Number two, first of all, let's understand uncommuted pension. What is uncommuted pension? Monthly pension that you receive shall be fully taxable under this head. Whatever monthly pension that you get shall be fully taxable. You will not get any exemption. Under which head it shall be taxable? Salary, because it is from on account of your employer-employee relationship. So you have to definitely taxable under the head salary. So uncommuted pensions are fully taxable. And how about commuted pension? Can you read this? Commuted pension means converting their future right to receive pension into a lump sum amount receivable immediately. Future you will get it monthly. You can ask for a commuted pension and the actuary does the valuation. There's a person called actuary. Okay, that actuary does the valuation and he will give you a lump sum amount. Are you with me? Don't ask me how the actuary does the valuation. That you have to go and ask to the actuary. Just like relying the report of an expert. Hope you have studied this in your audit, relying on the expert's report. So actuary is considered as an expert for us. So we are relying on the valuation of actuary always. So the point here is, if you are commuting the pension, then department say you are eligible for an exemption. Are you with me? Are you with me? Yes, if you are commuting your pension, then normally you are eligible for exemption. And that's what we are about to discuss. So, yes. So, moving on friends, moving on with the next point. Can you read the heading? Type of pension, and we were discussing commuted pension. Commuted pensions can be splitted into two. Okay, commuted pensions can be splitted into two. For other employees and employees of central government, local authorities, statutory corporation, members of defense services. Are you all here? Are you all here? Yes, sir. Akka, don't worry. It is under 10 subsection 5. During lunch break, go check the act. Okay, it is there. Now listen. So, listen friends. The point here we are about to discuss is, if you are an employee of central government, local authority, statutory corporation or member of defense services, you can claim full exemption for that entire commuted pension. Are you with me? Yes, are you with me? Yes, you can claim full exemption for the commuted pension if you are a CG, local authority, statutory corporation or a member of a defense services. One is missing over there. State government employees, they are not mentioning. So, state government employee here will be considered as an other employee only. Are you with me? Are you with me? Yes, now, so for central government employee, local authorities, statutory corporations and members of defense services, whatever amount that they get due to commutation of pension shall be fully exempted. And what if you are an other employee? What is other employee? A private company employee or a state government employee or a normal public company employee other than government company, then what will happen to your commuted pension? You have to divide that into two. You have to check whether the employee is in receipt of gratuity. What is gratuity? Listen, there are different types of retirement benefits. Okay, pension, gratuity, Provident Fund. These are the main three retirement benefits. Are you all here? Are you all here? Pension means what? You and your employer will contribute something to the pension fund. Either it will be a national pension scheme or it is a separate recognized scheme. After your retirement, from that fund, you will get money for your daily needs. This is said to be what? Pension. Number two, gratuity. Gratuity means you are working for your employer for a longer period. After that, you are retiring. So, You have worked for a longer year and your good age was, you are actually in your good age, you are working with your employer. So to show the gratitude, the employer give you some money for free at the time of retirement. And that amount for free is said to be what? Gratuity, gratuitous. Are you with me? Just like a Thanksgiving. You don't have to contribute anything. You being employee don't have to contribute anything. The employer will give it for free. That is gratuitous and it is called as gratuity. Third one, Provident Fund. Listen, imagine a situation after during your salary period you are enjoying all the salary. You haven't saved anything. After 60 plus the pension will be very less. You have expended the gratuity as well. Now you don't have money. If you don't have money, you will be a headache for whom? If you don't have money, you will be a headache for whom? Children are. No, children will say tata bye bye. And they will migrate to Europe and all. You tell me, if you are a headache, sorry, you don't have money, then you will be a headache for the government. Yes, of course. You will ask for the governmental benefits and all. Are you with me? You will come to the government hospital and you will take all the government routes where there is a concession or where there is free. So government don't want that to happen. So they came up with a thing called Provident Fund. You save money. You save money for whom? For yourself. After retirement, you will get another amount for your savings that you made in your employment period. That is called as what? Provident Fund. Both you and your employer have to deposit something to that particular Provident Fund. And that Provident Fund will grow with interest, with compounding effect. And your retirement time, you will get a lump sum amount so that you will be financially, comparatively stable. You can spend that also. You can expend that also and you can say that I am poor. Okay, then government cannot do anything. So what they are saying is 3 types of retirement benefit. Number 1, pension. That is a statutory amount. But to the pension fund, both the employee as well as the employer have to contribute. Second one. Gratuity. That is free. That is from the pocket of employer. Third one. Provident Fund, savings. You save, your employer also will provide something from his pocket. Towards the maturity, you will get a lump sum amount. Are you all with me? Out of these 3, we are talking about what? Pension right now. So pension, commutation for other employees, for claiming exemption, the first thing that you have to check is whether you are in receipt of what? Gratuity. If you are in receipt of gratuity, your exemption will be like this. If you are not in receipt of gratuity, your exemption will be different. Are you with me? So the criteria depends upon whether you are in receipt of gratuity. Now let's see how to claim the exemption if you are in receipt of gratuity. Listen. Exemption shall be, read this, 1/3 of amount of pension which he would have received had he commuted the whole of the pension. That simply means, I'll give you an example to understand this. Say for example, I have commuted 60% of my pension liability. Are you with me? I have commuted how much? 60% of my pension. You can partially commute. It's not necessary that you have to commute everything together. You can partially commute. I have commuted 60% of my pension and I received 6 lakh rupees. Received how much? Received 6 lakh rupees. Now say I am an other category employee who is in receipt of gratuity. How do you claim exemption? Read the table. How do you claim exemption? 1/3 of amount of pension which he would have received had he commuted whole of the pension. What department say? It is not 1/3 of the received amount. Rather what they are saying is, if you would have commuted your entire pension, what would have been the amount received? That amounts 1/3. How do you calculate that? You received 60%. You commuted 60% and received 6 lakh. If you would have commuted 100%, you would have received 10 lakh. Yes or no? So 6 lakhs by 60% into 1/3 will be your exemption. And how much is that 10 lakh into 1/3? 3,33,333 will be your exemption. And from 6 lakh, you can claim that 3.33 lakh as exemption and the remaining will be the taxable amount. How much is the remaining? 2 lakh 66,667. 667 will be your taxable amount. Are you all with me? In income tax, don't take decimals, okay? Always round it off. Don't consider any decimals when you compute the income. Always round it off. Are you all with me? Are you all with me? So the exemption is 1/3 of the amount of pension which he would have received had he commuted the whole pension. If you are in receipt of gratuity. You tell me, what if you are not receipt of gratuity? How do you claim the exemption? If the employee does not receive any gratuity, then you tell me, instead of 1/3, it is 1/2. 1/2 of the amount of pension that he would have received had he commuted the whole of the pension. Are you with me? For a better understanding, let's solve a quick question. Okay, it's a small question. Let's solve it quickly. So I want all of you to take question number 4. If you don't read it properly, you will go wrong. Okay, don't take this. It is not there in your a question sheet. Just go through. It's a study material question. It's your institute study material question. Just quickly solve this so that you will get a better understanding on pension and its commutation. Mr. Sagar retired on 1/10/23, receiving 5,000 per month as pension. On 1/2/2024, he commuted 60%. Okay, what happened? Yeah, he commuted how much? 60% of his pension and received 3 lakh. So the first thing to notice, he was receiving a monthly pension of how much? 5,000. He commuted only 60%. Thereafter also he will get monthly pension of how much? 40%. Are you with me? If you are not commuting completely, you will get monthly pension for the remaining percentage. It is normally like that. And received 3 lakh as commuted pension, you are required to compute his taxable pension, assuming he is a government employee, he is a private sector employee, receiving gratuity of 5 lakh at the time of retirement. He is a private sector employee who is not in receipt of gratuity at the time of retirement. So let's understand. We'll take the case of government employee, which is a relevant PY. It is not specifically given in the question, but you tell me which is the PY. Which will be the PY? 23/24. So 23/24, his retirement date is on 1st October 2023. Yes or no? Yes or no? Yes, so from 1st October, that means in October, November, December, January, he will get 5,000. That is 1, 2, 3, 4 into 4 months. And how much will be the total? 20,000. Then February and March, he will get how much? 5,000 into 40% into 2 months. And how much is that? How much is that? 4,000. What is this 5,000 into 4? See, that is uncommuted pension because he commuted his pension only on when? Only on 1st February. From October onwards you are getting, he retired on 1st October. So he might got 5,000 on October, November, December, January. Till January he got 5,000 rupees. And on 1st February he didn't commute 100%. He commuted only 60%. So he will get 5,000 into 40% on February and March. So that entire 20 plus 4, that is 24,000 is what type of pension? Uncommuted pension. Are you with me? And full uncommuted pension is taxable. You cannot claim exemption whether you are a government employee or some other employee. Are you all here? Are you all here? Yes, whether you are a government employee or a non-government employee, full pension which is uncommuted shall be fully taxable. So here what we can say, government employee, we are assuming that is CG, okay? We are assuming that it is central government employee, and we can write 24,000 is fully taxable. Why? Because it is uncommuted pension. How about the remaining amount? Commuted pension, that is fully exempted. If you are receiving commuted pension of how much you got? 3 lakh. That will be fully exempted in the hands of government employee. Is that clear? Is that clear? How many of you did it right? How many of you get the right answers? All right, very good. Now moving on with the second one. He's a private sector employee receiving gratuity of 5 lakh at the time of retirement. So he receives gratuity, and the amount of gratuity is irrelevant for us because we are only computing the pension. So what we need to do is a private sector employee who's in receipt of gratuity. How do you compute? How do you compute? Uncommuted pension 24,000 shall be fully taxable. Yes or no? Yes or no? And how much is the commuted pension? Commuted pension, that is 60% commutation, that is 3 lakh rupees. How do you claim exemption? Exemption shall be 1/3 of pension had he commuted his full pension. That means 3 lakh by 60% into 1/3. Can you help me with the math? 1 lakh 53,366. 1,66,667. How much will be the remaining taxable amount? 1,33,333. So adding these two, how much will be your taxable pension? 57,333 will be your taxable pension. Is that clear? Is that clear? Yes, this is uncommuted pensions treatment in the hands of a private sector employee who is in receipt of gratuity. What if you are not in receipt of gratuity? What if you are not in receipt of gratuity? Instead of 1/3, it will be 1/2. I think is a private sector employee and not in receipt of gratuity at the time of retirement, then the answer is from 3 lakh, we'll write that separately, okay? We'll write that separately. So uncommuted pension, 24,000 will be there. And for commuted pension, how do you claim exemption? 3 lakh is the total amount and 1/2 into 3 lakh by 60%. That will be how much? 2,50,000, and you claim the exemption and the remaining 50,000 shall be taxable. So the total amount will be 74,000. Are you all with me? And the first case 24, second case 157, 333, and the third case 74K. Is that clear? So friends, we were discussing about gratuity, right? So we haven't discussed gratuity, we completed our pension, right? Yes. So tell me friends, what do you mean by gratuity? Now we will discuss gratuity. What do you mean by gratuity? Gratuity means it is a gratuitous amount paid by the employer to the employee. It is actually a gratuitous amount paid by the employer to the employee at the time of retirement. Both the employee, say for example, the employee is not required to pay any amount to the employer. Towards the end, when you retire, the employer will give you a gratuity. Normally, it is a lump sum amount. Are you all with me? Are you all with me? Now, yes, okay. If I bring past foreign untaxed income to India in a PY, will it be taxable in India in that year? No. Past foreign untaxed means it is not the income of the relevant PY. If you want to tax something, it should be the income of the relevant PY. Then only you have to tax it, okay? Past foreign untaxed income means it is an income of some past year. That is untaxed in the foreign country. That you are bringing that amount in this year in India, you don't have to pay any taxes. Say for example, last year, I had an income from Dubai. In Dubai, it is not taxed. So it's a past untaxed income in foreign country. In this year, I bought that income to Indian bank account. For that, I don't need to pay any taxes. I hope it is clear. Okay. Yes. So moving on, friends. Where were we? Yeah. So we were gratuity. Yes. So gratuity means it's a lump sum amount paid by the employer to the employee gratuitously. And friends, listen, we can, from the perspective of, all the charts are from the perspective of income tax. Are you all with me? Are you all with me? Yes, from the perspective of income tax, you can split that gratuity into two. Number one, gratuity received at the time of retirement or death. either at the time of your retirement or at the time of your death, you will receive a gratuity. For that, you can claim an exemption. For that, you can claim an exemption. And the second one is gratuity during the period of service. What is that? During the period of service itself, you can give a request for withdrawing the gratuity. Okay, during the period of service itself, you can take a request for withdrawing the gratuity, and that gratuity shall be fully taxable under the head salary. That simply means if you withdraw any gratuity during the period of service, that gratuity shall be fully taxable. You are not supposed to claim any exemption. Are you all here? Very good. And gratuity received at the time of retirement or death, you can claim an exemption, and that's what we are about to discuss right now. So have they updated anything related to the handout? Nothing. So in the next break time, please, I had a word with them. They told me that they'll arrange it by today, but GST instead of direct tax. My God. You got GST? Aha, super. Maybe they might come again. Some other classes material they today distributed. Okay. Anyways, you got a material, right? They only told me that they will distribute the material today. They didn't say that they will distribute DT material, but they have kept their promise, okay? So I think I have to remind them again. So I thought they have distributed that material. It is IDT, yeah? Don't worry, you will get DT material. Okay, so don't worry. This handout is actually there. Okay, don't worry. Next break time, I'll update. Okay, yeah. Where were we? Gratuity received at the time of retirement or death. You can claim an exemption, and that's what we are about to discuss. Can you read the first box, friends? Can you read the first box? Employees of central government, members of civil services, local authority employees or defense services. You are a member of either defense service, central government, civil services, etc. Then you can claim an exemption. And how much is the exemption? Full exemption. That exemption, if you want to enjoy, then you have to withdraw the gratuity at the time of retirement, or you receive the gratuity at the time of death. It's not you, your legal hire, because you are already dead. Okay, you cannot come back from the dead and collect the gratuity and go again. Okay, that's not possible. If your, legal representatives receive some gratuity, they also can enjoy an exemption. So I'll repeat that again. Employees of central government, members of civil services, local authority employees or defense services. You can enjoy what? Full exemption. So please excuse my dear online friends, because if I sit, I'll sleep, okay? So I just want to walk around the classes, so please excuse me. I'll come in between, okay? Yes. All right. So the point is, you can enjoy an exemption for the gratuity receipt if you are in that particular category. Now, if you are other employee category, you can divide that into two. What are the two divisions? Number one, covered by. Read. Covered by. Afternoon session, you must read. Whether you study it or not, you must read. Otherwise, you will sleep, okay? So, tell me, it is covered by Payment of Gratuity Act. What do you mean by covered by Payment of Gratuity Act? Very simple. Say for example, if you are running a factory or a company and your number of employees are 10 or 20 or more, depends upon the act, then that employer must give gratuity according to the Payment of Gratuities Act 1972. So, if you are paying gratuity according to the act, then we can say that you are covered by Payment of Gratuities Act. Say for example, KS Academy, assume that they only have 2 or 3 employees. They have only 2 or 3 employees. The KS Academy voluntarily can pay what? Gratuity to their employees. Say, are you all with me? Say, I have 3 employees in my team and I'm voluntarily giving them what? Gratuity. That is also possible. If I'm voluntarily giving them gratuity, then we can say not covered by the Payment of Gratuity Act, but you are getting gratuity. You are not covered under any gratuity act and all, but you are getting gratuity. So, if you are other category, you have to split that into two. Number one, covered by Payment of Gratuities Act. That means you are receiving gratuity on account of the act. Number two, You are not covered under any payment of gratuity yet, but you are receiving it. Okay, your employer is so generous, no problem. So in that case also, let's understand how to compute the exemption. So in the first category, how much is the exemption? Exemption shall be least of the following. If you are covered under Payment of Gratuities Act, you can enjoy an exemption, and the exemption shall be how much, friends? Least of the following. And tell me which all are the limit. Number one, rupees 20 lakhs, statutory limit. They are saying about a statutory limit. And how much is that statutory limit? Rupees 20 lakh. Number two, 15 by actual gratuity received is, what do you say? Condition number two. What is number two? Actual gratuity received. How much ever is the gratuity that you received actually is item number two. And what is item number three? 15 by 26 into last drawn salary into completed year of service or part thereof in excess of 6 months. Can you read that? 15 by, don't read 15 bar. Okay, it is 15 by 26 into last. It is T, okay. Last drawn salary into completed year of service or part thereof in excess of 6 months. What is this 15 by 26? Consider 26 working days in a month. Half the salary. Instead of that, if you are covered under Payment of Gratuities Act, they are saying 15 by 26. Consider 26 working days in a month. Out of the 26 working days, you take 15 days salary. It's a kind of half. But you have to strictly follow 15 by 26. Are you with me? Now, into last drawn salary. What do you mean by last drawn salary? What do you mean by last drawn salary? Before you retire or before your death, whatever is the last drawn salary, that into 15 by 26 into last drawn salary into completed year of service or part thereof in excess of 6 months. What does that mean? Say, I've retired after 20 years and 8 months of service. I retired after 20 years and 8 months of service. How many years we have to count? 21, because completed year you have to take it like that. Part thereof in excess of 6 have to be counted as 1 full year. So 20 years and 8 months of service, I have to consider it as 21. What if it is 20 years and 4 months of service? 20 only. Part thereof in excess of 6. Something more than 6 have to be counted as 1 full year. Even if it is not, you have to count it as 1 full completed year. Are you with me? So you compute these three and pick the lower out of these three, and that lower will be your exemption for gratuity received if you are other type of employee who are covered under Payment of Gratuities Act 1972. Is that clear? Now friends, there is a thing. Here also they have a definition for salary. Can you read the definition under that I have given? What is the definition? Salary equal to basic salary plus DA. They are not saying whether it forms part of the retirement benefit or not. In the last drawn salary, if there is DA, then you have to consider it. Are you with me? It is not standard salary. Okay, what they are saying is simply take your basic plus DA. If your last drawn salary have a DA element, you consider that. Last drawn salary definitely will have a basic salary. Okay, are you with me? All right, so that's what they are saying. So 3 limits. Limit number 1 is 20 lakh. Number 2, actual gratuity received at the time of retirement or death. And what is number 3? 15 by 26 into last drawn salary into completed year of service or part thereof in excess of 6 months. Day, you can't hear, okay. Part thereof in excess of 6 means what? 20 years and 8 months of service have to be rounded off to 21. 20 year, 8 month have to be rounded off to 21. 20 year, 4 month have to be rounded off to 20 only. Part thereof in excess of 6 means more than 6 months service if you have to consider it as 1 full year. Are you all here? Okay, 1 second, I think there is some problem. Yeah, rounded off to 1 year, yes. So moving on to the, okay, what happened? Yeah. So moving on to the next one, tax Raniya. Padu solli kodutha na yaru? Day. It's not fair, okay? Do you have Telegram channel? No. No Telegram channels. Yeah. So listen. Yaar, you are asking Rani, yeah? This is revision class, okay? All right. So the point is salary equals basic salary plus DNS allowance. No. DA forming part or not, you have to consider. Simply they say DA means whether it forms part of the retirement benefit or not, you have to consider. Excess, 6 months, 1 day, excess. Exact 6 backwards. Part thereof in excess means there should be something more than 6. Yes. So moving on to the next one, friends. You are receiving gratuity, but you are not covered under any payment of Gratuities Act. In that case, you tell me how to compute the exemption. Again, exemption shall be least of the following. Which all are the limits? Number 1, same 20 lakhs. Then, actual gratuity received. Then, third limit is a little bit different. What is the third limit? 1 by 2 into. Rather than saying 15 by 26, they directly said 1 by 2 into. Based on average of last 10 months salary into completed year of service. Listen, what is this based on last 10 months salary, based on average of last 10 months salary? What is that? What do you mean by based on average of last 10 months salary? First of all, let's understand what is the definition for salary over here. Can you read the definition for salary? Salary equal to basic salary plus DNS allowance if forms part of retirement benefit plus commission which is expressed as fixed percentage of turnover based on last 10 months average salary immediately preceding the month of retirement. So we have to understand what exactly is this. Do you remember this much? This much? It is also called as what? Listen, say basic salary DA forms part of retirement benefit plus commission which is expressed as fixed percentage of turnover means what, friends? Standard salary. Are you with me? So this limit simply means, say today I am retiring. Are you all with me? Today I am retiring. Today's date is say imagine it is 31st July. Okay. So on 31st July 2024 I am retiring and I'm receiving gratuity, but I'm not covered under any payments of Gratuities Act. Are you all with me? I've received gratuity, but I'm not covered under any payment of Gratuities Act. How do you compute the third limit in category 2? Rupees 20 lakh is limit number 1. Number 2, the actual gratuity received. Number 3, how do you compute? Half into compute last 10 months average salary. How do you compute last 10 months average salary? You compute last 10 months standard salary, but when you compute that, it should be based on last 10 months average salary immediately preceding the month of retirement. What does that mean? Here they are not simply saying last drawn salary. Rather what they are saying is your retirement month is July. Are you with me? Last 10 months means till June. That means June, May, April, then March, February, January, December of last year, 1, 2, 3, 4, 5, 6, 7, then November, October. Add, then divided by 10. This is how you find out the average. But don't include July salary. Are you with me? Don't include July 2024's salary. Are you all with me? Read this again. Based on last 10 months average salary immediately preceding the month of retirement. Are you all here? This is important because if I'm right, I think in November 23 or I'm not sure whether it is November 23 or May 23, they've asked the question. In that question, say for example, it was like the different month, different salary it was. Different month, different salary. So you have to compute it in a precise manner, otherwise your answer will go wrong. And one more thing is there. Say before the retirement, if there is no change in the salary, then 10 months average salary means last drawn standard salary. Are you with me? Say if there is no change in my salary, there is no hike in my salary for the past 10 months, then last drawn salary will be the last 10 months average salary. Are you all with me? So read that again. This is important. Read that again. What is the third limit? 1 by 2 into based on average of last 10 months standard salary, but you're taking that average, exclude the month of retirement. That's it. Exclude the month of retirement. Before that, you take the 10 months standard salary and average it into complete year of service. Here something again is missing. What is that? They are not saying part thereof in excess of 6. So what to do? They are not saying part thereof in excess of 6. When they simply say completed year, that means completed year. Are you all with me? No round off applicable. When they simply say completed year, don't round it off. Completed year means completed year. Say 20 years and 8 months service, then 20 years. Ignore fraction. Are you all here? We can say ignore fraction. Only completed year you have to consider. That's what the department says. So salary, hope you remember the definition. If you are covered under Payment of Gratuities Act, then basic plus DA, whether forms part of the retirement benefit or not. And if you are not covered under Payment of Gratuities Act, it is standard salary but excluding the month of retirement. Are you here? Is that clear? Online friends respond. Again, you are sticking on to 6 months round off. Okay. I hope you got it. Okay. Super. So moving on, friends, it is how you have to compute the treatment. You have to compute the gratuity. So again, listen. In examination, they will give you gratuity. Always check whether it is at the time of retirement or death. If it is not at the time of retirement, not at the time of death, then it will be during the period of service. If it is during the period of service, fully taxable irrespective of the category of employee you are. Are you with me? Moving on to the next item. What is the next component in salary? Can you read the heading? Treatment of leave salary or leave encashment under section 1010AA. What is leave salary or leave encashment? What do you mean by that? Instead of availing leave, I encash that particular thing into money. Say for example, in my company is giving 30 days leave every year. My company is giving what? 30 days leave every year. Instead of taking that 30 days leave, I completely worked. I haven't taken any leave. That also means I've worked for an additional 30 days. Yes or no? My company is giving 30 days leave. Okay, kindly show gratuity patch. This is the gratuity page, okay? My company is giving 30 days leave for every employee. Me, instead of taking that particular leave, I work for the complete period I've worked. I haven't taken any leaves at all. So what I have to do is, I can ask for an extra 30-day salary. And that salary is said to be what? Leave encashment. Are you all with me? Are you all with me? That salary is said to be what, friends? Leave encashment. Now let's understand how to treat the leave encashment. So let's read what exactly is that. Leave encashment means unavailed leave credit encashed by the employer, not employer, it is employee. Employer need not encash any leave, okay? So employee. So listen, friends. Leave encashment also can be divided into two. In certain employees will accumulate all the leave. And encash it at the time of retirement. Are you with me? Are you with me? Yes, so certain employees will accumulate everything and they will encash it at the time of retirement. In certain company it is not allowed. Every year either you have to take a leave or you have to encash it. In certain company it is like that. So if you are encashing your leave in the period of service, it will be fully taxable. If you are encashing your leave during the period of service, that means every year you are encashing the leave, or you are encashing the leave during every year, maybe due to the company policy or voluntarily, whatever it is. Doesn't matter. The entire leave salary that you get will be fully taxable. Is that clear? Is that clear? Now, what is then the exemption? If you encash the leave salary at either at the time of retirement or superannuation, then you will get an exemption, and that's what we are about to discuss. So if you want to claim exemption, you need to encash the leave salary only at the time of... Very good. Now the sign is coming, okay? Whether you had a heavy lunch or not, the results are coming, about to come. Now, tell me, if you want to claim an exemption in regarding leave encashment, then you need to encash it at the time of dash. Retirement. Are you with me? Either at the time of retirement or resignation, superannuation. You're retiring early or resigning early. So, or otherwise, whatever it is. Now let's understand how to claim that particular exemption. That can be divided into two by a government employee. When they simply say government employee, that includes both the center and state. When they say central government employee, that means it is only central government employee. When they say state government employee, that only means state government employee. When they simply say government employee, it includes both the center as well as state. Are you with me? Are you with me? The point is very simple. If you are a government employee and you're receiving leave encashment, fully exempted. Don't pay any tax. Are you with me? But that leave encashment have to happen at the time of retirement. That's it. If it is received during the period of service, whether you are government or not, it will be fully taxable. Now, what if you are other category employee? By other employee, that means you are a private sector employee, then what to do? Very simple. The exemption shall be least of the following. The exemption shall be what, friends? Least of the following. And we have how many limits? 1, 2, 3, 4. We have 4 limits under that. And let's understand all the 4 limits. Can you read the first limit? It's a statutory limit of rupees 25 lakhs. They are saying rupees 25 lakhs as limit number 1. What is limit number 2? Actual leave salary encashed. At the time of retirement, how much ever is the actual amount that you received on account of leave encashment, that entire amount you have to take as limit number 2. Can you read limit number 3? That's a little bit tricky. Can you read limit number 3? 10 months salary on the basis of average salary of last 10 months preceding retirement. What do you mean by that? 10 months salary. Okay, that is fine. And what is in the bracket? On the basis of average salary of last 10 months preceding the retirement. What is that? Very simple. You compute last 10 months average salary. Then into 10. That also means what? Last 10 months average. Are you with me? At certain time department is like this. Certain things you can say like this, but they will never say. They will go somewhere else and they will come back. Are you with me? So very simple it is. Last 10 months salary. You take the total of last 10 months salary. Here salary have a definition. And what is the definition? You tell me. What is the definition for the salary? Basic salary plus DA forms part of the retirement benefit plus commission which is expressed as a fixed percentage of turnover of the employer. Are you with me? What is that? Okay, whatever it is. So I hope it is clear. Okay. So same as gratuity. Okay, whatever it is. So coming back to the point, friends, what is our salary here? Standard salary. So last 10 months standard salary is limit number 3. Is that clear? Is that clear? First limit is 25 lakhs. Second limit is actual amount received. Third limit is last 10 months standard salary. Here last 10 months means including the year of retirement. Simply last 10 months means you take simply last 10 months. But in gratuity, not covered under Payment of Gratuities Act, excluding the year of retirement. That's how the rule is. Are you here? Are you here? Now, third limit is the trickiest out of this. Can you read the third limit? Cash equivalent of unavailed leave based on last 10 months average salary to his credit at the time of retirement. Can you read this much again? Forget about the note. Can you read this much? Cash equivalent of unavailed leave based on last 10 months average salary to his credit at the time of retirement. What does that mean? When you retire, You first go check how many number of days of leave you have. Are you all with me? When you retire, you go and check how many number of days of leave you have. That is the leave credit. You encash, you convert that into money terms. You convert that into what? Money terms. To convert that into money terms, how do you convert that? You take the number of days, divided by 30, you will get monthly, how many months of credit you have. Then you multiply it with that with the what? Last 10 months average standard salary. Are you all here? Very simple. Read this again. Cash equivalent of unavailed leave based on last 10 months average salary to his credit at the time of retirement. So simply you go check how many number of days of leave you have at the time of retirement. You take that number of days, convert it into months. How do you convert it into months? Take 30 as standard. So days divided by 30 will give you that number of months left. That month have to be multiplied by the last 10 months average standard salary. You will get a figure. That figure is limit number 4. Have you understood? Otherwise, don't worry. After this, I'll give you again a basic problem to give you a better clarity over that point. Okay? Don't worry, don't worry. I was actually not planning for basic problems. But when I see your face, certain people are, it is like that. Okay? Don't worry. So I'll give you one basic problem here as well. So don't worry. So, listen. And there is a note under that. That note is even more confusing. What is that note? Earned leave entitlement cannot exceed 30 days for every year of actual service. Can you read this box again? Read that entire box again. So listen friends, we will create an example for a better clarity over this provision. So listen, listen. Say, one second, it's not moving. So listen. We will create an example to make you understand what exactly is that particular third limit. So listen, say there is a company called KSA Limited, okay? The peru venama? Vera peru vekkanama? Okay. Say ABC Limited there. I don't know why guys are like this, okay? So, say there is a company called what? ABC Limited. Problem solved, right? So, this company's policy is every year, please listen, I have no plans to repeat examples, okay? So, please listen. This company, JK Limited, don't worry, it's only the first data, 2, 3, 4 and all full JK Limited, okay? So, listen, ABC Limited is a company and according to the company policy, every year the company is providing 40 days leave to all the employees. Are you with me? So every year a company is giving how many leaves? 40 days to every employee. So there is a person called Mr. A. Mr. A is one of the employee of that particular company and he have around 20 years of service. He have around how many years? How many years? 20 years of service in that particular company. 20 years of service, he is retiring. He is retiring from that particular company. And during that entire 20 years, he took around 100 days of leave. He took around 100 days of leave. So this only 100 days, his leave was only for 100 days. Now, friends, listen. The employer will pay him leave encashment based on the actual leave credit. Yes or no? Yes or no? The employer will pay him the leave salary based on his actual leave credit. And how much is the actual leave credit? How much is the actual leave credit? What is leave credit? The balance leave he have. So 40 days per year into how many years of service he have? 20 years. That will make it 800 days. He took only 100 days of leave and the balance will be 700 days. His actual leave salary will be for 700 days. Are you with me? He will get actual leave salary for how many days? 700 days. But, there is a note in Income Tax Act. And what is that note? What that note says is, can you read the note? Earned leave, this one. Earned leave entitlement cannot exceed 30 days for every year of actual service. Whatever the company policy is. Every year leave entitlement should not be more than, 1 year leave entitlement should not be more than 30 days. Now, when you compute the fourth limit, what will happen to the leave credit? Even though you have how many years, how many days? 700 days balance. What you need to do is, your company policy is 40 days per year. That have to be recomputed to 30 days. Into how many years of service? 20 years of service. So the total eligible leave should only be 600 days. From that you need to deduct 100 days of actual leave. And for the computation, take only 500 days. Are you with me? This have to be converted into months. How do you convert it into months? 500 days divided by 30 days per month. And how many months will be there? 60.67 months. 16, okay. 16.67 months into last 10 months average standard salary. Whatever the figure comes in, that will be limit number 4. Are you with me? Are you with me? Yes, sir. We will read that box again. Read this. Cash equivalent of unavailed leave based on last 10 months average salary to his credit at the time of retirement. No problem. But there is a problem. What is the problem? Earned leave entitlement cannot exceed 30 days for every year of actual service. If the company policy is 20 days per year, then you have to compute according to that only. If the company policy is 25 days per year, no problem. If the company policy is 35, there is a problem. Maximum it shouldn't be more than 30. Maximum it should be 30. Is that clear? Is that clear? Yes, sir. And here the salary means what salary? Standard salary. So let's solve a small basic question to make it more clear. So this question is actually in 2 pages, okay? So just go through this question, friends. This question number 5. No, not question number 5. That is gratuity. Question number 7. Just go through this question number 7 and give me the answer. It's your institute study material question. It's a fantastic question, but listen. Mr. Gupta retired on 1/12/2023 after 20 years and 10 months of service. So, receiving leave salary of 5 lakh. Other details of his salary income are given. Basic DA commission, bonus, leave availed during the service, entitled to 30 days leave credit every year. You are required to compute the taxable leave salary, assuming he is a government employee. Very simple. Fully exempted. And what is the second one? He is a non-government employee. If he is a non-government employee, you have to compute the limits. Do you remember the limits? What is limit number 1? Non-governmental employee. Limit number 1 is rupees 25 lakhs. What is limit number 2? Actual leave encashment received. How much is the actual leave encashment received? They have received an amount of rupees 5 lakh. So 5 lakh is the actual leave encashment received. And what is limit number 3? Last 10 months salary, that too based on the average of 10 months standard salary. You can simply take last 10 months standard salary. Are you with me? So last 10 months standard salary, for that you need to compute the standard salary. How do you compute standard salary? Basic salary. How much is the basic salary in the question? 5,000 per month, and in that there is a twist. What is the twist? 1,000 was increased with effect from 1st April 2023. Now, my question is this 5,000 inclusive of that 1,000 or exclusive of that 1,000? Inclusive, because the details are Gupta retired on 1/12/23. Sorry. After 20 years and 10 months of service, receiving leave salary of 5 lakh and other details of a salary income are. That means these information is as on 1st December 23 at the time of his retirement. On 1st December 2023, he already have an increment because it is incremented from 1st April 23 onwards. So this 5,000 includes that 1,000 increment. This is after increment that 5,000. So what you need to do is, let's take last 10 months standard salary. So how much is the last 10 months standard salary? Basic salary for, when is the year of retirement? Sorry, month of retirement? October, right? Sorry, December, right? So what is the last 10 months? November, October, September, August, July, June, May, April, February, March and February. March and February. Listen, November it is 5. October it is 5. September 5, 5, 5, 5, 5, 5. This is 4. And the last one is also 4. So can you help me? How much is the total amount? Oh, sorry. Chat box is on. Yeah. So can you help me? How much is the total last 10 months basic salary? It will be 48,000. In exam, you don't have to write like this, okay? Why I am writing like this? Because otherwise you will ask me, sir, how did it become 4,000 into 2, into 3, into 4? That's why I'm elaborately writing everything in order to avoid the repetition only. Don't think that I don't have any other job, okay? It is only for the absolute clarity I'm writing everything. Are you all here? Yes, sir. All right, yes. So, yeah. So moving on to the next one. Basic salary is there. How about the DA, friends? How about DA? DNS allowance total 3,000 per month, but only 60% of it forms part of the retirement benefit. So 3,000 into 60% will be 1,800 into 10 months will be 18,000. Are you with me? So DA for the 10 months will be 18,000. Now, how about the commission? Commission, ignore. Why ignoring it? Because it is not given as a percentage of the employer's turnover. Rather, they are saying simply 500 per month. Every month you will get 500 irrespective of the turnover. That you have to ignore. So 18 plus 48, and how much will be the total? 66,000 is the last 10 months standard salary. Are you with me? Last 10 months standard salary is 66,000. So that is limit number 3. Last 10 months standard salary should be limit number 3, that is 66,000. How do you compute limit number 4? So limit number 4, to compute limit number 4, first of all you need to compute the number of days of leave credit at the time of retirement. So how about the eligibility? He has entitled to 30 days leave every year. Okay, so the company normally gives 30 days leave every year. How many years of service he have? 20 years and 10 months. So the question is, what to do with the 10 months? Ignore. They are not at all saying anything in relation to the fraction. So always ignore. Only once you complete a year, you are eligible for that year's leave credit. Are you with me? Only if you complete a year, you will be eligible for that year's leave credit. Otherwise, you will not get it. Are you with me? So, the point here is, Say 20 years into 30 days per year will be how many days of leave? 600 days. You don't need to limit it because the company's policy is also exactly 30. If the company's policy is different, then you have to recompute it. Are you with me? Now, how many days you have, how many days of leave you have already taken? Leave taken will be 480 days. And can you help me with the math? 120 days. This is the total days of credit you have. Now you need to convert it into months. How do you convert it into months? 120 day divided by 30 and into, we will calculate it together. 120 day divided by 30 into 66,000 divided by 10. Not into 66,000, because 66,000 is the total 10 months standard salary. You need to take the average. How to take average? Total 10 months standard salary divided by 10. So that will be 6,600. And can you help me with the math? 26,400. And you tell me whichever is lower. 26,400, obviously. Then only your answer will go wrong in exam. Because the other two limits are very simple. Okay. So obviously this will be the lower amount and this is the exemption that you can claim. Is that clear? Is that clear? So come back to this last box again. Read this last box. Cash equivalent of unavailed leave, that too based on last 10 months average salary to his credit at the time of his retirement. And while computing that, earned leave entitlement cannot exceed 30 days for every year of actual service. This is what the department says. Is that clear? Okay, so what's your doubt? Sir, is in same sum leave credit is given as 35 days, then what happened? Then you compute it 30 into 20. That's it. Will you take advance tax, TDS, TCS within 4 days? No, da. Actually, I'm planning to cover only the basics and computation of total income. Advance tax, TCS, no, impossible. That itself will take at least 2 days. I require this. Advance tax, TCS, TDS, that itself will take 2 days. No, I'm not planning to cover that. I will be only covering important topics under 5 heads and computation of total income, including BAC and old slab rate difference and surcharge and cess. That's it. Yes. So I hope you guys are with me, and let's move on with the next concept, that is treatment of Provident Fund. And let's understand what is the treatment of Provident Fund right now. So listen. Before understanding Provident Fund, first of all, let me tell you this. This topic is actually very simple. Sir, why we didn't add commission? Because it is fixed commission, that's why. So, before we take Provident Fund, let me tell you one thing very clear. This Provident Fund looks very complicated. Are you all here? But this is actually very simple. But I want you to be extremely attentive, otherwise you will easily go wrong in this topic. Because there are different types of Provident Fund. Each type of Provident have a treatment when you deposit as well as when you withdraw. So you have to study everything, because we don't know in exam whether they are about to give either deposit or withdrawal. Are you all here? Are you all here? Yes, sir. So 4 types of Provident Funds are there. Can you read the first type? SPF. What is SPF? Statutory Provident Fund. Second one, RPF. What is that? Recognized Provident Fund. Third one, URPF, that is Unrecognized Provident Fund. Fourth one, PPF, that is Public Provident Fund. Can you read the note under SPF first? Statutory Provident Fund means governed by Provident Funds Act 1925. It applies to employees of government, railways, semi-government institution, local bodies, universities and all recognized educational institutions. Very simple. If the Provident Fund is as per the Provident Fund Act 1925, then that Provident Fund is said to be what? Statutory Provident Fund because it is as per the 1925 Act. Are you with me? Now, who maintains that Provident Fund under Statutory Provident Fund? Government employees, railway, semi-government employees, etc. Are you all here? Are you all here? Second type of Provident Fund, what is that? Recognized Provident Fund means what? Means a Provident Fund recognized by the Commissioner of Income Tax for the purpose of income tax. Very simple. Say there are certain institutions like LIC where you can maintain your Provident Fund. Say for example, I am a company. I don't want to maintain my own Provident Fund, so I can rely on LIC. I can open a Provident Fund account with LIC or any other recognized institution in India. Or I have one more choice. I can open my own Provident Fund, appoint a trustee and get it recognized with the department. Both are called as recognized Provident Fund. Either my own fund which have a recognition or a fund which is maintained with an already recognized institution. Both are called as what? Recognized Provident Fund. Say a company like Tata and all will always go for their own fund because their size is very big. Are you with me? Are you with me? Yes, so that is called as what? Recognized Provident Fund. What does that mean? A fund which is recognized by the Income Tax Act. That's it. Now, third one, what is that? Unrecognized Provident Fund, URPF. Means what? A fund not recognized by the Commissioner of Income Tax. Today morning, I started a fund. Okay, I am calling it as Provident Fund, but I didn't take any recognition. Then it will be considered as a URPF in the eyes of law. Are you with me? And what is the last one? PPF. What is that? Public Provident Fund. Can you read the definition? Operated under Public Provident Fund Act 1968. A membership of fund is open to every individual. For example, I am a professional. I'm not employed with anyone. I'm actually a practicing as well as a teaching chartered accountant. So I'm not employed with anybody. I thought of opening a Provident Fund. I thought of what? Opening a Provident Fund. I can open it with a scheduled or a nationalized bank, and that Provident Fund will be called as what? Public Provident Fund. I will get certain benefits if I deposit amount to this Public Provident Fund. Are you all with me? Yes. 4 types of Provident Fund have 4 purposes. SPF means statutory. RPF recognized. URPF not recognized. And PPF self-voluntary. I'm not an employee, or employees also can start a parallel Public Provident Fund. They want more savings. They can what? Start a parallel Public Provident Fund, but that is not that attractive for them because already they have a Provident Fund with the employer. Are you with me? Are you with me? Yes, sir. And we have treatment. There are 2 set of treatments in income tax. Number 1, at the time of deposit. Deposit means, I've told you that Provident Fund is like both the employer as well as the employee have to invest in Provident Fund. That fund will grow with interest and you can withdraw a lump sum amount at the time of retirement or death. Is that clear? Now, we have to understand what is the income tax treatment at the time of deposit as well as at the time of withdrawal. So, we are about to discuss both. First at the time of deposit, later at the time of withdrawal. So, different funds have different treatment, and that's what we are about to discuss in this table format. Can you read the heading? At the time of deposit. Let's understand what is the treatment of this Provident Fund at the time of deposit. So, listen friends. So, at the time of deposit simply means statutory update. There is no statutory update. There is only one statutory update, that is 194 BA in TDS. That is TDS on online games and all. That I will tell you at the time of IFOS, okay? That is only one new section. So listen, at the time of deposit, let's understand. So the first one is SPF, second one is RPF, third one is URPF, fourth one is PPF. First, let's complete SPF. What is SPF? What is SPF? So listen, the statutory Provident Fund have both the employer as well as employee contribution. I'll give an example, and based on this example only we'll be explaining this Provident Fund. So please listen. Don't make me repeat this example. So please listen. Say there is an employer, and there is employee. Say employer is ABC Limited, some company, and employee is Mr. A. Okay. Now listen friends, say for example is ABC Limited every month is paying 1 lakh rupees as what? Salary to Mr. A. This ABC Limited is paying how much salary? 1 lakh rupees as salary to Mr. A. So when they pay this 1 lakh rupees, this employer will deduct what? Provident Fund contribution of employee. The employer every month will deduct what? Provident Fund contribution of what friends? Employee. Are you all with me? Are you all with me? 1 lakh is the salary. From that salary he will deduct that employee's Provident Fund contribution. Say it is 10,000 rupees. Contribution is how much friends? 10,000 rupees. So ineffectively this employee will get only how much in his hands? 90,000 only in his hands. This deducted amount of 10,000, and he also will take another 10,000 from his pocket. That is employer contribution. And all together this employer will deposit how much? 20,000 rupees to that particular Provident Fund. Are you with me? So how it become 20? 10,000 from employee and 10,000 out of his pocket. Out of his pocket, and 10,000 from the employee and 10,000 from his own pocket he will distribute or deposit it in the Provident Fund account. Are you with me? This will happen every month. This 20,000 deposit will happen every month. Every year there will be interest on employer contribution and interest on employee contribution. And towards the end that amount will become a lump sum amount and the employee can withdraw it. Are you all with me? This is how that fund works. So based on that fund's operation only, Income Tax Department have set the taxation. Now let's understand how exactly is the taxation. So listen, we are about to discuss, and one more thing is there. One more thing is there. You tell me what is the salary of the employee now? How much is the salary of employee? According to income tax law, his salary is 1 lakh. His salary is 1. You are earning 1. You are depositing that 10. It is just like you got that 1 and you are investing it in Provident Fund. Are you with me? It is just like you got that 1 and you are investing that 10 in Provident Fund. Your salary is 1. You have to show 1 lakh rupees as your salary, but you will get a deduction for that investment. That is the concept. Are you with me? Ultimately what you said is right, but the treatment, correct treatment is you have to show 1 as your salary and 10,000 have to be a deduction. That too under chapter 6A, 80C. Are you with me? Are you with me? So friends listen, so what we need to do is, so in such a case let's first of all understand what is the treatment when you deposit some amount in SPF. So first of all, can you read this? Employer's contribution. When an employer deposit an amount for the benefit of employee to a SPF, you tell me, is employee getting a benefit? Logically think and tell me. When employer every month deposit this 10,000 for on behalf of employee from his pocket, is employee getting a benefit? Yes, he is getting a deferred benefit. Not immediate benefit, but he's getting a deferred benefit. In future, you can withdraw that entire money and enjoy. Yes or no? So department say you are getting a benefit, so normally it should be what? Taxable. But if you are depositing, if the employer is depositing to a SPF, that deposited amount shall be fully exempted. You don't need to pay any tax for that. That's why it is written not taxable. Are you with me? Are you with me? So listen, employer's contribution to SPF shall be fully exempted, or rather we can say shall not be taxable. Are you all here, friends? Now, how about employees' contribution to Provident Fund, statutory Provident Fund? What will happen? eligible for deduction. Even though you have to show that entire 1 lakh as your salary income, you can claim a Chapter 6A deduction. You tell me from where you claim this Chapter 6A deduction? Very good. Okay. So listen. I thought you are good in your basics, okay? No worry. I'm not teasing you or complaining and all. It was just a thought, like I should have started with the core basics. So listen. Say, in the morning I've told you, there is a taxing rule. Yes or no? Do you remember that? What is the taxing rule? Residence rule and source rule. Okay, say you have received an income. The second thing to check is what? Whether it is taxable in India. To tax that, we have two rules. Number one, residence rule. That means taxing according to the residency status. ROR, global income will be taxable. RNOR, accrued, first received, and income accrued outside India due to business control or profession set up in India will be taxable. NR, you have to apply source rule. First receipt or income accrued in India. Are you with me? What will happen if an income is taxable in accordance with the residence rule and source rule? You need to process it under different heads. Income means gross income. You don't have to pay tax for the gross income. You can always claim expenses, exemptions and other things. This processing of gross income will happen under different heads. Are you with me? Are you with me? So if an income forms part of scope of total income. What do you mean by forms part of scope of total income? By applying residence rule or source rule. You apply residence rule and source rule, and if an income is taxable, you don't have to pay tax for that entire income. Then what you need to do is, you need to split that income into 5, or you need to process that income under 5 heads. You tell me which all are the heads? Salary, house property, PGBP, capital gains, IFOS. Are you all with me? Because each type of income depends upon its character only the processing should happen. Say for example, from PGBP income there is no standard deduction. From house property income and salary income you can claim standard deduction. If it is capital gains you can claim cost of acquisition. From PGBP income you cannot claim cost of acquisition. Are you with me? So each type of income have its own character. So they are splitting that into 5 heads. Are you all with me? You have to process an income under respective head. You have to process incomes under the respective head. Then you will get the income from salary, house property, capital gain and IFOS and PGBP. Then the next process is you need to add everything together. You need to add everything together, and this figure will be said to be what? Gross total income. You need to add everything back together, and that total is said to be what, friends? GTI. That is gross total income. While adding that, this addition is subjected to 2 set of rules. Number 1, clubbing. Number 2, set off and carry forward. When you add this from the respective heads, those addition is subjected to 2 set of rules. That is said to be what, friends? Clubbing and set off. Now, from the gross total income, you can deduct what? Chapter 6A deductions. That is from 80C to 80U. From 80C, it starts from 80C, ends with 80U. You can claim all the Chapter 6A deduction from the gross total income, and the figure that you get after this is said to be what? It's simply said to be the total income. This is the technical name. And on the total income, you have to apply the rate of tax. How do you apply the rate of tax? What is the thumb rule? Not always slab rate. There is a thumb rule for taxing an income. And what is the thumb rule? I'll tell you. Listen, you can split this total income, or you have to split this total income into 2. Number 1, yes. For certain total income, rates are provided in the IT Act itself. In such case, then In such case, apply such rates. What is that? Example, long-term capital gain under section 112 at 20%. Casual income under section 115 BB at 30%, etc. Are you with me? For certain types of total income, income tax department in the IT Act itself, they are providing for flat rates. If your total income is in that category, you apply those flat rates. This is number one. Are you with me? This is the thumb rule for taxing an income according to the income tax law. Now, we have one more thing, and what is the second thing? Other incomes. Other incomes, you apply slab rates. That is rate as per the Finance Act. We normally say it as rate as per the Annual Finance Act. We in common layman's language, not layman's language, commonly we call it as what? Slab rates. Are you with me? Are you with me? If you apply these two, you will get dash tax. What tax? Basic tax. You will get what? Basic tax. You will get basic tax only. From the basic tax, you need to add together your basic tax. So take total basic tax. From the basic tax, you have to apply surcharge. Surcharge. Again, surcharge can be divided into two. What are the two types of surcharge? There are two types of surcharge. Number one, fixed surcharge. Fixed surcharge means for certain type of income, you have to mandatorily pay surcharge. That is said to be what? Fixed surcharge. And the other surcharge is surcharge depends on total income. Total income size, we can say. What is total income size? Individual, you having a total income of more than 50 lakh, normally 10%. More than 1 crore, 15%. More than 2 crore, 25%. More than 5 crore, 37%. This I will cover in computation of total income. Normally in my regular class, this is a basic concept, but it will take 1 day to complete everything. Because we have only 4 days, so I cannot spend that much time for the basics. So that's why I skipped basics, but don't worry. So you apply the surcharge rate and add these together, then you will get what? Basic tax plus surcharge. And it is subjected to what? Health and education cess. On this figure only, you are supposed to apply 4% cess. You apply this, then you will get what? Tax liability, including surcharge, cess and basic tax. How do you pay this tax liability? For paying tax liability, there are different methodologies for the payment of tax liability. Number one, TDS. The person who pays you the income will deduct the tax. Are you with me? That is called as tax deducted at source. Number two, TCS. When you buy certain goods, you have to pay income tax portion or a percentage of the value of the good purchased as income tax to the seller, something similar to GST. Buyer have to pay a percentage of the value of the good he purchased as tax to the collector. That means to the seller. Seller will deposit on behalf of the buyer. It is called as TCS. Then there is another method that is called as advance tax. That means tax which is paid in the running PY itself. And finally, self-assessment tax. That means tax which is paid after the PY, before you file your return. Now you have one more duty. What is the duty? You need to communicate all this information to the income tax department. That is called as filing return. You need to communicate everything to the department. You only know how much income you have. You only know how much expenses you have. You only know how much are your deductible investments. So you communicate everything to the department by sending a statement that is called as filing return. Are you with me? These are the chapters that you have to study in your CA inter syllabus. You check your institute study material. It will start from basic concepts. Chapter 2, residency status. Chapter 3, salary. Chapter 4, house property. Chapter 5, PGBP. Chapter 6, capital gain. Chapter 7, IFOS. Chapter 8, clubbing. Chapter 9, set off and carry forward. Chapter 10, Chapter 6A deduction. Chapter 11, I think TDS TCS advance tax. Chapter 12, filing of return of income. Chapter 13, computation of total income. Computation of total income means you compute the basic tax, surcharge, cess, then this. That's it. Come again? Rebate also will come, but rebate for there is a condition. From the basic tax only you have to compute the rebate. There are many things in between. I only given you an outline. Okay. Rebate is under 87A. That means you can claim only rebate if your total income is 5 lakhs or less in the old scheme, 7 lakhs or less in the new scheme. It is like that right now. Are you all with me? Are you all with me? Now you tell me from what figure you have to deduct Chapter 6A deduction? From gross total income. First of all, you should have an idea of what you are studying. This is the tax universe for CA Inter. This is it. We cannot actually split it chapter wise because we can easily frame a question which involves everything. Okay, we can easily frame a question which involves every chapter. Very easy it is. You have to expect that kind of a question for at least 12 or 14 marks. There will be one question will be like that. That is computation of total income question. It will carry at least 12 or 14 marks usually. Are you all here? Now, you tell me from which figure you can claim that Chapter 6A deduction from your GTI. What is GTI? Gross total income. Now, coming back to our main thing. Okay. So, we were discussing what? The Provident Fund. All right. Now, we were discussing about the statutory Provident Fund, and listen, if an employer, don't worry, okay? Don't worry. This happens in a revision session because always I assess my students. I have no predetermined agenda. It always depends upon how the students are. Are you with me? If you're so good in basics, I would have simply completed this right now. But don't worry, this is actually a classroom for learning. Our ultimate objective is to qualify CA Inter, not to demonstrate your knowledge and not to demonstrate my knowledge. Are you all with me? Are you all with me? So listen friends, coming back to that particular point. So where were we? We were discussing situations TCS. Okay, connected. Okay, very good. Pakka review, overview. Thank you. Motivation is coming in between. Yeah. So actually these are good only. Okay. Yes. So tell me friends, if an employer deposits something to a SPF. What is SPF? Statutory Provident Fund. Don't worry. Nothing taxable in the hands of employee. Don't think about employer. Employer, it's a cost. We are talking about the income tax. So you should think about the income perspective. It is the income of the employee, not an immediate income, deferred income. But don't pay any taxes. We have no plans to tax it. Are you with me? An employee, when he contributes something to SPF, I've already told you that our income will be 1 lakh. In our return, the employee will show rupees 1 lakh as his income. Are you with me? Are you with me? But you can claim that 10,000 rupees as an 80C deduction. So you should not claim it from the salary income. Rather, you should compute your salary income, house property, PGP, capital gain, IFOS, then you compute the GTI. Under GTI, under section 80C only, you are supposed to claim it as a deduction, that 10,000. Is that clear? If you claim it from the salary income, your numerical will be right. But your income from salary will be wrong. Your GTI will be wrong. Your Chapter 6A deduction will be wrong. And they will assume that your total income is also wrong. From there onwards, you will lose marks. Don't think about the mathematical effect of it. This is a law. This is a rule. You have to follow this. It is mandatory. Coming back to the point. So, if the employer is contributing to SPF, nothing shall be taxable. If the employee is contributing to that particular SPF, your already taxable income is 1. That 10 you have contributed, you can claim as a deduction. Now, what will happen to the interest? Read. What will happen to the interest portion? I've told you that every month, employer as well as employee is contributing to the fund. Yes or no? Every Here you will get what? Interest. Every year's interest is fully exempted. Nothing to worry. So the point is very simple. If you are maintaining an SPF. What is SPF? Repeat. Statutory Provident Fund. If your employer contributes something for your benefit, not taxable. If you yourself are contributing to that, you can claim that contributed amount as deduction under 80C. And the interest that is getting accrued in that particular fund will be fully exempted again. So EDE, exempted, deduction, and veendum exemption. Sorry, I've used the Malayalam. So it is like, again, exemption. So EDE, we normally say EDE. Employer deposit, exempted. Then your deposit, deductible. And the interest, exempted. Now moving on to the second fund. Which is the second fund? Which is the second fund? In RPF also, both the employer and employee will contribute. If the employer is contributing something to that particular RPF, can you read that first paragraph? Exempted up to 12% of salary. Not like SPF. There is a limit for the exemption that you can claim. The employer every year or every month is contributing something to RPF. You can claim an exemption, but that exemption shall be maximum how much? 12% of salary of employee. If the employer is contributing more than 12%, you tell me what will happen? Excess shall be taxable as salary. Are you able to follow? Now, you tell me what is salary here? It is standard salary only. That is basic salary plus DA forms part of the retirement benefit plus commission if it is expressed as fixed percentage of total turnover. It is also called as what? Standard salary. We named it as standard salary. Only for this we named it as standard salary. Because wherever it comes, I can simply say standard salary, standard salary, standard salary. Are you with me? Are you with me? So the employer's contribution is exempted only up to 12% of standard salary. What will happen to the employee contribution? Arey, read what will happen to the employee's contribution. Eligible for deduction. You can claim deduction under 80C. Now, what will happen to the interest component? You can claim an exemption, but there is a ceiling limit. What do you mean by ceiling limit? Very simple. You jump from here, you will touch in the ceiling. You cannot jump more than this. That is called as what? Ceiling limit. Maximum amount of exemption. The top. That's why I'm showing like this. Okay, not that a DRS, okay? It is the ceiling limit. So how much is the maximum exemption that you can claim? Exempted at 9.5% per annum. Any excess interest will be taxable as salary. Don't ask on what amount you claim this. You tell me on what amount I claim that 9.5%? On the fund balance. What else? Are you all with me? Are you all with me? On the fund balance, if you are getting an interest, it is exempted, but only up to 9.5%. What if my actual interest is only 8%? Then fully exempted. That's it. Then that full 8% is exempted. Don't claim 9.5% and don't claim it as a loss and all. Okay, it's not possible. So, very simple. If that employer is depositing something to RPF, exemption you will get. How much? 12% of standard salary. Employee depositing something to RPF, you will get deduction under 80C. How about the interest on employer and employee contribution? Exempted, but only up to 9.5% of the fund balance. Is that clear? Is that clear? Not yet over. We have one more fund. And what is the third fund? URPF. That is Unrecognized Provident Fund. Read the treatment of employer contribution. Not taxable. Why? Because income tax department don't know that there is a fund. If they don't, that is called as recognized. They don't even know there is a fund. So employer depositing something somewhere. Nothing shall be taxable. Then how about employee's contribution? Not eligible for deduction. Balance is here. Not eligible for deduction under 80C. There is actually a line in between, okay. I think due to this quality of projector, you cannot see that. But I think in the TV it is visible, I think, okay. So, not eligible for deduction under 80C. And how about the interest? not taxable. Now you will think of maintaining a URPF account. Why? Because comparatively, maintaining URPF is better than RPF. There is no ceiling limit and all. Yes or no? Not like that. You will get the taxation at the time of withdrawal. When you withdraw, that taxation will hit on you. Are you with me? So don't think that maintaining a URPF is better, because there is something huge is about to come at the time of withdrawal when you are withdrawing amount from URPF. Now what is next? PPF. Can you read the treatment of employer contribution? Not applicable. Why? I don't have an employer, that's why I'm maintaining a PPF. Are you with me? So there won't be any employer's contribution, there will be only my own contribution. What will happen to my own contribution? Eligible as deduction under 80C. Then what will happen to the interest component? Not taxable. Is that clear this much? 4 types of Provident Fund. Number 1, SPF, RPF, URPF, PPF. Employer contribution in each fund. Think and tell me. I make you read. That's why I make you read. Think and tell me. Employer contribution to SPF, not taxable. Employer contribution to RPF, you will get exemption, but only up to 12% of standard salary. Then employer contribution to URPF, income tax department don't know that. So no taxability. No employer contribution to RPF. Sorry, PPF. There is no employer contribution. That is done. You've learned it. Yes or no? Those who repeat with me will learn it. Okay, so I want all of you to repeat it again and again. Now, you think about employees' contribution. Deductible under SPF. Deductible under RPF. Not deductible under URPF. Deductible under PPF. Now, you think about the interest component. Interest is fully exempted under SPF. 9.5% exemption under RPF. No exemptions, not taxable under URPF, and full exemption under PPF. Are you all with me? It is simple, isn't it? This is actually nothing. Okay, so at the time of deposit, the treatment, that's what we have learned right now, not yet over. Now we have something that is called as withdrawal. You are about to withdraw money from that particular fund, and let's understand what will happen when you are withdrawing money from the respective funds. So we will understand what exactly is the impact of withdrawal. So can you read the first heading? When you are withdrawing some money from recognized provident fund or public provident fund or statutory provident fund, you can claim some exemption, and it will be taxable if you are withdrawing money from URPF. First of all, let's complete the exemption, then we will discuss about the taxability. So can you read the first sentence? Payments received by an assessee from the following funds at the time of retirement or otherwise would be fully exempt from tax under section 10 subsection 11 and 10 subsection 12. Under 2 sections you can claim exemption. Number 1, let's understand 10 subsection 1 first. Can you read the sentence? Payment received by an assessee from statutory provident fund and public provident fund at the time of retirement or otherwise would be fully exempt from tax. Very simple. Whatever amount that you withdraw from SPF and PPF, full exemption. You don't need to worry about any taxability. Is that clear? Is that clear? And which is the section? Section 10 subsection 11. Under 10 subsection 11, it is fully taxable. Sorry, fully exempted. Now, what if you are withdrawing something from RPF? That exemption is under section 10 subsection 12. Are you with me? Are you with me? If you withdraw some amount from your RPF, then you can claim an exemption under section 10 subsection 12. Let's understand what exactly is that exemption. So what they are saying is accumulated balance payable to an employee participating in RPF shall be exempted in any of the following circumstances. The first thing is, if you want to claim exemption, you need to satisfy any of the following condition. What is the first one? Can you read the first one? You are withdrawing money after 5 years of continuous service from recognized Provident Fund. Don't worry, nothing taxable. Are you with me? Are you with me? You are resigning from a company or you are retiring from a company and you are withdrawing money from RPF. What is RPF? Recognized Provident Fund at the time of retirement or whatever it is. But it is after 5 years. Nothing shall be taxable. You can claim full exemption under section 10 subsection 12. Are you all here? Now you tell me, normally if you withdraw money after 5, nothing shall be taxable. That also means if you withdraw money before 5, you have to pay the taxes. Are you with me? Are you with me? But what department say? Employee retires or terminates job before 5 years of continuous service. Then what will happen? By a reason of ill health. Don't worry, don't pay us any taxes. You are resigning or you are retiring due to your ill health before 5 years. Nothing shall be taxable. After 5 years, irrespective of the reason, nothing shall be taxable. Before 5 years, due to ill health also, nothing shall be taxable. Or due to a reason of contraction or discontinuance of employer's business. That employee's business got discontinued. That is not your problem. You are willing to work more than 5 years, but that employer stopped this activity. What will I do? I am mandatorily supposed to get out or retire or resign before 5 years. In that case also, nothing shall be taxable. And what is the third case? Any other reason beyond the control of employee. Any other reason beyond the, say there is a huge economic depression. Every company, or COVID, that is the best example. Why should I complicate? COVID. Say new variant came in. Okay, say new variant came in, Delta Alpha Gamma. A new variant came in and it's very deadly also. Then what will happen? Again, you will definitely, you will follow that COVID restriction and people will stop their business. Some persons will restrict their activity. We all will die. That is also right. Okay. Thiru say everybody will die. Then you don't have to study income tax. Yeah. So the point is, if something like that happening and you are resigning before 5 years also, don't worry. Nothing shall be taxable. Are you with me? Are you with me? Yes, sir. So the point is very simple. If you don't have 5 years of continuous service, but you are withdrawing money due to your ill health or due to contraction of your employee's business or due to any other reason which is not under your control, no worries. Nothing shall be taxable. Are you with me? Yes, sir. Moving on. Say you resigned. Okay, you resigned before 5 years by your own. Without any other reason, you resigned before 5 years. But you joined another company. But you joined where? Another company. Now you transferred that RPF balance from the past employer to the present employer. That means you resigned from Reliance and joined Tata. You worked for Reliance for 3 years. Then you joined Tata. So you resigned within 3 years. But no worries, don't withdraw the money. Rather, transfer that Provident Fund balance in the name of Tata and continue depositing in Tata's control. In that case, nothing shall be taxable. For that transfer, you don't need to pay any taxes. That transfer shall not be regarded as a withdrawal. Are you with me? Are you with me? Yes, read point number 3. Employee has before completion of 5 years and joins another organization who also maintains RPF and his fund balance with the current employer is transferred to the new employer. In that case also, nothing shall be taxable. And what is the last case? The entire balance standing to the credit of employee is transferred to his account under NPS. That is referred under section 80 CCD. Okay, one thing is missing. D should be there. Okay, 80 CCD. C is missing. Sorry, D is missing over there. So that simply means you have resigned before 5 years. Instead of withdrawing the amount, you transferred that RPF balance to your pension fund. No problem. You can still claim the exemption. Nothing shall be taxable. In any other case, if you are withdrawing the money, then what will happen? Tell me, in any other case you are withdrawing money, then what will happen? It will be taxable as if it is a withdrawal from URPF, which we are about to discuss. Are you with me? In any other circumstance, if you are withdrawing money, it will be considered as a withdrawal from a URPF account. That's what we are about to discuss. Before that, somebody is asking something in online. What if RPF transfer to URPF? Normally, nobody transfers RPF from URPF. Reverse happens. URPF, you can convert it into RPF. Okay. If you are converting that, from the date of conversion only, you are eligible for exemption and all. That's it. RPF cannot be. Oh, you are saying that you have resigned from a company and you are withdrawing the money from RPF and depositing it in URPF. Is that so? Fully taxable. If you don't have 5 years continuous service, because the income tax department does not recognize URPF. Okay, Ragul. TCS shall be collected. That is the TCS chapter. Okay, sir. Which are the circumstances where TCS shall be collected? So what happened if RPF transfer? Okay, I think I have addressed everything. So if I miss something, then ask again. Okay, if I miss something, then ask again. So these are the points that you should consider while you are withdrawing an amount from. I told you that everybody will die. Yes or no? I've given you an assurance. It will be dry. It is dry only because it is law, Income Tax Act. It is not me who have written everything. It is the government who have written everything, and ICA have put it as a part of the syllabus. Now we have to study. We don't have an option. And it is a revision class also. Normally in regular, I make students solve questions in the afternoon session. We only have 4 days. So we have to discuss theory in the afternoon session. I know it is very dry, but what to do? We don't have a choice. Yeah. So friends, listen, you tell me, what is section 10 subsection 12? If you are withdrawing money from RPF, we have discussed the possibilities. After 5 years of continuous service, nothing taxable. Before 5 years, but due to your health, no problem. Before 5 years, but due to the discontinuance of business, no problem. Before 5 years, which is not under your control, no problem. Before 5 years, but you transferred that balance to another RPF, no problem. Before 5 years, you transferred that RPF balance to NPS, no problem. NPS means, it's not new actually, it's National Pension Scheme. I've written new pension scheme, that means when it was, at the time of introduction, it was new. Right now it is not new, it is NPS called as National Pension Scheme. That's it. Or we can say pension scheme under 80 CCD. Now listen, in any other circumstance, if you are withdrawing an amount from RPF, it shall be treated as if it is a withdrawal from URPF. Now let's learn what is the treatment of URPF withdrawal. Tell me, if you withdraw some money from URPF, you have to split that withdrawal into 4. Number 1, employer contribution. Number 2, employee contribution. Number 3, interest on employer contribution. Number 4, interest on employee contribution. Hope you remember. In every fund, employer will contribute. Employee will contribute. Interest will be there on the employer contribution and interest will be there on the employee contribution. At the time of withdrawal, you are getting everything together. But the income tax depends upon the character of the contribution. So let's understand what is the treatment. Can you read the first one? Accumulated employers contribution. What is the treatment? Fully taxable under the head salary. So the point is, at the time of deposit, department said nothing taxable. Why? Because when you withdraw that employer's contribution, that entire employer's contribution shall be fully taxable under the head salary. Are you with me? Are you with me? Yes, sir. Second one, accumulated employees contribution. What do you mean by accumulated employees contribution? My salary was 1 lakh. I deposited 10,000 out of that 1 lakh in URPF. I didn't get a deduction. In the year end, I will get that 10,000s that I've invested back. You tell me, what is the treatment? Not taxable. Nothing shall be taxable. Why? When I get 1 lakh, that entire 1 lakh is taxed the salary in the year of receipt. Out of that 1, I've deposited 10. You didn't give us any deduction for that 10 deposit. Now I'm withdrawing my portion of deposit from that particular account. Do I have to pay taxes for that? No, I don't have to pay any taxes for that because it is already taxable as what? Salary. I've already taxed it as salary in the year of receipt itself. Have you understood what I said? Have you understood what I said? See, this 1 lakh, I've taken that, I deducted 10,000 and in my hands I received only 90. But my salary was 1. In the year end, these 10,000 which I've deposited, I got it back. That I've already taxed in the year of receipt itself. Now, in the year of withdrawal, I don't have to pay taxes again for my own contribution. Now, how about the next one? Interest on employer contribution taxed under salaries. Interest on employees contribution taxed under IFO. Yes, are you with me? Why? Because income tax department is considering URPF as some kind of deposit. Your employer have deposited something on account of employer-employee relationship, so that portion have to be salary. On that employer contribution, you are getting an interest, that also on account of employer-employee relationship, salary. You are getting some interest on some kind of deposit, that is IFOS. That's why employees contribution is taxed under IFOS. Is that clear? Is that clear? So we have learned the impact of at the time of deposit as well as at the time of withdrawal. That's it. I hope it is clear. We are discussing about what? Provident Fund's impact, and we have considered both at the time of deposit as well as at the time of withdrawal. Yeah, VRS. What do you mean by VRS? Arey, what do you mean by VRS? Seems like you all want an voluntary retirement right now. Okay. Yeah. So tell me, what is voluntary retirement? That means, say you are retiring voluntarily before your age. Before your retirement age. Your retirement age is 60. You decided to retire at the age of 50 or 52 or whatever it is. So that process is said to be what? Voluntary retirement. During voluntary retirement, the employer have to pay employee a lump sum amount. And that lump sum amount is said to be what? Voluntary retirement receipt. Received by the employee from the employer. Are you all listening?
Yes,
are you all listening?
Yes,
if you are an employee who is in receipt of voluntary retirement, then what income tax department say? You can claim an exemption under section 10(10)(c). And exemption shall be the lower of the following. Which all are the limits? Number 1, can you read limit number 1? Actual voluntary retirement receipt that you received is point number 1. What is point number 2? Rupees 5 lakh as the statutory limit. And what is point number 3? Amount equivalent to 3 months salary for each completed year of service. What do you mean by that? Amount equivalent to 3 months salary for each completed year of service. Mathematically it means, what is salary first of all here? What is salary? You have a definition here. What is salary? Standard salary. So what department says, you take the last drawn standard salary. That is LDS, we can say. Last drawn standard salary into 3 into completed year of service. Completed year of service. This will be limit number 3. Are you with me? You take the last drawn salary, you convert it into 3 months salary. That means last drawn salary into 3 into completed year of service. How about months? Ignore. They are not saying fraction in excess of 6 months or something. So you can ignore the fraction. How about the fourth limit? Salary at the time of retirement. That means your last drawn standard salary into balance month of service left. What is this balance month of service left? You are retiring at the age of 55. Your retirement age is 60. How many months of service you have? 5 years into 12 months, that will be 60 months into last drawn standard salary. Are you with me? Are you with me? Instead of creating an example, I will make you solve a small question that will actually refresh you as well. So, where is it? Yeah, it's an easy question, okay. Question number 10. Quickly solve question number 10. Mr. Datta received voluntary retirement compensation of 7 lakh after 30 years and 4 months of service. He still has 6 years of service left. At the time of retirement, voluntary retirement, he was drawing a basic salary of 20,000 per month. DA which forms part of pay. What is this forms part of pay? Forms part of employment. That means forms part of retirement benefit. That means it's an official DA. 5,000 per month. Then compute his taxable voluntary retirement compensation, assuming that he is not claiming any relief under 89. Let it be there. So which all are the limits? Can you tell me the limits? Limit number 1, actual amount received. How much is actual amount received? 7 lakh. What is limit number 2? 5 lakhs. What is limit number 3? For computing limit number 3, we require standard salary. How much is the basic salary in the question? 20,000 is the basic salary in the question. How much is the DNS allowance? And they are saying it forms part of the pay. So altogether it will be 25,000. They are not mentioning anything about commission. So they don't have, they may be not paying commission. So 25,000 is the standard salary. So third limit is 3 into 25,000 into how many completed year of service he have? 30 years and technically it is 4 months. Ignore 4. Count only 30. So into 30. Can you help me with the math? 22 lakh 50,000. Now, salary at the time of retirement multiplied by the balance number of service left. That is limit number 4. What is the salary at the time of retirement? 25,000 into balance number of service left. How many number of service he left? 6 years into 12 months. Can you help me with the math? 18 lakh? 18 lakh round figure. So 18 lakh. Whichever is lower is 5 lakh. So your exemption shall be rupees 5 lakh. Is that point clear? Is that point clear? So friends, we will start with the next concept that is said to be what? Perquisite. Okay. So friends, tell me, what do you mean by perquisite? What do you mean by perquisite? Come again? Amount given in kind. Okay, okay. All right. So, if you go take the institute study material, the first paragraph itself says perquisite can be monetary as well as non-monetary. Then you tell me what is perquisite. Benefits. Then what is allowance? Additional benefits. Allowance means fixed monthly sum given by the employer to the employee irrespective of actual expenditure incurred by the employee. Employer don't care whether employee incurs that expenditure or not. Every month he will pay a fixed amount that is called as allowance. How about perquisite? Either the employer will give him a benefit or the employer will reimburse the actual cost or a portion of actual cost of the employee. That is called as what? Perquisite. For example, say house rent allowance. In the morning we have covered house rent allowance. Every month a small amount is given to the employee and that small amount can be called as house rent allowance. The house can be provided as a perquisite also. Either the employer will construct a house and give it to the employee, or the employer will take a house on rent and give it to the employee, or the employer will reimburse the actual rental expenditure of the employee. That is not HRA, that is perquisite. House rent allowance means fixed. Perquisite means either the actual expenditure will be reimbursed by the employer or it will be taken care by the employer. So it will always have a nexus when it comes to perquisite with the actual expenditure of the employee, and in allowance there won't be any nexus. Are you with me? Fixed monthly sum is allowance. Providing the facility or reimbursing the cost of facility is said to be perquisite. Are you all with me? So when it comes to the income tax department, we can divide perquisites into 3. We can divide what, friends? Perquisites into 3. Let's understand which all are the division. Number 1, perquisites taxable in the case of all employees. So what is the first category? Read along with me. Perquisites taxable in the case of all employees. There are certain perquisites which are taxable in the case of all employees. Number 2, perquisites exempted from tax in the case of all employees. There are certain perquisites which are exempted in the hands of all employees. And what is the third category? Perquisites taxable only in the hands of specified employees. That means certain employees only are subjected to pay tax for the perquisites under third category. Are you all with me? So which all are the three categories? Repeat with me. Number 1, perquisite taxable in the hands of all employee. Number 2, perquisites exempted in the hands of all employees. And number 3, perquisite taxable only in the hands of specified employee. Which all are the exempted perquisites? The list of exempted perquisites have been given as a table over here. I am not about to discuss the table. Rather, we will take each perquisite and we will discuss its different permutation and combination. So you can see a lot of charts are coming. These are all perquisites and benefits. Okay, say for example, residential accommodation. We say rent-free accommodation. Then motor car. Like that, everything will be discussed as chart. A list have been given as table as well. Let the table be there. We will start with the first exemption or the first thing related to the perquisite. Can you read the heading? Section 10 subsection 1, that is exemption in respect of leave travel concession. Listen. Say for example, you should respond, okay? You all should respond. We have around 1.5 hours of classes now. Approximately, okay, approximately 6:30 doesn't mean sharp 6:30. It will be 5 minutes more or 5 minutes, 5 minutes even more. Depends upon the percentage of completion, okay? It is either 5 minutes more or less, depends upon the, is that okay? Oh, all right, fine. So, depends upon. If we will be able to cover the topics earlier, then I'll leave you earlier. But I'm sure that 99.99% case, it won't be happening. But our purpose is to crack the upcoming examination. So, I hope you understand. Okay. Now, friends, listen. Already we have the experience. Okay. You have already trained, right? Maybe 6:30, and it has been extended to 7:30 and all. Super. No, nothing, man. Understood. Now listen. 7:30 and all, I have no plans to take, okay? Yesterday also it was, being the last day, they might have been taken to 7:30. Don't worry, I have no plans to extend till 7:30 because I'll die. Don't worry. Whether you die or not, I'll die, that's for sure. So, listen. Coming back to the point, friends, we will be planning to wrap up within 6:30 itself, okay? That's our plan, but let's see. So, listen, friends. Say, for example, you are my employees. Are you all listening? By making use of this example, you will understand the entire concept, okay? Listen. Say, you are my employee, and I am giving you an offer that you can travel anywhere in India. You can travel anywhere in India, and I'll take care of your traveling cost, your food and accommodation, and the other expenses involved in relation to the travel. Who am I? Your employer. Are you all with me? You are my employees, and I'm giving you an offer. What is that offer? You can travel around. You can travel around anywhere at your wish. No problem. I will take care of your traveling cost, food and accommodation, and other expenses in relation to the travel. Are you all here? I am reimbursing the entire amount or a percentage of the amount of that you have actually earned. You tell me, are you getting any benefit? Are you getting any benefit? Of course, yes. What is that benefit? You don't have to spend anything for the travel that you are doing right now. Are you with me? You don't have to spend anything because I'm sponsoring the travel. Are you all with me? It should be considered as a perquisite, a benefit. But departments say you can claim an exemption under section 10 subsection 5 subject to certain conditions. Are you with me? If you are going for a travel within India and your employer is either sponsoring the travel or the employer is reimbursing that actual expenditure, in both the cases, subjected to certain conditions, you can claim an exemption under section 10 subsection 5. So let's understand what exactly is that particular exemption. Now, can you read that first blue box? Voice is not audible. So, Friends, please tell me, am I audible? Ah, yes. Okay, great. So listen, can you read the first blue box? What exactly is that? This exemption is available to an individual in respect of travel concession or assistance for himself or herself or for his or her family. Either you yourself or along with your family are going for a travel. Okay, you will get this particular benefit. And what is point number 2? This exemption in all cases will be subjected to the amount actually spent and limited to 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. Are you all with me? First thing that you should understand here is that calendar year block is fixed. In a block of 4 calendar year, you can perform up to 2 journeys, and for that journey, whatever traveling cost reimbursed by your employer is not considered as a taxable perquisite. Are you with me? In a calendar year of 4 years, you can perform up to how many journeys? 2 journeys. If you are performing 3 journeys, all the costs related to that 3rd journey shall be fully taxable. If you are performing 2 journeys, all the costs are not exempted. Only the traveling cost you can claim an exemption. Food and accommodation and other expenses reimbursed by the employer shall be fully taxable. Are you with me? Are you with me? This 10 subsection 5 exemption is eligible only for what cost? Traveling costs. That too within India, not for the other associated costs. So let's understand this by way of an example. Say for example, listen. As I've told you, this particular block is actually fixed. So the one thing that you should know, say today I am joining a company, okay. What is today's date? 21st July 2024. Are you all with me? Your block is not starting from 21st July 2024. You are entering into a fixed block. When you join in a company, you are entering into a fixed block which starts from 1986. So what is the first fixed block? 1986 to 89. 86, 87, 88, 89. Then 90 to 93. 94 to 97. 98 to 2001. 2002 to 2005. That is 2, 3, 4, 5. Then 6 to 9. 10 to 13. 14 to 17, 18 to 21, 22 to 25. So you are entering into this 20 to 25 calendar year block. Calendar year, not previous year. Are you with me? Yes, I have written everything for a better understanding of the topic. Okay. So when you are joining on 21st July 2024, you are entering into this particular fixed block. In this block will get over by 31st December 2025. So from July 2024 till 31st December 2025, you can perform up to how many journeys? 2 journeys. And you can claim exemption for the traveling cost. Are you all with me? So the one thing that I should understand is that that block is always fixed. When you are joining in a company, you are entering into a respective block. And the block which is applicable for our PY is 22, 25 because our PY comes in between 22, 25. Is that clear? Block is not a financial year. That's why I've said calendar year. Okay. So read this. Exemption in all cases will be subjected to the amount actually spent and limited to 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. So the block is not financial year, it is calendar year. Now friends, listen. Where such travel concession or assistance is not availed by individual during any block of 4 calendar years, one such unavailed leave travel concession will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. Say for example, I joined in this day, today. Okay, due to work pressure, I was not able to perform any journey. I can perform up to 2 journey, but I was not able to perform any journey due to the work pressure. Are you all listening? In that case, what I can do, I could have performed 2. Out of that 2, I can pick 1 and carry forward it to the next block. You tell me which is my next block? 26 to 29. Yes or no? In 26-29, I can now perform up to 3 journeys. Are you all with me? In 26-29, I can perform up to how many journeys? 3 journeys. So, if you are not performing any journey in a block, then out of that 2 unperformed journey, I can carry forward 1 to the next block. Then let me create another combination. Say I have performed 1 and 1 is pending. Then what to do? Can I carry forward that to the next year? No. If you have 2 unperformed journey, out of that 2, 1 you can carry forward to the next year. Are you next block? Are you with me? And say I haven't performed any of these 3 in the next block. Then what shall I do? Again, only 1 I can carry forward to the future block. Are you all here? So, whenever there is unperformed journeys, if you are not performing any journeys in a block, you can take 1 and carry forward to the next year or next block rather than the year. I hope it is clear. So, we will read that again. Read along with me. Where such travel concession or assistance is not availed by the individual during any block of 4 calendar years, one such unavailed leave travel, LTC means leave travel concession, will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. So 3 things we have learned. Either you yourself or your family members can go for this and enjoy the benefit and claim the exemption. Number 2, you can perform up to 2 journeys in a block of 4 calendar year. Number 3, that particular in a block, if you are not performing any journeys, then you can carry forward 1 out of that 2 to the immediately succeeding block. Are you all with me? Moving on with note number 1. Can you read note number 1? Spouse or children of the individual and parents, brothers and sisters of the individual, or any of them wholly and mainly depend upon the individual. That simply means here we are giving a reference of family. What do you mean by family? Your spouse and children. Then parents, brothers and sisters, if they are wholly depending on you. Spouse and children, whether they are dependent or independent, you can take. It should be your spouse, okay? It shouldn't be someone else's spouse, okay? Your spouse and your children, you can take, no problem. Whether they are dependent on you or not. But parents, brothers and sisters, you can take and claim the exemption only if they are depending on you. Now, and there is another thing. There is a restriction for the number of children that you can take. Can you read this? The exemption referred to shall not be available to more than 2 surviving children of the individual born on or after 1st October 1998. Listen. Say for example, if you are a person having 5 children. Okay. Say for example, I'll take an example. So listen. Alright, here, what's your name? Ashwath. So I'll call him Ash. So Mr. Ash have 5 children. Okay, Mr. Ash has 5 children. And say we will take 8 children, okay? We will take 8 children. 5 children born before 1st October 1998. Okay, I think his date of birth is after 1998 maybe. Or before 1998. Okay, doesn't matter. Okay, so he have 8 children. Now we got the reason for overpopulation, sir. Oh, Thiru. Okay, or 10 years kapro, nama onnu paakano, okay. 10 years kapro, ipdida sollano neeyum. So Thiru have decided to not to have babies. Why? Because he believes that India is overpopulated. So he's sacrificing. Okay. Thiru, don't get married. Now, listen. They have 8 children and 5 before 1st October 1998 and 3. Okay, Sarah. Okay, da. They விளையாட்டுக்கு தான் சொன்னேன். Okay, no problem. So 3 children were came, that means born on or after, came means born, okay. On or after 1st October 1998. Are you all with me? So how many children Ash have? 8. 5 before 1st October 1998. 5 born before 1st October 1998 and 3 on or after 1st October 1998. Now listen. He took everyone. He took everyone and went for a Delhi trip. Okay. He took everyone and went for a Delhi trip and came back. Now when you claim exemption, you can claim exemption for the traveling cost of these 5 children. Absolutely no problem. Why? Because they born before 1st October 1998. Absolutely no problem. But when you are claiming exemption for the traveling cost of these 3, only for 2 you can claim exemption, not for the third. Are you with me? Are you with me? So what department say here is, read this along with me, the exemption referred to shall not be available to more than 2 surviving children of the individual after 1st October 1998. That means if you have a children which is born after, or you have many children which is born after 1st October 1998, out of those you can take exemption only for 2. Are you all with me? Any 2 at your choice. You can take exemption. It is like that. Are you all here? Now, this restrictive sub-rule shall not apply in respect of children born before 1st October 1998 and also in the case of multiple birth after one child. What is that? Say, listen, in the same example, say, Ash have 5 children born before 1st October 1998. Then he have how many children after 3? Are you with me? Are you with me? Out of this 3, 1 son he had. After that, he had 2 twin daughters. 1 son and 2 twin daughters. That means, say, son born in 2000 and daughters, they born in 2005. Okay. So, the daughters' birth year was 2005 and son's birth year is 2000. Are you with me? So the firstborn is son. Thereafter he have a twins. Then no problem. After the first birth, that is after 1st October 1998, you have a child. After that you have multiple. Multiple means twins, triplets, quads. I mean, adhe podu adukapro ennada adu. Okay. So multiple means in one single birth, if it is twins or triplets. Okay. So in that case, you can take all and claim exemption. This will not be a problem. Are you with me? What if the first birth itself is twins? Stop. Don't even think about anyone more. Okay. If the first itself is twins, then you will not get this benefit. After the firstborn, if it is twins or multiple, then you can take that multiple, all of them, and you can claim the exemption for the traveling cost. Are you with me? Yes, are you with me? Yes, so we will read this note again. Can you read note number 3? This restrictive sub-rule for the 2 children restriction shall not apply in respect of children born before 1st October 1998 and also in the case of multiple birth after one child. You have a son, thereafter you have multiple, no problem. This restriction is not applicable. You can take all of them and claim the exemption. Is that clear? Now moving on to note number 4. Can you read note number 4? The value of travel concession provided to the High Court judge or Supreme Court judge and members of his family are completely exempted without any condition. That High Court judges or Supreme Court judges, if you are giving any leave travel concession, that is fully exempted without any condition. If High Court judges have 10 children, take everyone. No problem. Okay, absolutely no restriction. It has been privilege given to the High Court and Supreme Court judges not to have 10 children. Okay, the privilege is they don't have any restriction. Okay, yes. So Not number 5. What is not number 5? Exemption is available only if the journey is performed in India. You performed a foreign trip, no exemption. You first finish India, then go to overseas. Okay, so the exemption is not available if you are performed a foreign trip. And it applies only to the traveling cost. In a trip, you will be having food, then shopping, and other cost may come. Okay, so all other costs you will not get any exemption. Only for the traveling costs you can claim an exemption. Now, ticket cost, that's it. Incurred not for the other expenses like food, accommodation, shopping, etc. Incurred during the travel. Now you will think that you will get full exemption for the travel. The answer is no. For the travel cost also, there are certain ceiling limits. Now let's understand how do you claim the exemption. So friends, listen, point is simple. You are performing a journey within India with your family members. Are you with me? Are you with me? And who sponsors the travel? Either your employer sponsors that particular travel, or he reimburses that particular traveling cost. Either he sponsors it or he reimburses that particular traveling cost. Then what's the speciality? You can claim an exemption for the traveling cost alone, that too subjected to certain ceiling limits. That's what we are about to discuss. So what is the first box in that? Journey performed by air. What do you mean by journey performed by air? You took a flight. Okay, you took a flight. Then how do you claim exemption? Amount not exceeding the air economy fare of the national carrier by the shortest route to the place of destination. What does that mean? Listen, 2-3 things. You started your journey from Chennai. Okay, you started your journey from Chennai. You visited Bangalore. Then you go to Delhi. Then came back. So you had multiple destinations. Are you with me? Started from Chennai, went to Bangalore, then you visited Delhi and you came back. Are you with me? Then will you get exemption for all the traveling costs? No. You start from your destination and check which is the farthest point. What is farthest point? The far away. Okay, which is farthest point? Delhi. So the flight cost to Delhi and come back. That is the maximum exemption that you can claim. That too economy ticket, not any business class and all. Are you with me? Are you with me? Yes, so if you performed that particular journey through air, can you tell me how much is the exemption? Amount not exceeding the air economy fare of the national carrier by the shortest route. Shortest route means you start from the destination, beginning, till the farthest point, shortest route. You go to Delhi, come back. What exactly is the ticket cost? That only is allowable as a exemption. Are you with me? Now, what if you have performed that particular journey in any other mode? Say you have performed that particular journey in any other mode, then the first thing that you have to check is whether rail service is available. You tell me whether rail service is available from Chennai to Delhi. Yes, you have rail services from Chennai to Delhi. So you have performed the mode, say you have gone in a bullet. You have gone in a bullet from Chennai to Delhi. So the first thing that you have to check is whether your place of origin and your farthest destination is covered by train. If the answer is yes, ignore the bullet petrol cost. Then you can take only what? Amount not exceeding air-conditioned first-class rail fare by the shortest route to the place of destination. That simply means you performed journey in a bullet from Chennai to Bangalore, then to Delhi, then you came back. How much is the maximum exemption? Check whether your origin and the farthest point is covered by train. The answer is yes. Delhi, Chennai, there is a train. In that case, what to do? You go check what exactly is the first class AC fare of the train ticket from Chennai to Delhi and coming back. That is the maximum exemption. The entire petrol cost and all which is reimbursed by the employer, you will not get it as exemption. Are you with me? Are you with me? What if it is not serviced by, what if the rail service is not available? Say there is no service between Chennai and Delhi. Say there is no railway station in Delhi. Imagine a case, say Delhi, instead of Delhi, say I'm going to some other place, okay, in Tamil Nadu, where there is no train service. Then what to do? I performed the journey in bullet and there is no train service. Then what to do? If there is no train service, then you need to check whether a recognized public transport system exists. I think I performed journey from from Chennai to Kodaikanal. I think in Kodaikanal there is no railway station in my understanding. Come again? Dindigul. Okay, nearby railway station is Dindigul. So I performed a journey from Chennai to Kodaikanal. It is not serviced by rail. So what to do? You need to check whether there is a recognized public transport system from Chennai to Kodaikanal. What is this recognized public transport system? A properly licensed bus. The private taxi, you have to ignore, okay? There are people who runs as private taxi. You give something, they will drop you over there. If there is a recognized public transport system like a bus or a bus, that's it, okay? So, like a bus, then what you can take? The amount not exceeding the first class or deluxe class fare on such transport by the shortest route to the place of destination. That means from Chennai to Kodaikanal and coming back. What exactly is the best ticket cost? That is the maximum exemption. Who told you to go in bullet? Go by bus. Okay, go by bus. That is the maximum exemption. Now, what if, this is the comedy, what if there is no recognized public transport system exists? You performed the journey in any other mode other than air. Okay, and there is no rail service. There is no recognized public transport system as well. You have gone to a forest, Satyamangalam forest. I think there, that Veerappan, that guy was there in the Satyamangalam forest, right? Yeah, so I've read it from somewhere. So you went to Satyamangalam forest. Okay, is there any public transport system inside Satyamangalam forest? No, no. Then what to do? There is no flight, there is no train, there is no public transport system as well. Then it's a comedy. Then how do you, what is the maximum exemption? This is the comedy. What is this? Amount equivalent to the air conditioned first class rail fare for the distance of journey by the shortest route as if the journey had been performed by rail. What is that? If you have performed your journey by rail, what could have been the railway ticket first class AC fare cost? That is the exemption. How do you find out that? You should call to the railway and ask, hello railway master, we know that there is no train service to Satyamangalam forest. What if in future if you put a railway station over there, what might be the traveling cost? Can you ask like this? No. Then what to do? You go find out the nearest railway station. You cannot compute the cost by kilometer and all, because different train, different time, different cost. So what you can do is you find out the nearest railway station and what exactly is the traveling cost till that railway station and coming back. That is the exemption that you can claim. Are you with me? This is what we practically do. We cannot find out the traveling cost of a railway station that is about to come in future. Okay, that, I mean, in Satyamangalam forest, there won't be any railway station. Okay, whether it is future or past, there won't be any railway station. So we cannot find out that particular railway ticket. So you need to find out the nearest railway station and you consider that particular cost bus. Are you all with me? Yes, are you all with me? Yes, national carrier means domestic flight. Domestic flight. Indigo, SpiceJet, any flight, yes. Let's say I travel to two places whose shortest distance from the place of origin is the same. Then you select one at your choice, that's it. Okay, you go with the tape, okay. Then you exactly select one out of two, that's it. Okay. Yeah, constructing, okay. Yeah. Don't worry. You select any one out of that two. One only can be claimed as an exemption. Mattupettai. What is that? Muttupettai. Okay, sorry. It's a place, okay. Let's say, yeah. So, or you travel to a place called Attipatti. Okay. You go to Attipatti and coming back. That's citizen place. Yes. Forget about Attipatti. Think about leave travel concession, okay. Now, coming back to the point. Friends, listen. Shh, listen. So we were discussing about 10 subsection 5, that is exemption in respect of the leave, travel, concession. I hope it is clear. There are a lot of conditions in that. Okay, you should remember all the conditions, because normally they used to ask, what do you say, adjustments in relation to this particular exemption. Yeah. Come again, first? 2 out of 3. Yes, because the act is very clear. If you want to claim the benefit, after the firstborn, it should be multiple. If the firstborn itself is triplets after 1st October 1998, only 2 out of 3. Yes. The possibility of having triplets is very less normally, but that's the rule. Okay. That is the rule, da. Appadida solla vande, okay. All right, so listen. We'll continue our discussion in the other things, so please keep quiet and listen. What is the next one? Medical facilities. Proviso to section 17, subsection 2. Now friends, let me ask you one doubt and you should give me the answer, okay? Say for example, I am your employer and you are my employee. You have undergone a medical treatment. You have undergone what? A medical treatment. I sponsored that entire medical treatment. I sponsored that entire medical treatment, or I reimbursed that entire medical treatment cost. Either I sponsored or I reimbursed. Are you with me? Are you with me? Yes, sir. Are you getting any benefit in this? Either I sponsored or I reimbursed your medical expenditure. Are you getting any benefit? Yes, you don't have to incur anything for your medical expenditure. Yes or no, you are getting a benefit. So it should be normally taxable. Yes or no? But department say all the following medical benefits are not taxable. Department say you don't have to value this perquisites. You don't have to value the perquisites which we are about to discuss right now. Are you with me? Apart from these, if you are getting any other medical benefit, then that will be fully taxable. Apart from the list that we are about to discuss, if you are getting any other medical benefit, then that will be fully taxable. Let's understand which all are the items coming under this particular table. So, sir, let's discuss related questions for 10 subsection 5. Don't worry. In the lengthy question, there are adjustments in relation to 10 subsection 5. So, anyways, wait till that, okay? So, let's complete the other things right now. Medical facilities, that is the following, will not amount to perquisite. Let's understand. Can you read the first one? Value of medical treatment in any hospital maintained by the employer. I myself have a hospital, and in that hospital there is no bill for you. You can come, complete your treatment or undergo your treatment and go. There is no, I'm not charging anything for that. That is a fully exempted or fully not taxable perquisite. Are you with me? So can you read the other side? The value of any medical treatment provided to an employee or any member of his family in any hospital maintained by the employer shall be fully not taxable. See, because it is not an exemption basically. What they are saying is you don't have to value the perquisite. So rather than saying exemption, even though the effect is same, the correct way of saying is not taxable perquisite. Are you with me? Are you with me? They have been excluded this from the value of perquisite, and now they are using the word family. And who is your family member for this purpose? Read. Family means spouse and children of the individual. Children may be dependent or independent, married or unmarried. It also includes parents, brothers and sisters of the individual if they are wholly or mainly depend upon him. That means the same as that we have discussed earlier. The parents, brothers and sisters will become your family members only if they depend on you for their living. Otherwise, you don't consider your parents, brothers and sisters. Are you with me? All right. What if you are undergone a treatment for your parent and your employer is reimbursing that? Or your employer allowing you to undergo treatment in his own hospital for your parent? Fully taxable. You will not get the benefit of exemption. Have you understood what I said? In a hospital owned by the employer, your parent have undergone a treatment, a medical treatment. All the bill, the value of the bill, will be taxable in your hands because the parent is not a family member if he is independent. Are you with me? Are you with me? Because based on the PAN, you have to submit the details if they ask. Voluntarily you file this. If they ask, you need to submit their PAN number. Based on that, department can know. If the parent has some other income, then he's not dependent. Dependent means financial dependence. That's it. If the parent have any other stable income, then department will say he is an independent person and you cannot claim the benefit for his treatment. This have to be voluntarily submit. You have to voluntarily admit it. Okay. But as you all know, most of the people in India, you know what happens when this comes to the theory versus practical. In all these reels and all, nowadays people are coming and talking how to convert your black money into white money and all. Day before yesterday only I saw a reel. Okay. The reel, the main subject is, let's convert black money to white money. What is happening in India, especially when it comes to the digital media, I really wonder, okay. Don't follow those jokers, okay. If you follow those jokers, you are done. Do you really think that their strategy to convert black money to white money will work? They, assessing officer pinne edukada. Don't think that assessing officer is dumb. Okay. And one more thing is there. Hope you have heard this. Barking dog never bites. This biting dog never bark also. If you know some strategy, you will go, apply it, save the taxes, go. That's it. Those people who are very good in this and who really know some strategy will never disclose it. Unless that situation demands for it. They will never open that camera. Hi guys, today let's convert some black into white. This is stupidity, okay? Don't follow those things, okay? Yes. So, and let's come back to the point, friends. So the first point, what we said is the value of any medical treatment provided to an employee or any member of his family in any hospital maintained by the employer. Now, can you read the second point? Reimbursement of expenditure actually incurred on medical treatment. These are not taxable, okay? Apart from this, whatever other medical treatment expenditure incurred by the employer or reimbursed by the employer shall be fully taxable. So we are discussing the list of exemptions. Are you all with me? We are discussing the list of exemptions. And can you read the second one? Reimbursement of expenditure actually incurred on medical treatment. And what is that? If medical expenses incurred by the employee for his treatment or treatment of any member of his family in any hospital maintained by the government or local authority or any other hospital approved by the government. You are incurring a treatment in government hospital. First of all, it is very cheap. Not free, small costs are there. For surgery and all, there will be some amount. If that some amount also reimbursed by the employer, then nothing shall be taxable. Are you with me? You are going and undergoing a treatment in either a government hospital or a hospital maintained by local authority. What is hospital maintained by local authority? Hospital which is owned by taluk hospitals or hospital under the corporation, under panchayat, that primary health center, etc. are the hospitals maintained by LA, local authority. Or a hospital approved by the government, then all the treatment costs shall be fully not taxable, or we can say exempted, no problem. Then what is the second bulleted point? In respect of prescribed diseases including illness relating to COVID-19 or ailments in any hospital approved by the principal chief commissioner or chief commissioner. That means, say you have some prescribed diseases like cancer, tumor, etc. You are undergoing a treatment in a hospital which is recommended or approved by the principal commissioner or chief commissioner of income tax. For that, your employer is reimbursing the amount or employer is sponsoring the amount. Nothing shall be taxable because we already know that you are in agony. You are having those kinds of diseases. You don't have money. That's why you are begging for your employer to pay the amount. Now, when he pays the amount, department says that, perquisite, okay, pay us the taxes. So that is very cruel. So no problem. You don't have to study which all are the prescribed diseases and all, like cancer, tumor, etc. So moving on to the third point. Can you read the third point? Premium paid to effect an insurance on the health of employee. What is the first point? any premium paid or reimbursed by an employee to effect an insurance on the health of employee. Insurance scheme should be approved by the central government or IRDA. What is IRDA? Insurance Regulatory Development Authority. Very simple. Without IRDA approval, nobody can run an insurance business in India. If examination question they are saying it is an unapproved by IRDA, then not approved. Because it is the wish of examiner how to set the question. Okay. So in India, you cannot legally run an insurance business without the approval of IRDA. So all the insurance will be approved only. Are you with me? Are you with me? Yes, so what they are saying here is very simple. Say you have a health insurance. You have what? Health insurance. And who pays the premium? Employer. You are who? Employee. And your employer pays health insurance premium. In that case, you are getting a benefit. Why? Because you don't have to pay any premium. But no worries, that premium paid by your employer shall be fully not taxable. It is outside the scope of taxability. Are you with me? Now moving on to the next one. Can you read the last one under this? Read the last one. Amount paid towards expenditure incurred outside India on medical treatment. It is actually comedy, okay? Listen. You are undergoing a medical treatment which is overseas. You are planning to visit USA for your medical treatment. When you are going to USA, what all are the associated costs that may come? Traveling cost, then accommodation, then the medical expenses, the food, okay? Traveling, then accommodation, medical expenses. In accommodation, food also will come. Are you with me? All right. So department say, so you are taking one more person with you because you are going abroad. You have some illness and you don't want to go alone. You have taken one attendant. So for the attendant, what are the other costs incurred? No same cost. Medical expenses varadu. Okay. Except medical expense. Say attendant thought anyways we are going to US. So let me also treat, okay. I have this, that and all. Appadiyella varadu, okay. So for the attendant only traveling cost and accommodation. Are you with me? Every cost have been reimbursed by the employer. Assume everything is reimbursed by whom? By the employer. Let's understand how to claim the exemption or how to compute the taxable value out of it. So listen friends, amount paid towards expenditure incurred outside India on medical treatment, how to do? Number one, medical expenditure abroad incurred for the employee or member of his family, paid or reimbursed by the employer, is exempted to the extent permitted by Reserve Bank of India. Are you with me? First of all, if you want to undergo a treatment, you should transfer money from India to outside India. And that transfer is under FEMA. It is called as LRS. Hope you have studied that LRS. That is a new addition to your new syllabus as a part of your law. Liberalized remittance scheme. It is under FEMA. Are you all with me? Or don't worry, you will study that, okay? Or up to 250,000 US dollars. Indian rupees na onnu illa. Okay. Anga poi paathitta apdiye thirumbi vandadala. 250,000 US dollar you can transfer without any special approval. Forget about that. Forget about that. That is actually not a part of our syllabus and it was just explaining that, okay? So listen, very simple. You are planning to undergo treatment overseas. Either you or you being the employee or your member of household is planning for a overseas treatment. So what they are saying is medical expenditure abroad incurred for the employee or the member of family paid or reimbursed by the employer is exempted subject to the limit permitted by RBI. So in examination question they will clearly mention what is the limit. You don't have to remember the LRS and you don't have to write anything. They will mention the limit. Are you with me? Say for example, you incurred 1 lakh. They are saying the limit is 70,000. Then you can claim exemption only up to 70. The rest 30 shall be taxable. Are you with me? What is the second item? Cost of stay abroad for the patient and one attendant or caretaker. That I've said. You are taking one along with you as an attendant or a caretaker. You are taking one more with you. No problem. Cost of stay abroad is exempted to the extent permitted by RBI. The cost of stay abroad, that means in the hospital you have to book a room. that definitely reimbursed by the employer is again exempted in your hands. And what is the third one? Cost of travel of the patient and one caretaker exempted only when the gross total income of the employee excluding this cost of travel perquisite does not exceed 2 lakh. What does that mean? Very simple. Practically, nobody will get the exemption for the cost of travel. Why? The condition what they are saying to claim the exemption for the cost of travel for you and for your relative. That means the attendant is what? Your GTI should be less than or equal to 2 lakh. GTI means gross total income. If your GTI is 2 lakh or less, then what is your designation in the company? The lowest level. No company will sponsor a lowest level employee to undergo a overseas treatment. Yes or no? Yes or no? Yes, so what department say is like, if you want to claim the cost of travel as an exemption, then your gross total income should be how much? 2 lakh. And for determining that GTI, don't add this cost of travel because you don't know whether that cost of travel is taxable or not taxable. Yes or no? For checking whether it is taxable or not taxable, we are determining whether it is 2 lakh or less. So for the time being, you exclude that and you compute your gross total income excluding that cost of travel. If the gross total income is more, then you add that also. You add that cost of travel as well to determine your total income. Is that clear? Yes, is that clear? Yes, we'll solve a small question, okay? Because I understood. So don't worry. We'll solve a very small question. So I want all of you to read this question 12. Basic question it is. Your institute study material question only. Quickly solve this and give me the answer. Quickly solve this and give me the answer. What is the first one? Medical premium paid for ensuring the health of Mr. G. Who's Mr. G? He is the employee. Because from his employer, that's what the question says. Okay. So that is exempted. Nothing shall be taxable. What is the assumption? IRD approved insurance only. Are you with me? Are you with me? Yes, what is number 2? Treatment of Mr. G by his family doctor. Taxable. Taxable. Then treatment of Mrs. G in government hospital. Mrs. G, family member. Government hospital, exempted. Then treatment of Mr. G's grandfather, taxable. Why? Because grandfather is not your family member. Grandfather, according to the income tax law, is not your family member. She was saying, no, sir. Don't worry. No. Moving on to the next one. Treatment of Mr. G's mother by family doctor. What to do? Family doctor, fully taxable. Fully taxable. You cannot claim the benefit of exemption. You cannot claim the benefit of exemption. So we can say taxable. Then, what is next? Treatment of Mr. G's sister, dependent, in a nursing home. Definitely taxable. Nursing home means it's just like a private hospital. Okay, fully taxable. Then, treatment of Mr. G's brother, independent, taxable. Why? They are saying independent, hence it is fully taxable. Then, what is next? Treatment of Mr. G's father, 75 years and dependent abroad. Expenses of staying abroad of the patient and limit specified by RBI is 75,000. So limit is there. So these two together outside India they have expended 80. Limit specified by RBI is 75 and hence how much is exempted? 75 is exempted and the rest 5,000 is taxable. Are you with me? Now how much is the taxable total? 5 plus 12 plus 8 plus 3 plus 6 plus 5. That is 39,000 is the taxable perquisite. Oh, sorry. 39,000 is the taxable perquisite. I hope most of you might got the right answers. Are you all with me? So moving on, friends, moving on with the next one. That is valuation of, this is another important item, that is valuation of residential accommodation. Let's understand what exactly is the valuation of residential accommodation. Are you all listening? Yes, sir. The chances of asking this is very, very high. Why? Because there is a new change in this. Income tax department came up with a amendment with effect from 1st September 2023. The problem here is you have to study both the old as well as new amended thing, because your previous year is from 23-24. Starts with 1st April 2023 and ends with 31st March 2024. This amendment is with effect from 1st September 2023. That means half the year, not half the year, the first 5 months old. From September to March, new. Are you with me? Let's understand how to value the rent-free accommodation. Soon after finishing this, I'll let you go, okay? Yes, soon after finishing this, I'll let you go. Don't worry. It's just 6:20, okay? Yeah. So let's understand what exactly is this point. So friends, what do you mean by rent-free accommodation? Rent-free accommodation. Either the employer will provide me a house, or the employer will reimburse my rent. That is said to be rent-free accommodation. If I'm getting a rent-free accommodation, am I getting any benefit? Of course, yes. I don't have to buy a house, or I don't have to pay any rent. I'm of course getting a benefit. If I'm getting a benefit on account of employer-employee relationship, then we should tax that benefit as perquisite. Are you with me? If I'm getting a benefit on account of employer-employee relationship, then we should tax that particular benefit as what, friends? Perquisite. And that's what we are about to discuss right now. So rent-free accommodation can be divided into two. First one is unfurnished accommodation. What is unfurnished accommodation? Only the building, fan, light is there and structure is there. There is no furniture like table, chair, electronics, etc. is not there. Are you all with me? So if the core building along with the fan and lights is not considered as furniture, only the basic building is there without any furniture, then we will call it as UFA, unfurnished accommodation. If the house provided to you have all the amenities, or it has bed, it has TV, fridge, washing machine, etc., then we can say it as a furnished accommodation. So we will value both the UFA and FA, that is furnished accommodation and unfurnished accommodation. First, let's learn how to value the perquisite in relation to unfurnished accommodation. So under that, what is the first one? You check whether you are a government employee. Are you all with me? Are you all with me? If you are a government employee, then how do you value this unfurnished accommodation? Very simple. You need to determine the license fee determined by the government minus rent payable by the employee. What do you mean by license fee? License fee is just like an annual rent. The government will have a valuation that is called as license fee. Based on your designation, you will get a house with a higher license fee. Say for example, if you think about police, the DGP will get a house which have a higher license fee, just like an annual value. And the SI will get comparatively lower lower annual value house. So instead of saying annual value, the government is using the word license fee. Hope you have seen that government quarters. Have you seen government quarters? And every quarters will have a license value, just like an annual value of a property. That annual value is your taxable perquisite minus rent defini payable by the employee. If you are paying some rent, then you can deduct that. Are you with me? What if the annual value is less compared to the rent? Say annual value is 1 lakh and you pay 1,10,000 as a rent every year. Then what to do? Nothing taxable. That's it. Don't claim any deduction and all. Are you with me? Are you with me? If the annual value, that means license fee of a property is 1 lakh and the rent paid by the employee is 1,10,000, you are not getting any benefit because you are paying more than the annual value. And hence nothing shall be taxable and you cannot claim that 10,000 as a deduction and all. Are you all here? The question is whether it is taxable. The answer is no. Now, moving on to the next one, friends. So if you are a government employee, then the license fee determined by the government minus the rent payable by the employee shall be taxable. What if you are a non-government employee? What do you mean by non-government employee? Other private sector employees. Okay, if you are a private sector employee, then you need to check whether the house is owned by the employer. That means employer have a house, he have given that particular house to you, and you are staying in that particular house. In that case, how to value? The valuation of the house depends upon the population of the city where the house is situated. Are you all listening? Are you all listening? If the employer has given a house, then the valuation of the house depends upon the population of the city where the house is situated. So let's understand how to value that particular thing. Can you read the first box? Is more than 25 lakhs. Say the population of the city where the house is situated is more than 25 lakhs. Then how to value? 15% of the salary shall be the value of perquisite. There is no other method, so department comes up with an equation. What is an equation? If the house where you are residing is situated in a city where the population is more than 25 lakhs, okay, then what to do? You compute the salary, and 15% of that salary shall be the taxable value of the perquisite. It's just an equation, okay? And how do you compute salary? Because there is a separate definition for the salary over here. Where is the definition? I think that definition is missing. Don't worry. I'll make you write that definition, okay? I accidentally skipped that definition when I prepared this notes. Don't worry. I'll make you write that particular definition once we complete this. So there's a definition for the salary. It's not standard salary. We have a separate definition for that. Are you all listening? Yes, are you all listening? Yes, sir. Great. Now, listen. Say, what is the point number 2? If the population of the city where the house is situated is less than or equal to 10, more than 10 but less than or equal to 25. It is more than 10 but less than or equal to 25 lakhs. Then how do you value? 10% of the salary. What if the population of the city where the house is situated is less than 10 lakhs? Then how do you value? You have to add less than or equal to 10, okay? Less than or equal to 10 lakhs. Then how do you value? 7.5% of the salary shall be the taxable perquisite. So listen friends, listen. Very simple, very simple. If the house is owned by the employer, and the house is in a city where the population of the city is more than 25 lakhs. How do you value perk? 15% of your salary. Are you with me? Yes, take the annual salary, apply 15%. And for that salary have a separate definition that we will cover later. You take the annual salary, apply 15%, and that will be the taxable value of perquisite. What if the population of the city where your house is situated is more than 10 but less than or equal to 25 lakhs? Instead of 15, it is 10%. What if the population of city is less than or equal to 10 lakhs? 7.5% of the salary. Are you with me? But there is a problem. What is the problem? A new amendment came, and that amendment is with effect from 1st September 2023. The CBDT has widened these notifications, substituted Rule 3.1 to specify the manner for determining the value of residential accommodation provided by the employer during the previous year. And what is the new manner? Where accommodation is provided by any other employer, that means other than government employer, then where the accommodation is owned by the employer, how do you value the perk? You check whether the population of the city is more than 40 lakhs. If yes, then percentage is 10%. If the population is more than 15 but less than or equal to 40, then 7.5%. In other case means what? Less than or equal to 15 lakh population, not 18, okay? 15 lakh population, then 5% of the salary. But the problem is, your PY starts from 1st April 2023 and it ends with 31st March 2024. Yes or no? In this period, Only with effect from 1st September 23, this new rule is there. With effect from 1st September 23 only, this new rule is effective. Then what to do? When you compute the perquisite value, first of all, you compute the salary from April, May, June, July, August. Till August, 5 months, salary into, if the population of the city is more than 25, 15%. Are you with me? With effect from 1st September, that means September, October, November, December, Jan, Feb, March, that means 7 months. How to compute? Check the population whether it exceeds 40, then 10% of the salary. Whether the population exceeds 15 lakh, then 7.5% of the salary. If the population is less than or equal to less than or equal to 15 lakhs, then 5% of the salary. You have to split. Annual salary have to be splitted into first 5 months salary. Then apply that 15, 10, 7.5. Then next 7 months, apply that 10, 7.5, 5%. Depends upon the population. Is that clear? Is that clear? Yes, sir. You have to do 2 calculations. Only for this year. Because from next year, if the previous year getting updated, then what will happen? Only the new rule is there. Old rule you don't have to study. Really unfortunate. You have to study both for 23, 24 previous year. Are you with me? Yes, are you with me? Yes, sir. Yes. So this is how you have to compute. Yes. Salary definition has been given over here. Salary is equal to basic salary plus dearness allowance, forms of the retirement benefit plus commission, bonus, taxable portion of allowance. Excellent. That is the correct definition for salary over here. Don't worry. We will discuss that. Okay. Somebody have already typed it in chat. Okay. Thank you. Yes. So that it is easy for me. Yeah. Don't worry. I will make you right. Okay. Yes. So this is how you have to compute the thing. Are you all with me? Are you all with me? Yes, sir. Now you tell me, what if that property is taken on lease or rent? What if the property is taken on lease or rent? You need to check whether where the accommodation is provided in a hotel. Are you all with me? You need to check whether the accommodation is provided in a hotel. Irrespective of the fact that whether you are a government employee or non-government employee, if the accommodation is provided in hotel, how to value the perquisite? Read. Lower of 24% of the salary paid or payable or the actual charges payable to such hotel, whichever is lower. Either 24% of the salary or actual hotel bill, whichever is lower, shall be the taxable value of perquisite. There is no amendment for this. Is that clear? There is no amendment for this. So whether you are staying in a hotel for before 1st September or after 1st September, there is absolutely no change in this particular thing. It will be always either 24% of the salary or actual hotel bill, whichever is lower for a year. Are you with me? Now, how do you value the perquisite in other cases? What do you mean by other cases? Other rented house. If it is a proper home, then how do you value? Can you read this box? Hello, read it properly. Lower of. What is that bracket? As reduced by the rent payable by the employee. That is always there. If you are paying something, then you have to net it off. If you means if the employee pays something to the employer for the benefit that he accepted, then you have to always net it off. Are you with me? So, in the other case, if the house is rented, that means if it is a proper rented house, then how do you value the perk? Lower of 15% of the salary or rent paid by the employer, and you have to reduce the actual recovery from the employee, but there is an amendment also. What is that amendment? Read this part B. Where accommodation is taken on lease or rent by the employer. You can write other than hotel. Other than hotel. Whether the accommodation is provided in a either where the accommodation is taken on lease or rent by the employer, other than hotel, then you tell me how do you value the perk? Actual amount of lease rental paid or payable by the employer, or 10% of salary, whichever is lower. What is the difference then? Instead of 15%, the limit they reduced it to 10%. That's it. There is no other difference. But, when you compute it in exam, till April to August, it is 15%. From September to March, it is 10%. Depends upon how the question is. Say, for example, the employee is getting a benefit from 1st January 2024. If they say, only apply the new law. Are you with me? If the question is for throughout the year, then split that into 2 and compute the perquisite. Are you with me? Yes, are you with me? Yes, not yet over. We have completed only what? Unfurnished accommodation. Now you have to furnish the accommodation. Yes or no? Let's understand how to value the perquisite of furnished accommodation. We have time. Okay, don't worry. So let's complete the furnished accommodation and let's complete the other things in relation to this. Thereafter we will think about discussing other things. Okay. Yes. So furnished accommodation, let's understand how to value the perquisite of furnished accommodation. So tell me, very simple. Furnished accommodation, you can do it in a very simple manner. First you value the unfurnished accommodation. Then add the value of furniture. Done. Whether it is furnished or not furnished, there is a structure. Yes or no? Yes. So if it is a furnished accommodation, then what to do? Taxable value of unfurnished accommodation. How do you value unfurnished accommodation? That's what we have learned in the other side. Are you all here? Yes. So you compute the taxable value of unfurnished accommodation, then add 10% of the original cost of furniture if owned by the employer. Employer bought a washing machine worth 1 lakh. And it has been provided in the house, given to the employee. For the whole year, take the 1 lakh worth furniture. Take that, 1 lakh worth washing machine. What I said, washing machine or furniture? Whatever it is. Take that 1 lakh worth asset. Then into 10% for every year. That's it. So 1 lakh into 10%, that will be 10,000. You compute the UFA at 10,000 for a year for that furniture. Or washing machine or whatever it is. Are you all with me? What if employer took that washing machine on lease? Employer took that washing machine on lease, then higher charges. The higher charges you have to add to compute the value of furnished accommodation, and there is no amendment in this. Not yet over, not yet over. Close pannade, okay? Not yet over. Are you all with me? Are you all with me? Now I want all of you to write the definition of salary over here. I missed that. Okay. So I'll write it here. I want all of you to take a copy of the definition of the salary. Thereafter, we will solve a small question, okay? Because since there is an amendment and your institute study material also have done the question in the old manner. So I'll make you solve a very small question, okay? Very small. Maximum we'll take half an hour. Chumma sunnai, okay? Maximum 35 minutes is more than enough. All right, so let's write the definition. So wherever space is there, So I have some space over here. The same material has been printed to you, okay? So you also should have some space over here. Yes. Sir, time's up. Okay, Kanna. So they have set some timer and all, don't worry. So, yeah. So please write, salary means basic salary plus DA forms part of retirement benefit. RB means what, friends? Retirement benefit plus taxable allowances plus bonus plus commission excluding perquisites and excluding employer's contribution to PF. Employer's contribution to PF, Provident Fund. This is the definition for salary for the purpose of computing RFA, rent-free accommodation. Basic salary plus DA forms out of the retirement benefit plus taxable allowance plus bonus plus commission excluding perquisites and excluding employer's contribution to the Provident Fund. Whether it's taxable or not taxable, you can exclude these two items. Okay. Yes. Now let's solve a very small question and I'll let you go. Okay. Have you completed this definition? Yes, online friends, have you all completed this? So friends, you have to, for that you have to talk to the, I don't have an access to your group, okay. So you have to talk to the KSA team, they will make the arrangements. Yeah, so listen, we will solve a small question which is not there in your sheet, okay, because in the sheet I have only put some lengthy questions. November. Okay, solve question 13. Solve this question 13. Read this question. It's an easy question only, okay. So friends, let's solve it together. Listen, Mr. C is a finance manager in ABC Limited. The company has provided him with rent-free unfurnished accommodation in Mumbai. He gives you the following particulars. So the company has provided means what? Who owns the house? Who owns the house? Employer. Okay. Now it is in Mumbai. So what is the population of Mumbai? More than 40. Okay. More than 40 anyways. That actually we also don't know. Because India last preceding census was in 2011. So nobody knows what is the population of the cities in India right now. So it is a chaos actually. So what I can tell you is, if the city looks like a populated city like Chennai, Mumbai, Hyderabad and all, they say, you assume that it is more than 40. Are you with me? I think in November 23, they have created a question and they said Hyderabad or something. Okay, they asked Hyderabad or something without giving the population. So assume it is more than 40. At that time, it was more than 25. Are you with me? Are you with me? Yes. So let's see, it's Mumbai. So basic salary is there, DA is there, bonus is there. How do you value the perk? Compute the salary and apply the rates that we have learned. Now, even though the company allotted the house on 1st April 23, he occupied the same only from 1st November. Let me ask you one doubt. Do you have to value the perquisite for the whole year or only from 1st November? 1st November. It's not related to the allotment. It's all about whether you started enjoying it. Are you with me? So from November onwards, how much is the salary? Basic salary you have to consider. DA's 30% is for the retirement benefit. How much is 30% of 2,000? 600 rupees. Then bonus you have to consider 1,500. So how much will be the salary? 6,000 plus 600 plus 1,500 into November, December, January, February, March, 5 months. It will be 40,500 will be the salary into what is the percentage that you have to apply? 10% because the period is on when November, that is after September 2023. So into 10% that will be 40,50. 40,000, sorry, 4,050. Are you with me? Are you with me? Can you read question 14 and solve that also? Like it's a continuation of this question, okay? Read that and give me the answer. After that we'll leave. Okay. Yes, very good, very good. A lot of answers that I'm getting. Excellent. Yeah. Okay, okay. Wow, understood, understood. Chat box. And what is the difference in question 14? Assume it is a property taken on lease. Are you with me? Are you with me? If it is lease, then how do you compute the perk? 1,200 into 5 months is the lease rent. How much is 1,200 into 5 months? How much is that? 6,000 rupees. Or, what is the second one? 10% of the salary for that 5 months. How much is 10% of the salary for that 5 months? 4,050. So 4,050, whichever is lower. Which is lower? 4,050, not yet over, but you are paying how much to the employer? 1,000 per month you are paying to the employer. So you tell me, how do you value that? 1,000 per month means 1,000 into 5 months. That will be 5,000, and nothing shall be taxable. Why? Because you are not getting any benefit. You are paying more than required according to the income tax law. Don't claim it as a loss and all, okay? So 4,050 minus 5,000, you have to write nil. Nothing shall be taxable. Is that clear? Is that clear? We completed rent-free accommodation, right? Valuation of rent-free accommodation. That's what the last topic we have completed yesterday. And today, we have few more perquisites pending. We have a motor car and other things pending today. So, listen, before moving on to that, hope you remember, yesterday we have categorized perquisites into 3. Which are the 3 category of perquisites we had? Do you remember? We have categorized perquisites into 3 yesterday. Which were the 3 category of perquisites? Fully exempted perquisites, fully taxable perquisites, and perquisites not partly. There is nothing called partly, okay? Perquisites taxable only in the hands of specified employees. These were the 3 splits that we were discussing yesterday, okay? So it was fully taxable, fully exempted, and perquisites taxable only in the hands of specified employees. Now let's understand what exactly is the specified employee. So we'll discuss what is specified employee and we'll move on. So listen friends, specified employee simply means department say any of these 3 categories, if an employee satisfies any of these 3 conditions, not all, any of these 3 conditions, then that employee is called as what? A specified employee. And we'll make use of the specified employee thing whenever we discuss the other perquisite valuations as well. So tell me meaning of specified employee. Who's the first one under the specified employee category? Director employee. If you are a director employee of a company, you will be always considered as a specified employee. So you tell me, are all the directors employees of a company? Can you call all the directors as employees of the company? No. Whole-time directors, managing directors, etc. are normally the employees of a particular company. Independent director, alternate director, nominee director, etc. will not become the employees of a particular company. So what we can say is, if you are a director as well as an employee of a company, then we can say, if you are a director employee of a company, then we can say that you are a specified employee. Yeah. Moving on to the second category of specified employee. What is that? An employee who have substantial interest in a company. What do you mean by this substantial interest? Substantial interest in respect of a company, excellent. In respect of a company, say for example, if I am a shareholder of a company holding 20% or more share capital. Okay, yes, excellent. Yes, Sharon. If I am a shareholder of a company holding 20% or more share capital of a particular company, then I am said to have substantial interest in a company. If I have a substantial interest in a company and I am the employee of that particular company, then department will treat me as what? Specified employee. Are you all with me? So 2 things. Number 1, director employees. Number 2, an employee as well as a shareholder who have 20% or more share capital. That is what is called as an employee who have substantial interest in a company. Now moving on, employee drawing in excess of 50,000 per annum, not per month. If you are an employee who have a taxable salary of how much? 50,000 in a year, you will be considered as a specified employee. That means, technically speaking, practically speaking, all of them are specified employee. It's annual salary, not monthly salary, okay? Per annum. If you're drawing a salary of 50,000 per annum, according to the income tax law, then again you will be considered as a specified employee. So practically we don't have to split them into specified and non-specified, because 99% of the employees will be specified only, okay? But for the purpose of solving a question, you should know what is specified and what is non-specified. So 3 of the types of employees are normally called as what? Specified employees. You tell me which all are the 3 types? Director employee, employee having substantial interest, and employee drawing a salary of in excess of 50,000. Now we will understand what is the relevance of this specified employee definition, okay? When we move on with the after deduction of 16(1)(a) or not, after deduction, yes, there is a definition for this salary, but you don't have to study that particular definition for the examination purpose, okay? It is after deduction of 16(1)(a), yes. So the point is, listen, say what we are saying is, why we are using this specified employee thing, that you will understand when we move on to the next perquisite valuation. So moving on to the next perquisite valuation, that is valuation of motor car. Are you all listening? Are you all listening? Let's understand how to value or how to do the valuation of a motor car. See, listen. What they are saying is, if an employer is giving a motor car to the employee, are you all listening? If an employer is giving a motor car to the employee, see, this motor car is not given, it's just like, it's not transferring the ownership of the motor car. They are not transferring the ownership. Rather, what the employer does is, the employer gives this motor car to the employee, and the employee can use it for his official purpose, personal purpose, and he can mix up official purposes as well as personal purpose. In such a case, what exactly are the benefits enjoyed by the employee? How do you value the benefit enjoyed by the employee? That's what we are about to discuss. Are you all with me? So let's understand what all are the possibilities. So we have made a chart in a way that it covers all the possibilities. Okay, all our charts are made in a way that it covers all the permutations and combinations. So let's see. So the first possibility here, what we say is, when car is owned by the employee. So in the first possibility, the employee have a car, and all the running and maintenance charges are met by the, say, either employer or the employee. So these are the possibilities. Possibility number 2, when the car is owned or hired by the employer, and the maintenance and running charges are met by either employee or the employer. So these are the 4 permutation and combination that we are about to discuss. So we'll start with the first one. So can you read the first point? Where car is owned by the employee, and maintenance and running expenses are met by the employee, and the car is used either for official purpose, either for personal purpose, or for official as well as personal purpose, not a taxable perquisite. Why not a taxable perquisite? My car, my running and maintenance expenses. I am not getting any benefit from anyone. Yes or no? Say I am an employee of a company, I have a car and I am maintaining the particular car. I am fueling the car, I am repairing the car, I am doing everything in relation to the car. Am I getting any benefit? No, I am spending for my own purposes. Whether I use it for official purpose, whether I use it for personal purpose, whether I mix it up, doesn't make any difference. Are you all with me? Now possibility number 2 is, car is owned by the employee and maintenance and running charges are met by the employer. Then there will be a difference. Maintenance and running expenses are met by or reimbursed by the employer, and the car is used, say, for official purpose. I have a car, the car's maintenance and running charges met by the employer, and I'm using that car for what purpose? Official purpose. Then you tell me, how much will be the taxable perquisite? Nothing taxable, because if I'm using that car for official purpose, I'm not getting any personal benefit. If I'm not getting any personal benefit, nothing shall be taxable as perquisite. Are you with me? Are you with me? So the point is very simple. I have a car and that car is completely sponsored by my employer. That means the running and maintenance charges are completely sponsored by my employer. And I'm using that particular car for what purpose only? Official purpose only. Then I'm not getting any personal benefit and hence nothing shall be taxable as perquisite. This is what the department says. Moving on to the next case. Can you read the next case? Car's maintenance and running charges are met by the employer and the car is used for private purpose. Private means what purpose? Personal purpose. Now you imagine, I have a car. I'm using exclusively it for personal purpose. Are you all listening? I'm exclusively using that car for what purpose? Personal purpose. So, now, listen. For official purpose, so for private purpose, if you are using the particular car, so you are owning a particular car and the car is completely sponsored by whom? Car is completely sponsored by employer. Then let's understand for private purpose, actual expenses incurred by the employer is taxable in the hands of all the employees. So what they are saying is, I'm owning a car and that car is completely sponsored by whom? The employer. Okay, the employer takes care of all the running and maintenance charges. So you tell me, I'm using that particular car for only what purpose? Personal purpose. If I'm using that particular car only for personal purpose, you tell me what is the benefit that I'm getting? The full maintenance running charges is met by my employer and I'm using that particular car for my personal purpose and I'm getting that, and I don't have to incur any running and maintenance charges. That entire running and maintenance charges will be the taxable value of perquisite. It is common sense only. Are you with me? So what they are saying is, when you value perquisite, they say actual expenses incurred by the employer is taxable in the hands of all employees. This will be taxable in the hands of all type of employees. That's what the department says. Are you all with me? So you don't have to by heart this thing, okay? It's actually common sense. I have a car. My car is completely sponsored by my employer. And I'm using that particular car only for personal purpose. Then the entire sponsored amount shall be my taxable value of perquisite because it is a benefit that I'm getting due to my employer-employee relationship. Now, moving on to the next one, friends. I own a car and the car's maintenance and running charges are met by whom? Employer. And the car is partly for official and partly for private. I'm using it for official as well as private purpose. I'm mixing that particular car. Okay. So, if I'm mixing that particular car, then there is a practical difficulty. You tell me, say, some journey is personal and some other journey is by official. So is it practical to note down the kilometer of each journey and maintain a register? It is possible but not practical. It's possible because whenever you start a journey, you note down the kilometer and when you come back, you note down the kilometer. But nobody lives like that. Are you with me? It is possible but not practical. Department also know that. Okay. Because most of the employees will say that everything for official only. Because assessing officer cannot come and check whether you are going for official journey or personal journey. So department, what they have come up with, they have come up with an equation. Rather than finding the actual value of perquisite, department say, we will give you an equation. You apply that equation. Whatever figure comes in as a result, you use that figure as your taxable perquisite value. Rather than bifurcating. Or if you want to maintain separate records, you can do that. Are you with me? Say, for example, you are such a disciplined employee. Okay, whenever you travel, you note down every travel and all. If you leave like that, no problem. So, what department recommends is, rather than maintaining or noting down all the kilometers driven, it is better to give you some equation. And that's equation, that's what we are about to discuss. So, if the car is owned by the employee, and maintenance and running charges met by the employer and the car is mixed up for official as well as personal purpose, then first you need to check the cubic capacity of the engine of that particular car. Are you all listening? If the cubic capacity of engine is less than or equal to 1.6 liters. What is this 1.6 liters? Have you seen this, say, Innova 2.5 liter or 3 liter engine? So 1600 cc, that's what 1.6 is. 2 liter 2000 cc, 3 liter 3000 cc. You find out the cubic capacity of the car. Normally a budgeter car's cubic capacity will be less. Okay, if it is a luxury or ultra luxury, then the cubic capacity will be more. So it depends upon the cubic capacity of the car, we will decide how to value the perquisite. Are you all listening? Are you all listening? Now, if cubic capacity of engine is less than or equal to 1.6 liters, that is 1600 cc, then let's understand how to value the perquisite. Say actual expenditure incurred by the employer. So you note down the total actual expenditure incurred by employer. You note that down. Then you deduct what? 1800 per month. You deduct what? 1800 per month. Say you've used that particular car for 12 months. Then 12 months into 1800 per month you deduct. Whatever the remaining value comes in shall be the taxable value of perquisite. So what department say? You note down the actual running and maintenance expenditure initially. Then you deduct how much? 1800 rupees from the actual running and maintenance charges. Whatever remaining, if something comes up, if there is any balance, that balance shall be your taxable value of perquisite. Are you with me? They provides a statutory equation rather than telling the employee to note down all the kilometer, which is not practical. So what they are saying is use this equation and find out the taxable value of perquisite. Are you all with me? Are you all with me? So that's what the department say. Now friends, listen. They are saying one more thing. If chauffeur is provided, then you can deduct another 900 rupees. What is chauffeur? Driver. If the employer is giving you a driver as well and you are using that particular car for official as well as personal purpose, then what you need to do is you can deduct an extra 900. That means along with the 1800 per month, if driver is also provided, you can deduct another 900 per month into 12 months. If you use that car for 12 months, then the remaining, if any, you deduct these two, and the remaining, if any, shall be the taxable value of perquisite. Are you all with me? Are you all with me? So what the department says is, you note down the actual expenditure, then you deduct 1800 per month. If driver is also provided, then deduct 900 per month. Then the value remaining shall be the taxable value of perquisite. Are you all with me? Are you all with me? And this will be taxable in the hands of all type of employees. That's what the department say. Now this equation or this statutory value is there only if you are what employee? Sorry, only if the car's cubic capacity is what? Less than or equal to 1.6 liter, or we can say 1600 cc. Say Maruti Swift will be around 1.2 liters if I am not wrong. 1.2 or something will be the cubic capacity of the car. Then Hyundai Creta. Creta have two versions, 1.5 liter version and 2 liter version is there if I am not wrong. I don't know. It is 1.5 liter if I am not wrong. You are teach super. Motivation also. Thank you. So coming back to that particular point, if cubic capacity of that particular car is less than or equal to 1.6 liters, that means 1600 cc, then you need to value the perquisite like this. Now moving on to the next one, what if the cubic capacity of the car is more than 1.6 liters? Yes. Sir, will they mention the cubic capacity in the question? Of course, yes. I mean, of course, yes. No need to worry about that. Okay, they will always mention the cubic capacity of the car. Otherwise, you need to by heart all the cubic capacity of all the cars which is available in India. That is not possible. Okay, yeah. So definitely they will give. Don't worry. So friends, listen. What if the cubic capacity of the car is more than 1.6 liters? Then how do you value the perquisite? Very simple. You write down the actual expenditure. Then instead of 1800, you deduct 2400. Instead of 1800 per month, you deduct what? 2400. There also, if driver is also provided, you can deduct another 900 per month. For driver, it is always 900. whether the car's cubic capacity is more than 1.6 or less than 1.6. If there is a driver, then always 900 per month. Are you with me? Are you with me? So point is very clear, friends. So the alternative we were discussing, if the car owned by the employee and maintenance and running charges met by the employer, and the car is used for personal purpose, then how do you value? The entire maintenance and running charges met by the employer shall be fully taxable. If the car is mixed for official as well as personal purpose, then how do you value? You go find out the cubic capacity of the car. That will be there in your examination. If the cubic capacity of the car is 1.6 or less, then how do you evaluate? Very simple. You note down or write the actual running and maintenance charges met by the employer. If driver is there, including the driver's salary, you have to note down. Then you deduct 1,800 per month. If there is driver, an additional 900 per month. If the cubic capacity of the car is less than or equal to 1.6 liters. And what if the cubic capacity of the car is more than 1.6 liters? You deduct 2,400 per month. If driver is also provided, then you deduct additional 900 per month. The remaining value, if any, shall be the taxable value of perquisite. What if there is no remaining value? Nothing shall be taxable. Are you with me? Are you with me? If there is no remaining value, then nothing shall be taxable. This is what the department say. And one more thing is there, car owned by me, running and maintenance charges met by me, then nothing shall be taxable irrespective of my usage of the car. If I'm using a particular car exclusively for official purpose, again, nothing shall be taxable because I'm not getting any personal benefit. Are you with me? Are you with me? Say, imagine I am employee of KS Academy and I'm making use of this particular video camera for taking classes. Is it a personal benefit? No, because I'm making use of this camera for what? Official purpose. So nothing shall be taxable in my hands. Are you with me? Good. So moving on to the second possibility or second alternative. What is the second alternative? Car owned by or hired by the employer. Car either owned by or hired by the employer. So let's understand what will we do. In case negative answer means adjust to the other income. No. Negative answer means nil. Nothing shall be taxable. Okay. It's not an expenditure. We are valuing the perquisite. So when you value a perquisite, if the answer is negative, that means you don't have to tax anything. It is nil. It's not an expenditure. Okay. All right. So moving on. Okay, sir, the thing when someone asked, what is this again? Old one? Okay, yeah. So, listen, where were we? The car is owned by or hired by the employer and the maintenance and running charges are met by the employer. So, listen, I don't have a car. I'm the employee, okay? I'm the employee. I don't have a car. My employer have given me a car. And he himself sponsors the entire running and maintenance charges. I don't have to incur anything. I'll get a car and he himself sponsors all the running and maintenance charges. Now you tell me, if the car is used for official purpose, nothing shall be taxable as perquisite. Why? Because I'm not getting any personal benefit. Now you tell me, if the car is used for personal purpose, that means private purpose only, then you tell me, I'm getting two benefits. What are the two benefits? First of all, I don't have to own a car. Second one, that car's running and maintenance charges is fully free for me. So I'm getting dual benefit, both ownership as well as running and maintenance charges. Are you all listening? Are you all listening? I'm getting dual benefit. One, I don't have to own a car. Number two, all the running and maintenance charges are taken care by my employer. Now let's understand how do you value the perquisite. So listen, in such a case, what department says the actual expenses including driver salary you have to consider as your taxable perquisite because that entire car is free for me. Are you all with me? The actual expenditure, and if there is driver, you have to include driver's salary as well. That will be fully taxable in my hands, provided I'm using that car for what purpose? What purpose? Private purpose. Private purpose means what purpose? Personal purpose. Okay. Yes. Can the employee also claim depreciation? No, you cannot claim depreciation. Only the owner of the car can claim depreciation. That too under PGBP, not from salary and all. Okay, you cannot claim any depreciation from salary. So coming back to the point, for private purpose of the employee, if you are using that car, then you take the actual expense including the driver's salary plus 10% per annum of the cost of the car to the employer, or higher charges taxable in the hands of the specified employees. For the time being, forget about this specified employee. Okay, for that I'll give you a tip how to remember whether it is taxable in the hands of specified employee or normal employee. That I can give you a tip after this. For the time being, forget about that specified employee. Now listen, if the car is owned by the employer and maintenance charges are met by the employer, I've told you that I'm getting dual benefit. What are the benefit? First of all, I don't have to incur any running and maintenance charges. For that entire running and maintenance charges met by my employer shall be fully taxable value of perquisite in my hands. That was the first part. Along with that, we should value the proportion of ownership of the car as well. Yes or no? We should value something for the ownership of the car as well. So what department says, along with that add what? 10% per annum of the cost of the car to the employer. That simply means, say for example, employer have given me a car valuing 10 lakh rupees and running and maintenance charges met by the employer is say 70,000 rupees a year. Okay, 70,000 rupees a year. Then how do you value the taxable value of perquisite? Very simple. How much is the cost of the car? How much is the cost of the car? 10 lakhs. First of all, you take the entire cost, then apply 10% for a year. So for the ownership, you have to show 1 lakh rupees as value of perquisite, plus that entire running and maintenance charges of 70,000 also will be taxable, and in total it will be 1,70,000. Are you with me? This shall be the taxable value of perquisite. Are you all with me? Are you all with me? So what the department says is, if you are using a car which is owned by your employer and all the maintenance and running charges are met by the employer, and you are using that particular car only for your personal purpose, then for the ownership, 10% of the cost of the car every year. And what if I'm using the car only for 6 months? Then 1 lakh into 6 by 12, that will be 50,000. Are you with me? Now, for a year, it will be 10% of the cost of the car for the ownership. Plus, you tell me, one more thing will come. The actual running and maintenance charges met by my employer, if there is driver, including driver salary, also have to be taxable perquisite in my hands. Are you all with me? Are you all with me? Excellent. Moving on with the next point. Sir, not clear in example. What is their cost of the car for the employer? 10 lakh. For a year, you read this, 10% per annum of the cost of the car to the employer have to be the taxable value of perquisite for the ownership. So 10 lakh into 10%, it will be 1 lakh value. Then running and maintenance charges met by the employer is 70,000. That anyways will be your taxable perquisite. So altogether it will be 1,70,000. No. If it is hired, that you tell me. If it is hired, then it will be the higher charges. Don't apply 10%. That's why we have written or higher charges. What does that mean? Every year, employer takes a car on rent. Oh, these are actually very simple things, okay? Every year, employer takes a car on rent. And the rental payment given by the employer is say 60,000. And the car is used by the employee for his personal purpose. Then you tell me what will be the taxable value of perquisite? What will be the taxable value of perquisite? Full 60,000 if the car is taken on rent and the annual rent paid by the employer is 60,000 and the car is given to the employee and the employer is using that car for the whole year, then that entire higher charges paid by the employer shall be the taxable value of perquisite in the hands of employee. Don't apply 10% and all. Are you with me? All right. Hope you understood, okay? Yeah, great. Now moving on to the next one, friends. Moving on to the next one, what is that? So we were discussing the car exclusively used for personal purpose. Now what is the third one? Partly for official and partly for private. That means you are mixing it up. You are mixing it up. Then what to do? Again equation. Again statutory equation, because it will be very difficult to bifurcate in other manner. So what they are saying is, if you are partly using it for official purpose and partly using it for private purpose, then how do you bifurcate? Very simple. If the cc of the engine does not exceed 1.6 liters. What is cc? Cubic capacity. That means 1600 cc. That also means 1.6 or less, or 1600 cc or less. In that case, how do you value? What they are saying here is, you take 1800 per month as the taxable value of perquisite. In the last chart, what we have shown, what we have seen is, you write down the actual expenditure, then deduct 1800. Yes or no? Here what they are saying, if the car is owned by the employer and maintenance charges read by the employer, and the car is used by the employee for private as well as official purpose, then how do you value? Don't deduct anything and all. You take 1800 rupees per month as the taxable value of perquisite. If the car's cubic capacity is less than or equal to 1.6. And if the driver, you can take additional 900. That simply means I have a car, a Swift car owned by my employer, given to me for official as well as personal purpose. Then how do you value perquisite? 1800 into 12 months. And there is driver also. Then 900 into 12 months. And can you help me? How much will be my total value of perquisite? 21,600. Is it 21,600 total? No. Add these two and tell me. How much is 1800 into 12? Total is 32,400. So 1800 into 12 plus 900 into 12, it will be 32,400, and that will be the taxable value of perquisite. Yes. That if only chauffeur is provided. Chauffeur means what? Driver. Now, so listen, moving on to the next one. What if the cubic capacity of the car is more than 1.6 liters? You tell me, what is the cubic capacity of the car is more than 1.6 liters. Then instead of 1800, it will be 2400. So for 12 months, if you used 2400 into 12, plus driver is also there, 900 into 12. That's it. Depends upon the cubic capacity, the value changes. If it is less than or equal to 1.6 liter, then 1800. If it is more than 1.6 liters, then 2400. Yes. Moving on to the next one. So what was this part of the chart? That is car owned by the employer. Maintenance and running charges met by? Maintenance and running charges met by employer. That's what we have learned till now. Now moving on to the second part of it. And what is the second part? Car owned by the employer himself, but running and maintenance charges are met by the employee. Running and maintenance charges are met by whom, friends? Employee. Now let's understand how do you value the perquisite over here. So let's see how to value the perquisite. That is, if it is used for official purpose, then you tell me how much is the perquisite? Not at all a perquisite. Why? Because you are using it for your official purpose, and nothing shall be perquisite. Nothing shall be taxable. Now, if it is used for private purpose, don't look at the chart. Even without looking at the chart, you can tell me. What is the benefit that you are getting? Car owned by the employer. Running and maintenance charges met by myself. Then what is the only one benefit that I am getting? I don't have to own a car. You tell me, how do you value the ownership? 10% of the original cost to the employer shall be the value. If the car is taken on hire, higher charges paid by the employer will be the taxable in the hands of employee. Are you with me? Only the ownership you are required to value, because running and maintenance charges are met by yourself and you don't have to value that. Are you with me? So moving on to the next one. What is the third one? If the car is used for partly official and partly personal, you are mixing up that car used for partly for official as well as partly for personal. Then you tell me, how do you value the perquisite? If cc of the car If CC of the car does not exceed 1.6 liters, then how do you value the perquisite? Instead of 1,800, 2,400 and all, you apply 600 per month will be the taxable value of perquisite. And what if there is driver? 900 per month if chauffeur is provided. Is taxable in the hands of specified employees. As I've told you, for the time being, forget about specified and non-specified. Okay, yeah. So, because we have I'll give you a easy way to remember whether it is specified or non-specified. Yeah. So, what they are saying is, if the car's cubic capacity does not exceed 1.6, the car is owned by the employer. Maintenance running charges met by the employee himself. In that case, how do you value the perk? Very simple. 600 per month. What if there is driver also? Additional 900 per month. Into how many months you used. That's it. What if the cubic capacity of the car is more than 1.6? What if it is more than 1.6? Instead of 600, add 900 per month. And what if there is driver? One more 900 per month. Are you with me? So 900 into 12 for the car, and for the driver if there, 900 into 12, another 900. Provided the driver's salary met by the employer. Here what we have learned is maintenance or running charges met by the employee. If the driver's salary is also met by the employee, then add nothing. Are you with me? Are you with me? If the driver's salary alone is met by the employer, then only that driver's thing, okay, will come into the picture. I hope it is clear. Alright, so this is how you value the thing. And there is one important note here. Can you read this note, friends? While valuing taxable perquisite, see, as we have seen yesterday, from the rent-free accommodation also, we have deducted the amount recovered from the employee. Here also, you have to deduct that. But don't deduct any recoveries from the employee when you are using statutory figures. Why? Because in statutory figure, we are only saying to tax something. So from that, you are not supposed to deduct anything more. Are you with me? Are you with me? So normally, except where the statutory figures are used, you can deduct the recoveries from the employees from the value of perquisite. But if you are using statutory figures, don't deduct anything. I'll give you another simple question to make you understand, because this is being a lengthier chart. I'll give you a question for a better understanding. So don't worry. So let's solve a question, okay? So can you go through this question number 16, question 16. Just solve this question and you'll get a complete idea on whatever we have discussed right now. Sonam has been provided a car of 1.7 liter by his employer, Vikash Limited. The cost of the car to the employer was 3,50,000. So employer have expended how much for the car? 3,50,000 for the car. And the maintenance cost incurred by the employer is 30,000 per annum. So the employer himself is maintaining the car. So you tell me which is the alternative. Car owned by employer. And you tell me maintenance and charges, running charges met by employer. Alright. So we have to make use of that second flow chart to solve this answer. Now, is there a driver? Yes. Chauffeur's salary paid by the employer 3,000 per month. So chauffeur means driver. Then find the value of perquisite for Sonam for assessment year 24-25 if the car is used for number 1, office purpose. You tell me how much is the taxable value of perquisite? Not taxable. Why? Because official purpose means nothing shall be taxable. What if it is used for personal purpose? If it is used for personal purpose, you have to add the dual benefit. Number 1 for the ownership. How much is the ownership value? 3,50,000 into 10%. So 3,50,000 into, I'll write here, okay, in the note. So car, second case, that is B. So 3,50,000 is the total cost of the car into 10%, and that will be 35,000 rupees. And how about running and maintenance charges? How much is the running and maintenance charges? They are saying 30,000 per annum. Okay. So the running and maintenance charges become 30,000 per annum. And how much is driver's salary? 3,000 per month into 12 months, and that will be how much? 36,000. And altogether, how much will be the total value? 1,01,000. Not yet over, and there is a note under that. And how much is that? What they are saying in the note? In case of B and C, the employee is being charged 15,000 per annum for such facility. So there is a recovery from the employee. You tell me what to do with the recovery. Except where statutory figures comes into the picture, you can always deduct the recovery. But if the statutory figure or the statutory equation you are using to value the perquisite, don't deduct any recovery from the employee. Do you remember this? Do you remember this? So what we need to know is we can deduct that recovery from employee. And how much is that? 15,000. So you deduct that, how much will be the taxable? Taxable perquisite will be 86,000 in option number B. Now, how about option C? What they are saying in option C, let's see. Option C, both purpose. What is both purpose? Official as well as personal. If it is official as well as personal, then you tell me how to deal with it. Car is owned by the employer. Maintenance and running charges met by the employer. Car's capacity is 1.7. Car is mixed for official as well as personal. You tell me what is the statutory value to be used. It is 2,400 per month into 12 months. Is there driver? Yes. So additional 900 per month into 12 months. Can you help me? What is the total? 39,600. Now the question is, can you deduct that recovery from the employee? No, you cannot deduct recovery from the employee because we are using statutory figures for the valuation. Are you with me? Are you with me? So imagine, see, why you are there saying don't deduct anything from the statutory value? Why? Because imagine, see, actual running and maintenance charges met by the employer is how much? Around 66,000. Out of that, we are only saying tax 39,600. From that, again, don't deduct any recovery. Are you with me? Are you with me? That's why whenever we are using statutory figures, don't deduct any recoveries from the employee. Yes. So moving on, friends, listen. Shh. Yeah. So moving on to the next perk valuation. So I am not valuing all the perquisites, okay? I have only selected important perquisites because as you all know, within 4 days, otherwise I have to stick on to 1 or 2 chapters. I don't feel that will be very useful for you because if that question comes from that chapter, you will get something. Rather than that, if I select the important topics from different chapters, then the possibility of, see, the things which we are actually discussing in this 4 days, definitely it will come. Because we are discussing most of the things, not everything, most of the things. Are you with me? So definitely, something will definitely come in the examination, that's for sure. Now, so friends, answer, this is the answer. So the next perk valuation that we are about to discuss, and what is the next perquisite valuation that we are discussing? That is valuation of, which is the next one? Concessional education. Okay, before that, I'll tell you that about that specified employees. Okay, listen, I'll tell you about the specified employees. Can you go to chart number 1, first chart? Car is owned by whom in the first chart? Car is owned by whom? Employee. Okay, car is owned by the employee. Then the taxability in the hands of all employees. Wherever you take, you can see that. All employees is there. Are you with me? Are you with me? Now when you come to the second chart, the taxability is only with the specified employee. Are you all here? So in the second chart, car is owned by the employer. Car is owned by the employer. So what is the tip to remember this? In all the perk valuation, we can use this tip. And what is the tip? Very simple. I'll tell you a story. Okay. Say for example, I'm an employee. I'm an employee. Are you all with me? I am an employee and I have something. I have what? Something. I told my employer, sir, please give me, sir. I don't have money to maintain this something. Okay. I don't have money to maintain this asset. Please give me something. I've given a request to my employer. Are you all listening? I am an employee and I have some assets. I've given a request to my employer that, sir, please give me something. I don't have money to maintain this asset. The employer, out of his love and affection, have given me some money to maintain the asset. The employer has given what? Some money to maintain the asset. In that case, that money that I get will be taxable perquisite in whether I am an specified employee or not specified employee. So if I am requesting and getting some benefit, I own an asset and I'm getting some benefit for the maintenance of that asset which I own, then it will be taxable whether I'm a specified employee or not specified employee. Chart 1. Car owned by me. Running and maintenance charges met by the employer. It will be taxable whether I'm specified or not specified because I asked them for the benefit. Are you with me? Are you with me? Option number 2. Car owned by the employer. He told me you use it. Okay. He told me to use it. Don't worry, you use it. Then it will be taxable only if I am specified employee. If employer's asset is given to the employee and he is saying you use it, in that case it will be taxable only if I am a specified employee. Are you all with me? Are you all with me? Yes, so this is how you have to, this story will actually help you. Wherever we go, wherever that specified employee reference comes in, you can use this. I have something, I requested for the money and I'm getting it, that will be taxable whether I'm specified or not specified. The employer had something, he has given me this and he told me to use it, then it will be taxable only if I am a specified employee. Are you with me? Are you with me? This will help you to understand what exactly is the specified employee and non-specified employee thing. Okay. So moving on, friends. Yeah, I hope you got the answer. Okay. Yes. Moving on to the next one. So we are about to discuss the next valuation. And what is the next valuation? Can you read the heading? Valuation of free or concessional educational facilities. So let's understand what exactly is this one. Okay, this is a little bit important. I mean, all the things which we are discussing are important. Okay, all the things which we are discussing here is being important because I have only selected important things. Yes. So what is the first one? If school fees of the children of the employee or any member of employee's household is paid or reimbursed by the employer on employee's behalf, it will be perquisite in the hands of all employees. Are you all with me? And what does this perquisite? What do you mean by this perquisite? Very simple. Say employees' children or their member, like a younger brother or younger sister or someone, is studying in some school or college, and that school fees or college fees, whatever it is reimbursed by the employer, then that is an added benefit given to the employee because it is the employee who have to suffer that fees. Yes or no? See, your children's study expenditure should be taken from your pocket. Your employer is giving that. That means you are getting a benefit. That benefit have to be taxable as what? Perquisite. Are you with me? Are you with me? So that's what the department say. If school fees of children of the employee or any member of employee's household is paid or reimbursed by the employer on employee's behalf, it will be perquisite in the hands of all employees. Is that clear? You don't require any equation or valuation methodology here because whatever the school fees suffered by the employer shall be the taxable perquisite in the hands of employee. There is nothing technical here. It is only common sense. Moving on. If the educational facility is provided in a school maintained by the employer or in a school by a reason of being employment at free of cost or at concessional rate. What does that mean? Employer have a school. In that school, employees' children will get free education. Are you with me? Are you with me? employer have a school, okay, or employer is the owner or sponsor of a particular school. Employee's children or member of household is getting what? Free education. He don't need to pay anything, or he need to pay only concessional amount. In that case, it will be perquisite only if you are a specified employee. The same story, owned by the employer, given it to the employee. The other one, I taken an admission for my children in some other school and I asked for the fees. It will be taxable in the hands of all employees. Second one, employer have the school. Okay, he told me, come, you join your children here, our school. I joined them. Then it will be taxable only if I am a specified employee. In the car also it is like that. Are you all listening? Superb. So this is what they say. So friends, listen. The benefit or the perquisite, what they are saying is, if the employee's children or any other member of his household is studying in a school which is owned by the employer, then the perk valuation have to be done only if you are a specified employee. Practically, we have to value in the hands of all the employees. Why? Because all the employees are specified employees. But in examination, they may give employees are non-specified employee or employees are specified employee. That bifurcation they may. Normally they don't, but they may. Okay, if they give that, you have to be careful. Remember the story. Owned by the employer, given it to the employee. You don't have to, otherwise it will be very confusing. You'll get mad, which all are taxable in the hands of specified employee, which all are not taxable in the hands of specified employee. All those things will ruin you. Not required. Remember the story, that is more than enough. So coming back to the point, friends. Now, how do you value this? How do you value this? Let's see. Can you read the heading? Value of benefit to the employee resulting from provision of free or concessional educational facility shall be determined as follows. Let's understand number one. Free education to the children in the school maintained by the employer or education sponsored by the employer. Listen. Free education. Read that. Free education to children in the school maintained by the employer or education sponsored by the employer. Employer have a school and free education is provided to the employee's children. In that case, how do you value the perquisite? The cost of education in a similar institution in the near locality. Any amount collected from the employee shall be reduced. So that simply means the normal market value of the school fees. If that school have some other students also, you check the market value of the school fees from that fees itself, okay? Or if that school is exclusively for the children of employee, that is also possible. Company like Tata and all in Jamshedpur, they are doing this. Okay, they are doing this. They have schools, sports academy, exclusively for that Tata Steel company employees. Are you with me? In that case, you check the similar fees in the locality. A school like that, how do they charge? That fees shall be, we'll say market value of the fees. That shall be the taxable value of perquisite in the hands of employees. And any amount recovered from the employee, you can definitely deduct as well. Are you with me? Are you with me? Now friends, there is a benefit here. What is the benefit? If school owned by the employer and the cost of education per child is 1,000 or less per month, then not taxable. This is a wonderful benefit given by the income tax department. What are they saying? Read that again. If school owned by the employer and the cost of education per child is less than or equal to 1,000, then not taxable, then nothing taxable. That simply means, say for example, I own a school. You all are my employees, okay? You all are my employees and I own a school. Your children are studying in this school. This is the school. Your children are studying in this school. Per month, the school is only charging 900 rupees. Per month from an outside student. Per month from an outside student, the school is only charging how much? 900 rupees or exact 1,000 rupees. No worries. Children are studying free here. No problem. Nothing shall be taxable perquisite. So that's what the department say. If the per month value of that education is less than or equal to 1,000, employees, don't worry. Nothing shall be taxable in your hands as perquisites. Are you with me? Are you with me? Now let me ask you one doubt. What if the school fees per month is 1,100? What if the school fees is 1,100? How much will be the taxable perquisite? Fully or excess? Fully or excess? There is a problem in that. if you read Income Tax Act, it's a little bit confusing. It's not clear whether it is fully or excess. So whenever institute comes up with an answer, they always give alternate answers. Assuming fully taxable or assuming excess taxable. Are you with me? There is always a confusion. If you read Income Tax Act, it's not clear. Normally in salary and all, nobody will file a case and all for this. So it is an unsettled case. So what you can do, what we do normally is, when we file a return, we only show the excess. Because we interpret everything in favor of our client. Are you with me? If a position is not clear, when we can interpret it in our own, yes, that is permissible, beneficial construction. We can say, we can do that, no problem, it's permitted only. So in examination, you don't have to write both, you can stick on to one. Either you can say fully taxable or that excess 100 only taxable, you can say that. Are you with me? Are you with me? Yes. If exceed 1,500 fully taxable, depends upon the view that you take, okay, both are possible, yes. Both are possible, depends upon the view. You can take either fully taxable or excess taxable, it's up to you. Now, moving on to the next one, friends, but there is one problem. This benefit will be given only if employees' children studies. If employees' brother or sister studies in a school owned by the employer and the per month fees is less than 1,000, fully taxable because this 1,000 rupee benefit will be given only to whom? Only to whom? Children. There is no limit for the number of children, okay? There is no limit here for the number of children. They are only saying child without any limit. Are you with me? That is for per child it is 1,000. If 2 children are studying, then 1,000. Per child, limit is 1,000, not all together. Are you with me? Are you with me? Now friends, listen. Where educational facility is provided to any other member of his household in an educational institution owned by the employer or in other institution. They say, for example, some other school, your children are studying in some other school and the employer sponsors that expenditure. Then what will happen? Cost of such education in similar institution in nearby locality minus amount collected from the employee. Note the benefit of 1,000 is not available. So listen, you tell me, when will you get the benefit of 1,000? When will you get the benefit of 1,000? Two things. First of all, the school have to be owned by the employer. Second one, your children should study in that school. And one more thing we can say, that cost per month should be less than or equal to 1,000. If it is more than, again take one view, either excess taxable or fully taxable. Are you with me? If your brother or sister is studying in a school owned by the employer, then fully taxable, no benefit if it is less than or equal to or more than 1,000. Is that point clear? Yeah. So listen friends, this is how you have to deal with the perquisite valuation in relation to the education. Are you all with me? Online friends, are you all with me? Please respond. The online. Yes, superb, great. All right, friends. So let's move on. Only after completing perquisites, now I'll give you a question. Okay, only after completing perquisites only, I'll give you a question because we don't have much perquisites now. We have few more. After finishing all the perquisites, I'll give you a lengthy question that has lot of perquisites. Okay. Yes. So moving on to the next one, can you read the heading, friends? Interest-free or concessional loan provided to the employee or any member of his household. What do you mean by interest-free or concessional loan? Imagine, say I'm taking a loan from SBI. I'm taking a loan from SBI. They will charge at least 10%. 10 to 12% they may charge as interest. Yes or no? Yes or no? I'm taking a loan from my employer and the employer is not charging anything. Am I getting any benefit? I'm taking a loan and I'll repay that loan. Okay, I'll repay that loan, but there is no interest. So I'm getting a benefit. I don't have to pay any interest for the loan given by my employer. That interest component shall be taxable perquisite. And we are about to discuss how to value that interest component. Are you all listening? So interest free or concessional loan. What is concessional loan? SBI interest rate is 10%. My employer is only charging 2%. Then how much is my concessional percentage? 8%. Are you with me? My employer is charging only 2%. My SBI rate is 10%. Then the concession that I'm getting is 8%. Now imagine, SBI is charging 10% and the employer is charging 12%. Then how much is my concession? Nothing. Nothing. All right. If the rate charged by the employer is more than the SBI rates, then don't add anything. That's it. Are you all here? Are you all here? Yes. So let's understand how do you value the perquisite in this case. So can you read the first part of the column? What is that? Interest charged by employer more than or equal to SBI rate. Not taxable, not a perquisite, because you are not getting any benefit. Are you with me? Now, interest charged is lower than SBI rate. Then it is treated as a perquisite, and interest at SBI rates on maximum outstanding balance less interest paid by the employee on that loan. Simply means, say for example, I took a loan of 10 lakh rupees. SBI rate was 10%. Employer charged only 2%. What is the benefit that I'm getting? 8% on the capital balance. Are you with me? Are you with me? So interest at SBI rate on maximum outstanding balance less interest paid by employee on that loan. Are you all here? And there is a note under this. Can you read note number 1? Interest charged from employee shall be reduced from the above determined value. That's what we have done. We have already deducted that particular value. Only 8% will be the concession that I am getting. Then what is note number 2? Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. Can you read that note again? That's what I am about to say, Ragul. Don't worry. Okay, that's what this note is. Read this again. Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. There is a problem when you repay loan. What is the problem? Not a problem. How do you repay a loan? We call it as EMI, equal monthly installments. So the amount that you're repaying will be fixed, but that principal and interest component varies. Are you with me? Are you with me? Let me create a circumstance. Okay, let me create a circumstance and let's analyze how do you practically or how do you compute it for examination. Practically as well as an examination, you have to compute in this manner, which I am about to show in this example. Okay, so I have no plans to repeat that example because it is going to be a very lengthy example. So I want all of you to be super attentive right now. Are you all here? Are you all here? Say for example, I took a loan. Okay, I took a loan from my employer. I took a loan from my employer and the interest, it's an interest-free loan. Okay, interest-free loan. He is not charging any interest. SBI rate in the market is say 10%. SBI charges for a similar loan, and what is the market rate? 10%. Always the standard is SBI interest rate. When you value this, that will be given in the question. Okay, they will definitely provide that in the question. The SBI standard rate is how much, friends? 10%. So employer provided me a loan, and say friends, in this loan, every 5th of a month, every 5th of a particular month, I have to repay 20,000 rupees to the principal. This loan is structured in a way that every 5th of a month, I have to pay how much? I have to pay how much? 20,000 rupees to the principal. Forget about the interest amount. Every month, 5th, I am supposed to pay 20% to the principal. That simply means, say for example, say this year starts from 1/4/2023. On 1/4/2023, opening balance of that particular loan is 10 lakh. Opening balance of that particular loan is how much, friends? 10 lakh. Are you with me? Are you with me? On 5th of April, on 5th of April 2023, how much will I pay to the principal? 20,000. And how much is the balance on 30th April? On 30th April 23, how much will be my balance? 9,80,000 will be my balance. Are you with me? Are you with me? Every month end, on the outstanding balance, you have to apply the concessional rate to value the perquisite, because every month there is a principal repayment happening. Are you with me? If the examination question says that every month there is a principal repayment happening, then on every month outstanding value, you have to, every month and outstanding value, you have to compute the interest concession to value the perquisite. Let's go back to that particular note again. Can you read this note again? Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. So for April month's concession, how do you value? Your outstanding balance is 9,80,000 into, what is the rate of interest? 10% into 1 by 12. Why 1 by 12? 10% is for a year. Here outstanding balance is for a month. So you need to compute the concession for a month. Are you with me? Can you help me with the math? 8,167. You round it off. Okay, it's 166.66. You round it off to 167. Yes. Then, listen. On 5th of May 23, there will be another repayment of 20,000 to the principal. Yes or no? So you tell me how much is the balance of principal on 31st May? 9,60,000 into 10% into 1 by 12. Can you help me with the math? Exactly 8,000. Then next, on 5th of June 23, there will be another repayment of 20,000 to the principal, and on 30th June 23, how much is the balance? 9,40,000 into 10% into 1 by 12. Can you help me with the math? 7,833. Now, next one. On 5th of July, there will be another principal repayment of 20,000, and the balance will be how much? 9,20,000 into 10% into 1 by 12, and how much will be the amount? 667. Likewise, now I hope you got an idea. Likewise, on this is 31st July, right? On 31st August, what will be the outstanding balance? 9 lakh into 10% into 1 by 12. How much will be the value? 7,500. Now, if you check this, there is a series. It's actually series. Every month, 1,333 is the difference happening. Are you with me? All right, forget it. No, let's not complicate it, okay? On 30th September, 8,80,000 into 10% into 1 by 12. And how much is the amount? 7,333. Then on 31st October, 8,60,000 into 10% into 1 by 12. How much will be the advantage? 7,167. Then on 30th November, 8,40,000 into 10% into 1 by 12. 7,000. So moving on to 31st December, 820 into 10% into 1 by 12. 6,000? 33. Then it will be 6667. It's actually series, okay? Yeah. So on 31st January, it will be 8 lakh into 10% into 1 by 12. And how much will be that figure? 6667. On 29th Feb, it will be 7 lakh 80 into 10% into 1 by 12. And how much will be that? Come again? 6,500. And on 31st March, it will be 7 lakh 60,000 into 10% into 1 by 12. It will be 6,333. Now, can you take the total value of all the concession that you got? You need to take the total value of all the concession. Total taxable perquisite for the year. $87,000 is the total taxable perquisite for the whole year. This is how you have to compute if there is a monthly repayment. Are you with me? Are you with me? Ragul, I hope you understood, because you were asking about the EMI. Yeah, 167, yes. It's not 1,000, 167 from every value. It's a progression basically. It's a kind of a series. It follows that trend, okay? Instead of writing this much, you can do that. Instead of writing this much, you can do that. It shows 167 from every value, and you can compute it accordingly, no problem. It's not required that you have to write it in full. Only for making you understand the logic, I've written it in full. Otherwise, after 5 minutes, you will say, sir, how does this 87,000 came? Can you explain? That will come. To avoid that only, I've written everything, okay? Have you all understood what I've written? So, friends, the point is, if there is monthly repayment in the question, always make sure that you have done the answer. You don't have to write this much, okay? But you have to consider for every month. Because every month your balance changes. If the balance changes every month, the interest also changes. Exactly. Is that clear? Excellent. Moving on, friends, we were discussing concessional rate, and there's an exception to this particular perquisite valuation, and let's understand what exactly is that exception. Can you read that exception box? Exception to the above perquisite. However, there is no value would be charged in the following cases. So in the following two cases, you don't have to value the perquisite. Are you all listening? Are you all listening? In the following two circumstances, nothing shall be taxable. What is the first circumstance? If such loans are made available for medical treatment in respect of prescribed diseases like cancer, tuber, etc. So you don't have money. Say you are the employee of a company and you don't have money. You had some prescribed disease. For the treatment also you don't have any money. So you asked your employer, and the employer have given you a loan. And he said, don't pay any interest, but you have to give me back the principal. Then you make use of that particular loan. Will the income tax department come up with a perquisite valuation? No. No, because the employee will definitely curse department in that case. Okay, I don't have money, I'm struggling with my health. You want me to pay the taxes for the perquisite? No, nothing. Okay, to avoid that, it's a kind of a anticipatory bail. We have no plans to tax such interest if it is taken for a medical treatment of a prescribed diseases. Are you with me? Are you with me? Yes, and what is the second case? Where the amount of loan are not exceeding in aggregate 20,000. So you have taken a loan of rupees 10,000. Okay, after 2-3 months you will repay it back. For that and all, don't value any per. If the loan amount is 20,000 or less, don't value any perquisite. That's what the department says. Are you all with me? Is that point clear? So, two circumstances, don't value any perquisite. Number one, if it is for the medical treatment of a prescribed disease. And number two, if the loan amount is 20,000 or less. That interest. Principal amount, no. Only the interest you will get ATE, not from the employer. Yes, from the employer, if you are paying some interest, that interest portion that you've actually paid, you will get it as a deduction under 80E, not principal. E only covers interest. Home loan principal repayment will come, that is 80C. Home loan, yes, principal repayment you can claim, 80C. Yeah, what if I'm taking 20,000 this month, 20,000 next month? That's what they have written aggregate. They know you will do things like this, okay? Then the next month end, your total loan is 40,000. Definitely, all the interest will be taxable. Don't worry. Yes. Sir, 20,000 mean principal. Okay, amount of loan, that means principal. Yes. Who called me? Nobody. என்னடா டவுட் கேளு. அது 24B தான். ஆமாம், செல்ஃப் ஆக்குபைட் ப்ராப்பர்ட்டியாக இருக்கணும் 24B. லெட் அவுட் ப்ராப்பர்ட்டினாலும் 24B கிடைக்கும். புரிஞ்சுதா? பிரின்சிபல்னா அது வந்து 80C. இன்ட்ரெஸ்ட் ஐம் டாக்கிங் அபவுட் ஹோம் லோன். இன்ட்ரெஸ்ட் போர்ஷன் தான் 24Bல கிடைக்கும். ஓகே தான்? எஸ். Moving on to the next one, friends. Can you read the next heading? Free or concessional food and non-alcoholic beverages. So the employer is giving either free or concessional food or non-alcoholic beverages. So what to do? Let's understand how to value the perquisite. And there is something more. 20,000 for other purpose, 20 for any other purpose, it doesn't matter, okay? Yes, you have to aggregate everything. So free or concessional food or non-alcoholic beverages, let's understand how to value the perquisite. Listen. Can you read the first box in that? Can you read the first box? Tea, snacks and other non-alcoholic beverages in the form of light refreshment provided during the office hours, including overtime. Nothing taxable. Say for example, in between the employer provides some tea and some vadai. No problem, have it. Nothing shall be taxable. Are you with me? Due to fear, employee is saying, no, I don't want vada and tea. Okay, perquisite will come. No, don't worry. You have all the vada and tea, no problem. There won't be any perk valuation, but it should be light refreshment. Okay, 2 chicken biryani may be light for you, but not for the department. Okay, so it should be a light refreshment. Now, not taxable. Now, how about the second one? Can you read the second box? Free meals provided during office hours. That is in the remote area or in an offshore installation. There is actually a small alignment error. It should be the next item, okay, next bulleted point. What is remote area? Say for example, you are working in Chennai. Our company is in Chennai and I've sent you to Kodaikanal, okay, for some project work. So Kodaikanal is a kind of a rural area. I don't know. It's a hill station and comparatively it's a rural area, right? Imagine it's a rural area. Okay. Imagine it's a Attipatti. I'm sending you to Attipatti. No problem. I'm sending you to Attipatti. Okay. Attipatti, I think there are no hotels. Nothing is there. Okay. It's a kind of a barren land. We have a new project in Attipatti. So I send you to Attipatti. And in Attipatti, I'm providing you all the food. All the three times food and all. Nothing shall be perquisite because you don't have any other choice. You don't have any other available hotels or something. So to a remote area, if I'm sending you and providing the food, then no problem, nothing shall be taxable. And in an offshore installation, what is offshore? What is onshore? India. What is offshore? Outside India, including the sea. Offshore means not in our land. It is outside. Maybe sea or maybe Dubai or maybe Europe, whatever it is. Offshore. Are you with me? It's not necessary that it have to be in sea. Sea also is included. So offshore installation. So our work is outside India. Okay, outside the landmass. No problem. No problem. If I give you 3 times food, nothing shall be perquisite. Are you with me? Are you with me? But you are getting a benefit. You don't have to spend anything for the food. But this is not a rare case. This is due to the, what do you say? You don't have any other option, that's why. Remote area and offshore installation. If I provide any office, food in the office hours, no problem. Nothing shall be taxable. Now, moving on to the next one. What is the third case? Free meals provided by the employer during office hours, at office or business premises, or through paid vouchers which are transferable and usable only at eating joints. Say for example, in a normal case, you are working in Chennai. Say this is an IT company and you all are the techies. Okay, I'm giving you free food at lunch. Lunch is free for you. Are you with me? Lunch is totally free for you. Either I myself will provide the lunch or I am giving you some coupon like a meal pass. Have you seen meal passes? Certain companies will give. Sodexo is a company which is famous for giving meal passes. You can use that meal pass wherever, whichever restaurant which accept that meal pass, you can give that meal pass instead of money. Are you with me? Either I'm giving you the meal or I'm giving you some vouchers. In that case, how much is the taxable perquisite? Expenditure on free meal in excess of 50 per meal shall be taxable perquisite to the extent of excess amount in the hands of all employees. Here there is no confusion. Say if that one meal that I'm providing you cost 75 rupees. How much will be the taxable perquisite? 25 rupees will be the taxable perquisite. Are you with me? That means 50 rupee per meal. No tax. Over and above that, excess only shall be taxable in the hands of all employees. Are you with me? Are you with me? First of all, will you get a meal for 50 rupees in Chennai? Is it possible anywhere in Chennai will you get? I think some kind of Amma canteen is there, right? Is there some Amma canteen there? How much, what is the cost for 10 rupees? 5 rupees only. Oh, super. Come again? 1 idli, 1 rupee. 1 idli, 1 rupee. Oh, sure. Who funds that? State government. Wonderful. So, is there a lot of Amma canteens in Tamil Nadu or all over? Only in Chennai you have Amma canteen. All over Tamil Nadu you have this Amma canteen. Oh, then there might be huge rush, right? No. Why? Quality is bad. Who is that so? Average. Acha, okay, fine. It's getting recorded, okay. If you say quality bad, I'll pan this camera to you, okay. All right, whatever it is. Anyways, it's a good initiative, okay. Anyways, it is a good initiative. Those who are actually starving make use of these kinds of things. I've seen hotels in Tamil Nadu, especially in Coimbatore. What is the name? Some Vijay Park or something. There's a hotel in Coimbatore naming Vijay Park. Whenever I move on to the classes during the morning time, there will be a long queue in front of that hotel. They always give parcels to the people. Just like beggars and all go over there and they collect the food from that particular hotel. Every day it is there. I normally wonder, like 1 day or 2 days they give, okay, it's fine. They have some balanced food with them, that's why they have given. Every day they give. I can see that whenever I move on, I can see that there will be a long queue. Because people from different parts, I think they are coming. And they are giving these passes to everyone. I have no tie-up with Vijay Park, okay? I don't even know who's the owner of Vijay Park, okay? I'm not sure if I'm spelling it right. Vijay Park or something, that is the name. It's in Coimbatore. It's a big hotel comparatively. They're giving free food. I mean, yeah, I think it's free because I didn't see they're charging anything. They're simply giving this. People are collecting it and going and having this food from the street. Like, it's a fantastic thing. Yeah. So coming back to the point. So, where were we? Completely lost. Yeah. Expenditure on free meal in excess of 50 per meal shall be taxable perquisite to the extent of excess amount in the hands of all employees. Wonderful. Now friends, moving on to the next one. In any other case, apart from these three, in any other case, actual expenditure to the employer minus amount charged from the employee shall be perquisite. In any other case, if the employer is giving a free food or charging something, then the net amount shall be taxable in the hands of the employees. Are you with me? Are you with me? Now, this is all about the free or concessional food and non-alcoholic beverages. So, KSA Cafe also cheap. Oh, is that so? Oh, yeah, I think 5 rupee or something for one idli or vada or something, right? Yes. That is also, Matupatti is a rural area. No, Attipatti. We have Attipatti da. Don't take Matupatti. Yes. Super. Now moving on friends, moving on to the next one, that is next taxable perquisite, that is value of voucher or token in lieu of such gift. Listen, listen, listen. Value of gift voucher or token in lieu of such gift simply means, listen, employer have given a gift to the employee. Employer have given what? A gift to the employee. And if the value of any gift or a voucher or a token given to the employee or any member of his household on a ceremonial occasion or otherwise by the employer shall be taxable in the hands of all employees. That means, say, employee's son's birthday. Employer attended and given a gift to the son. That gift shall be fully taxable in the hands of employee as a perquisite. Are you with me? Or simply one fine day, employer visited the employee's house and given a gift. That gift also shall be taxable in the hands of employee according to this perquisite valuation. That's what we have said. The value of any gift, voucher or a token given to the employee or in bracket or any member of his household, it is on account of either a ceremonial occasion or otherwise. Either simply or at the time of attending some function or something, it shall be fully taxable in the hands of all perquisite. But there is an exemption. How much is the exemption? However, gift voucher or token up to 5,000 in aggregate during the previous year shall be exempted. Gift voucher or token up to 5,000 in aggregate during the previous year shall be exempted. Are you with me? Are you with me? So all the gift vouchers, all the other things which is up to 5,000 shall be exempted. Now there is another confusion here also. What if the value of gift is 6,000? Fully taxable or excess taxable? The value of gift is 6,000. Fully taxable or excess taxable? Two views are there. Every institute question gives with an alternate view because the Income Tax Act, if you read, it's not clear. You can say either fully taxable or excess taxable, just like that 1,000 rupees per child in the case of educational facilities. Similarly, here what you can say is, say if the value of gift is 6,000, either you can say full 6,000 taxable or 1,000 taxable. Are you with me? Are you with me? And there is one note. What is this note? If the employer gives cash, if he is giving money, then no benefit of 5,000, fully taxable. It should be other than cash. Don't give money or directly convertible money. Say for example, you're giving a check. That is also considered as money. Yes, you're giving a check, a cash check or an account pay check. That is also considered as money. You give a gold ring, no problem. But I don't know whether you will get a gold ring under 5,000. So no problem. Are you with me? Are you with me? Yes. The provision up to 5,000, that is written by MEDA. Okay. It's not the copy paste of Income Tax Act. I simply written up to 5,000. Yeah. So if the company conducts some function oriented games for children of the employee and gives voucher for a price of winners more than 5,000, no problem. Okay. But if it is only for the employees, yes. Only for the employees, yes. That have to be considered as a gift. It's a common program and the company's employees' sons also attended, then no problem. Moving on to the next item. We have two more main items before we have three things to salary. Okay, we have three things under salary before we solve a question in salary. So, yeah, we have time also. Now, moving on to the next one. This is another important perquisite valuation in this chapter. Okay, so please listen. Please listen. Use of movable assets. Are you all with me? Yes, sir. Are you all with me? Yes, sir. Use of movable assets. So there is a thing. And before that, yesterday I got some messages. Okay, so please listen, friends. Please listen. See, We have two set of books, okay? We have actually two set of books. I think I've told you this yesterday. Number one is practice workbook. Practice workbook, as I've told you, we have all the past exam questions, answers, RTP, then study material questions, everything with answers, with amendment, with working note. Everything have been provided in this particular book, except one thing, that RFA. That RFA notification, because it came very late. So we have already completed the book and we have already started the publishing. So except that RFA thing, everything is included in this particular book, which is applicable for your September as well as January 2025. This can be used only for September and January 2025. You can see the attempt. I've written May or November. At that time it was May or November. Then only institute changed it to September and January 25. So we have written May or November. Normally it is like that. We complete, this book is printed on normally November of 2023. Normally it is like that. We incorporate all the amendment, then we will make the book ready. Only after that they change the attempt. But all the amendments have been incorporated in this. And plus we have one more book that is called as a handbook. Handbook is just a small extract of this book. That's what the revision notes. It's full of chart. 100% income tax is there. I haven't skipped anything. 100% of income tax is there in this particular book, including TDS, TCS, advance tax, and all the topics are there, including notes, explanation, everything. It's a multicolor book with charts and tables. Okay, I don't know whether online friends can see this. So we have two set of books. This is actually available in our website. So you can scan this, you will directly launch. This is not a GPay scanner, okay. So this is a scanner to easily access our website, Instagram channel, YouTube and all. So these things are available in the website and you will get a home delivery. Okay, and there is a price for that. That means this is actually not a part of the revision classes, okay. I just informed you, we have these two set of books, that's it. You can visit the website, www.cajoscurian.com. You can visit the website, this is it. It's there. So you visit the website and you scroll down, you can see the books. For CA Inter and CA Final, we have this. Okay, for CA Final also, we have two set of books, handbook multicolor. It's around 600 pages for CA Final, because the institute study material itself for CA Final is around 2000 pages. So we have summarized everything into charts, tables, small things. There is no unnecessary explanation in this book. Everything is crisp and clear. Okay. And we have a workbook for CA Final also. So we have 4 set of books, for Inter 2, for Final 2. It is available in the website and you give your mobile number, email ID, your postal address. We will send it from there. Yes. Yeah. So moving on to the next point, friends. Where were we? Use of movable assets. And again, for buying this, you don't have to text me, okay? For buying this, you don't have to text me. You can directly, it's just like buying goods from Flipkart, Amazon. We are also a e-commerce website. We have registered, we got a registration for the e-commerce website. We are also a registered e-commerce website. You can check the website and there is recorded classes, but recorded classes are only for final, not for Inter. I'm not giving any recorded classes for Inter. We have recorded classes for final as well as the books for Inter as well as final. Yes. Now, price you can check from the website itself, okay? Yes. So listen, where were we? Use of movable assets. Listen. This thing you have to be careful. Use of movable asset means what? A common sense. I've given an asset to you. I'm giving this, what do you say? Asset to you. Okay, I'm giving this asset to you. You can use it. Once you resign, you have to give it back to me. I'm not giving you the ownership. I'm only allowing you to use it. Are you with me? Are you with me? Let's understand how to value the requisite if I am giving you this particular asset for usage. So let's see, use of movable assets. Let's understand how to make use of this. So asset given and value of benefit is also there. So friends, listen, what is the first asset? Use of, hello, read it together. What is the first asset? Use of laptop and computers. I am giving you laptops and computers. You tell me, what will be the main purpose of giving you laptop and computers? Office usage. Yes or no? But irrespective of your usage, maybe you are watching some TV shows or watching some movies or surfing in internet, etc. in that laptop, no problem, nothing shall be taxable. But I shouldn't transfer the ownership to you. Once you resign from the company, you have to submit that lap to the company. Most of the companies are doing that. Company have a tie-up with Lenovo normally, and they give this Lenovo laptops to the employees normally. Are you with me? Are you with me? Yes, sir. So use of laptops and computers, and that for that use you don't have to pay any taxes, even though you can use that laptop for your small personal needs, nothing shall be taxable. Then what is the other one? Movable assets other than laptops and computers and assets already specified. What is that? Do you remember motor car? Today only we have discussed the valuation of motor car, yes or no? I am giving you a motor car. You can use that particular motor car for your usage. Then we have already valued the perquisite. So I am giving you any assets other than motor car or laptop and computer. Say for example, washing machine, TV, etc., etc. Without looking at the chart, you tell me, how do you value the perquisite? 10% of the original cost of asset. If the asset is on higher, then the higher charges. Do you remember furnished accommodation yesterday? Yes, I have added this with the unfurnished accommodation and we made it furnished accommodation. Normally the examiner will ask a question like that because both are two different perquisites. Number one, rent-free accommodation. And we have included a thing called as furnished accommodation. Are you with me? Furniture means TV, washing machine, fridge, VCR, AC, then, okay. So things like that have been provided at your home. Then how do you value that perquisite? If it is owned by the employer, take the original cost of the asset into 10% for a year. If it is taken on higher, then higher charges paid by the employer for a year. That's it. Is that clear? Is that clear? There is nothing. And there is a note under that, and can you read that particular note? Where the employee is paying any amount in respect of such asset, the amount so paid shall be deducted from the value of perquisite determined above. If you are collecting something from your employee, then that amount collected have to be deducted from the value of the perquisite. Are you all with me? Is that point clear? Excellent. So this is how you have to value the assets. Now let me ask you one doubt. This perquisite valuation was an asset given for usage. What if I am transferring the ownership? Then there is another perk valuation. That's what we are about to discuss. That is transfer of movable asset. Are you all with me? Are you all with me? So let's understand how to value the movable assets perquisite and all. So listen. So the transfer of movable assets, that is computer and electronic items, motor car is there, other asset is there. This is a little bit important and little bit technical, okay? This is important and a little bit technical as well. So please listen. Let's understand how to value the perk. So friends, let's start with the computer and electronic items. Are you all listening? Are you all listening? Let's start with computer and other electronic items. So, listen. Say for example, I'll create an example first of all, okay? Then we will stick on to the theory. I'll create an example, then we will stick on to the theory. So, say for example, employer purchased a laptop. Purchased the laptop having a value of say 1 lakh rupees. 1 lakh rupees was the value of laptop purchased by the employer. Are you all listening? Yeah. Then he used it for 2 years. He used it for how many years? 2 years. Then on say on 3rd year he transferred that to the employee for 10,000 rupees. For what value? 10,000 rupees. Let's straight away value the perquisite. Let's straight away value the perquisite. So if the asset transferred by the employer to the employee is either a computer or an electronic item, how do you value the perquisite? Let's understand. Very simple. To value the perquisite, you first take the actual cost of the asset. You tell me how much is the actual cost in our example. How much is the actual cost? 1 lakh. You first take that 1 lakh rupees incurred by the employer. Then what is step number 2? Less depreciation at 50% for every completed year under WDV method. Then you have to deduct what? Depreciation at what rate? At 50% for every completed year, and in what method? Under WDV method. Now let's understand how to claim that. So you have used it for 2 years. Yes or no? Yes or no? You have used it for 2 years. So if you're using it for 2 years, for year 1, then how much is the depreciation that you have to deduct? 50%. That will be 50,000. And how much will be the WDV? 50,000. For year 2 again you have to deduct depreciation at 50%, and how much will be that? 25,000. And how much will be the WDV? 25,000. So this 25,000 is the value of the asset in year 3 or after year 2. Are you with me? So after year 2, if this 25,000 is the value, then you have to deduct what? Amount recovered from the employee. You tell me how much is the amount recovered from the employee according to our example? 10,000. So you deduct that 10,000, and how much is the remaining? 15,000. That 15,000 shall be the taxable value of perquisite. Are you all with me? Isn't it simple? These things are very simple, okay? Have we discussed any complicated thing? No, because the volume makes it tough. There are a lot of perquisites and lot of things to study. That volume makes it tough. You learn 2-3 times, okay? You read this 2-3 times, then you have to solve more number of problems. That some will actually save you an exam. Rather than by hurting the theory, you understand the theory. When you read income tax, you just go through the theory, understand the theory, grab the concept, then solve as many number of questions that you can. That is learning rather than by hearting this, because by hearting will never save you actually. You will definitely forget. And that too in question examination, they will come up with some kind of twisty adjustments. Are you with me? So it's not like by hearting theory. You should conceptually understand the theory. Then you have to apply the theory in the examination question. By solving more and more and more number of questions, you'll be able to crack the exam. Are you all with me? Only by understanding theory, it's not possible. Don't think like that. Most of the students are thinking like that. Say, we will learn all the theory. I'll by heart all the theory, then I'll write the exam. It's not like that. Imagine a case where, say, you have by hearted everything. But in exam, what if they have twisted it and they have mixed it in a way that you are getting confused? Then it's gone. So you have to always practice examination questions. Okay, when you practice examination question, you have to open your theory book and read the theory. At that time, you will learn it in a different manner. You will understand a different aspect of the theory that you have learned. Are you all here? Okay, so let's complete the other things as well. And we were doing with the what was the value? Laptops and computers and electronic items. So that is the value of perquisite. Now friends, listen. Moving on to the second one. What if it is a motor car? What if it is a motor car? Then how to value? You take the actual cost, then less depreciation. But what is the rate? 20% for every completed year. Under which method? WDV method. Less amount recovered from the employee. If it is a motor car, then you deduct, you take the actual cost first, then less depreciation at 20% for every completed year. Under which method? WDV method. Less amount recovered from the employee, and the remaining shall be the value of perquisite. It's actually similar to the laptop, but only one difference. In laptop, it is 50%. In yes. So where were we? We were discussing about the transfer of movable asset. So actually the valuation is similar. Okay. The only difference is when it comes to a laptop, it is 50%, and when it comes to a motor car, it is 20%. That's it. Yes. What if employer giving during the year, depreciation for that year is available or not? If available, we provide proportionate depreciation. What are you talking about? You're talking about the employer's depreciation? No. It has no connection with the employer's depreciation, okay? Employer's depreciation is under section 32, PGBP. This is just a method of valuation. Okay, this is just a perk valuation method. What if the asset get transferred on 31st October 22 and how will the completed year be computed? Completed year is, what do you say, from date to date, 365 day. It's not financial year, it's not previous year, it's not calendar year, it's from day to day. Say you purchased on 1st November and transferred that on the 1st November of next year. Then it is one completed year, like that. Okay, it's from day to day, 365 days you have to count. Because they are not saying PY, FY or calendar year. So year means 365 cycle. Yes. So listen, 10th October also completed year you count. Now, so moving on to the next one, other assets. What is other assets? Other than computer and electronic items and motor car. Now friends, there is a problem. Say fridge. It's an electronic item. Are you with me? Washing machine. It's an electronic item, but it is not valued under this bracket. Why? Because computer and electronic items, when you say, we use the ageism generis interpretation. Have you studied interpretation and interpretation statutes in your law paper? Ageism generis. What is ageism generis? If a common word comes after a specific word, the common word will take its meaning from the specific word. So here, electronic items comes after the computer. Computer and, it should be read computer and similar electronic items like computer. That should be the interpretation. Are you with me? So, what they are saying is, electronic gadgets include computer, digital diary, printers, but exclude washing machine, microwave, ovens, mixers, hot plates, ovens, etc. So, are you with me? So, don't include microwave, ovens, washing machine, fridge, mixers, hot plate, AC, like that. Computer and items similar to computer, like laptop, like a printer, scanner, UPS, etc. will come only under that particular bracket. That's it. Now, how about the other asset? Say fridge. What if a fridge has been transferred by the employer to the employee? Take the actual cost and less what? Depreciation at 10%. And what is the method for every completed year? But it is under SLM. Say for example, employer purchased the fridge worth 1 lakh. Employer purchased the fridge worth 1 lakh and transferred it to me after 2 years. Transferred it to me after 2 years and collected 10,000 rupees from me. And collected how much? 10,000 rupees from me. How do you value perk? Year 1, 10% means 10,000. Year 2, 10% means, again, it is SLM right now. So another 10,000. And year 3, the value will be 80,000. And they have collected, say, 20,000 from me. Employer collected 20,000 from me. So you deduct that 20,000 and the remaining 60 shall be the taxable value of perquisite. Are you with me? Are you with me? So actual cost less depreciation and 10% for every completed year under SLM method, less amount recovered from the employee. You have the value of perquisite. Are you all with me? So 3 category of assets. We can divide that assets into 3 category. Which all are the 3 category? Number 1, computer and electronic items. Number 2, motor car. Number 3, other assets. Computer and electronic items, how do you value? Depreciation at 50%. And under which method? WDV method. For each completed year. Then you finally deduct the recoveries from the employee. And how about the motor car? Actual cost minus depreciation at 20% or every completed year, less amount recovered. What about the other assets? Actual cost minus 10% but depreciation under SLM method and you deduct the recovery. This is how you value the perquisite, that is transfer of movable assets. This is the ownership. not usage. Are you with me? So by that we can say the perquisite valuation is actually important perquisites we have completed, and we have one more thing under this chapter, that is deductions from salary. So friends, listen, in examination question, how to solve the answer? Definitely there will be something in relation to salary. Definitely there will be something in relation to salary. Normally they may come up with a dedicated question. They may come up with a dedicated question which carries around 6 to 8 mark. Or the salary adjustment will come as a part of your computation of total income chapter. Or they will come up with some paragraph based MCQ. Coming back to the point, friends, listen. You have 3 set of deductions, and number 1, standard deduction under section 16(1)(a). So what is standard deduction? Either 50,000 or gross salary, whichever is lower. Listen. See, salary have different components. Allowances is there. Gratuity is there, pension is there, then leave salary is there, then retrenchment compensation is there, then voluntary retirement is there, perquisites are there, bonus is there, DA is there, commission is there. You have to add everything first. If something is exempted, you adjust that exemption, then RPF, PPF, SPF thing. Something is exempted, you adjust that exemption, then you compute the gross salary first. Are you with me? From the gross salary, the first deduction that you should claim is what? Standard deduction. And how much is standard deduction? Either 50,000 or amount of gross salary, whichever is lower. That means if your gross salary is 40,000, don't claim 50,000 as standard deduction and don't say that it's a loss. Because in salary head, you will never end up in loss. Are you with me? Are you with me? So what department says? Standard deduction of 50,000 or amount of salary, whichever is lower, shall be the deduction. Then, what is the second deduction? Deduction for entertainment allowance. If you are a government employee and you are getting entertainment allowance, you can claim a deduction for that entertainment allowance that you got. Are you with me? If you are a government employee and you are getting an entertainment allowance, you can claim a deduction for the entertainment allowance that you got. What if you are a private employee and getting an entertainment allowance? Say you are a private employee and getting an entertainment allowance, then it shall be fully taxable. Only government employee. Government employee simply means state and center. Now moving on. How much is the deduction, friends? It shall be lower off. Which are the limits? 1/5 of your basic salary. So you take your basic salary into 1/5, or rather we can say basic salary into 20%. 1/5 is 20%. So either 20% is the basic salary or 1/5 of basic salary. Then what is the second limit? 5,000 rupees. What is the third limit? Actual entertainment allowance received, whichever is lower. So very simple, either actual entertainment allowance received or 20% of the basic salary, or 5,000 not per month, it is for a year. 5,000 rupees, whichever is lower, shall be the deduction for the entertainment allowance, provided you are dash government employee. Very good. And what is the third one? Professional tax under section 16 clause number 3. So different state charges professional tax according to their wish. Whatever professional tax that you paid is allowed as a deduction only when it is actually paid by the employer during the previous year. So the professional tax paid by you also can be allowed as a deduction. 3 deductions from gross salary. Which are the 3 deductions? Standard deduction, entertainment allowance, professional tax paid. Are you all with me? Are you all with me? Now there is one more thing that you should know. Say, listen. Say my professional tax is 2,000 rupees. Okay. Say my professional tax is 2,000 rupees. Say 1,000 paid by employer. 1,000 paid by employer. Okay. 1,000 is paid by whom? Employer. And 1,000 is paid by me. Me means employee. Okay. In that case, what to do? I am supposed to pay 1,000 from my pocket. Yes or no? Sorry, not 1,000. I am supposed to pay 2,000 from my pocket because that is my liability. But my employer have paid 1,000 for me. Yes or no? I am supposed to pay how much? 2,000. But my employer have paid how much? 1,000 for me. You tell me. That will become my taxable perquisite. Are you with me? that will definitely become my taxable perquisite, and you have to treat this as a perquisite. Are you all with me? Now, after you compute your gross salary, from the gross salary you deduct that entire 2000 rupees as what? Deduction. 2000 means 1000 paid by you and 1000 paid by employer. That simply means that employer 1000 will be added as a perquisite and you can claim as a deduction. Even though you didn't do that, you will get the same numerical, but you will not get marks. Are you with me? Because your gross salary will go wrong, your deduction also will go wrong. If the employer is suffering a portion of or the complete professional tax, you add it as a perk. Then you deduct the same amount as a deduction from professional tax. If some part is paid by him, add that part as perk and deduct the entire professional tax paid by you and your employer as a deduction from the gross salary. Is that clear? No, there is no limit actually, because different states charges different amount. It can be 2000, 2500, 3000, depends upon the state. The state have the authority to levy professional taxes. Normally it is around 2000, 2500 and all. Yes, that's it. By this we can say our salary theory is over. Paid by me 5000, then you can claim that 5000. Okay. If it is paid by you as 5000, then you can claim that 5000, no problem. Yeah. So the theory is completely over. Now we have what? We have some questions. So let's solve some questions right now. I want all of you to take question number 4. It's a fantastic question because that covers most of the things that we have discussed till now. Okay. Take question number 4 in your page number 1. It's a fantastic question. Salary. Just solve that question. Question 1, page number 1, question number 4. So Mr. X, keep quiet and listen. Mr. X retired from services of Messrs. Y Limited on 31st January 2024 after completing service of 30 years and 1 month. He has joined the company on 1/1/1994 at the age of 30 years and received the following on its retirement. So he is about to retire right now. Okay. He received gratuity, leave encashment, then he got a car, then he commuted pension, then he got a gift and another gift from his friends. Following are the other particulars. Okay, we'll finish that question. We'll read that question together first. Other particulars, he drew a basic salary of 20,000, 50% DNS allowance from 1st April to 31st January. Received a pension of 5,000 per month for a period of February and March after computation of the pension. Compute is gross salary. So rather, let's make it salary, okay? No problem. Gross salary, you have to deduct the standard deduction, that's it, okay? Let's make it salary, okay? I am about to compute the salary, okay? I am about to compute the taxable salary from the above for assessment year 24-25, assuming he exercises the option of shifting out of default tax rate provided under 115 BAC. So friends, one thing I can tell you, don't worry about 115 BAC. First you learn one old slab. Then as I've told you yesterday, we'll flip it. Okay, and the last day, I can give you some tips how to flip that. Okay, how to flip that dosha. There are certain tips, easy things are there. So there are certain head-wise comparisons there. By that you can easily understand that flipping technique. Are you all with me? Just like flipping omelette and all, you require a skill to flip it. Okay, it is just like that. This is nothing. BAC is nothing. Don't get terrified by 115 BAC. Let it be there. So first of all, let's start with the basic salary. So let's solve it together. So I'm writing a format, particulars and amount. And here we'll do the working notes. Okay. In exam you can do the working notes in the next page, but here to bring it under one page I'm doing all the working notes parallelly. So first of all, we'll always start from the basic salary. And how much is the basic salary in the question? How much is the basic salary in the question? Where is that question? This is it. Yeah. Basic salary is 20,000, that from 1st April 23 to 31st January 24. Okay, don't multiply it by 12 because he retired on January. So it is only 10 months. So 10 months into 20,000, it will be 2 lakh. So basic salary is only 2 lakh. So we'll write that here first. So basic salary 2 lakh. Now, how about the DNS allowance? They say 50% as the DNS allowance. 50% of what? Basic salary. 50% DNS allowance per month for period from 1st April to 31st January. So 50% of basic salary means how much? 1 lakh. And my assumption is this DA does not form part of the retirement benefit. This is what my assumption is because they are not mentioning anything. You can assume otherwise, okay? You can assume otherwise. You can assume that it forms part of the retirement benefit as well, no problem. Now listen. He received a pension of 5,000 per month for a period of 1st April 24 to 31st March. So 2 months he got a pension. This is after commutation. So this 5,000 is uncommuted pension. You tell me what is the treatment of uncommuted pension? Fully taxable without any exemption and all. So we can write uncommuted pension is fully taxable. So I'm writing uncommuted pension for February and March. So that is 5,000 into 2 months. That will be 10,000. That is fully taxable. Now, moving on with the next item, we will go to the additional, these are the additional information. So we'll go to the first adjustment, that is gratuity 6 lakh. Was covered under Payment of Gratuities Act 1972. So he is covered under Payment of Gratuities Act. So first of all, we will write gratuity. Can you claim any exemption for the gratuity? Yes. How much is the actual gratuity received? How much is the actual gratuity received? 6 lakhs. So actual gratuity received by that person is 6 lakh. So we'll write the actual gratuity here. Then let's write a working note over here. So gratuity, if you are a other sector employee, that means if you are not a government employee and you are covered under Payment of Gratuities Act, then you tell me how do you compute the exemption? Lower of either 20 lakhs or actual gratuity received, that is 6 lakh, or 15 by 26 into last drawn salary. For that, the definition is salary plus DA, whether the DA forms part of retirement benefit or not. Hope you remember the definition. So last drawn salary, basic salary is 20,000 and last drawn DA is 10,000 rupees. Are you with me? So last drawn basic salary will be 20,000 and last drawn DA is 10,000. So 15 by 26 into that, into completed year of service or part thereof in excess of 6 months. You tell me how many years he have? 30 years and 1 month. That's it. So 30 years. So can you tell me what will be the third limit? 5 lakh 90,000. 19. Okay, 5 lakh 19,000. 231 will be the third limit. 230 or 231, both are fine. So whichever is lower means 519, 231 is the lower. So 519, 231. Can you tell me how much is the taxable gratuity? 80,000? 769. Due to that 31, I'm taking 769. No problem. You can write 70 also. No problem. Because anyways, we are going to round it off the total income to the multiple of 10. So that 1 rupee doesn't make any difference. Okay, it's up to you. Now, moving on to the next one, friends. This is working note number 9. Yeah. So moving on to the second one. What is second one? Leave encashment of 3,30,000 for 330 days. Leave balance in his account. He was credited 30 days leave for each completed year of service. So there is a leave encashment. So first of all, let's write the leave encashment. Okay. So how much is the leave encashment? How much is the leave encashment amount? 3,30,000. You can claim an exemption. Why? Because this leave encashment is at the time of retirement. So how do you claim exemption for the leave encashment? Which are the limits? Number 1, rupees 25 lakhs. Number 2, Actual leave encashment amount received, that is 330. Number 3, last 10 months standard salary. That too average of standard salary. So if there is no change in the salary, then it's the total of last 10 months salary. So you tell me, what is standard salary? Standard salary means basic salary plus DA forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. So here DA, they are not talking about whether it forms part of the retirement benefit or not. So what to do? Assume that it is either forming part or does not forming part. So it is up to you. I am assuming that DA does not form part of the retirement benefit. So what to do? 10 months into 20,000, because they are not talking about commission. So that will be 2 lakh. If you are assuming DA forms part of the retirement benefit, this limit will become 3 lakhs. That's it. And what is the last limit? Cash equivalent of leave at the credit of employee provided annual leave encashment shall not be more than 30 days. So let's go back to the question to understand how many leaves he have in a year. So they say he was credited 30 days leave for each completed year of service. So no problem. And the leave balance is 330. So what to do? First of all, the leave balance in number of days have to be converted into months. Into what to do? What is the next? You have to encash it. Encashing is based on the last drawn standard salary, that to the average. Are you with me? So that you already know the average is 2 lakh by 10. Why 2 lakh by 10? 2 lakh is last 10 months total salary. Averaging it means 2 lakh divided by 10. So can you tell me what is the third limit? Yes, 25 limit is the maximum. Yes. Can you help me with the math? 2 lakh 20. 2 lakh 20, right? Now you tell me whichever is lower. It is 2 lakh. 3 lakh, it is amended, okay. It is amended in the February 2022. Don't use old books. 2 lakh. So you claim that, and now you tell me how much is your taxable leave encashment? 1 lakh 30,000 is your taxable leave encashment. I think if you assume DA forms part of retirement benefit, then it will be 3 lakh. The exemption will be 3 lakh and only 30,000 will be taxable. It's up to you. In examination, you can choose anything. Both are fine. Yeah. So that's it. This is the second working note that we have. Moving on to the third one. What is the third one? As per the scheme of the company, he was offered a car which was purchased on 30th January 21 by the employer for 5 lakh. And the company has recovered 2 lakh from him for the car. The company depreciates the vehicle at a rate of 15% on SLM. So, as per the scheme of the company, he was offered a car at the time of retirement. What does that mean? Usage or transfer of ownership? Transfer of ownership only. Are you with me? So how do you value motor car transfer? Very simple. We will do another working note, perquisite. Motor car transferred. Motor car transferred. Now, first you take the actual cost of the motor car. How much is the actual cost of the motor car? How much is the actual cost of the motor car? 5 lakhs. So, to the employer, actual cost 5 lakh. Now, when was the date of purchase by the employer? 30th January 2021. You tell me, how many years he have used it? He retired on 31st January 2024. The company purchased that particular car on 30th January 2021. So how many years are there? From date to date, if you check, it is 3 completed years. Because 1 year means it starts from 1st January and ends with 31st December, not with the 1st January of next year. Are you with me? So here we can say that there are 3 clear and 1 more day is there. Okay, not one more, 2 more days there actually. So it is 3. So what to do? 3 years is there. So how do you depreciate? Depreciation should be claimed at 20% under WDV. That we don't care what the company does. They are saying that company is doing SLM at 15%. Ignore that, because according to the perquisite valuation rule, what department say, you must take 20%, that too at what method? WDV method. So what to do? Depreciation for year 1 at 20%. And how much is 20% of 5 lakh? 1 lakh. In WDV means, how much is the closing value? 4 lakh. Again, depreciation year 2 at 20%. That will be 80,000. 3,20,000 will be the WDV. Again, depreciation at 20% for year 3. That will be how much? 64,000. Round figure 64,000. So how much will be the 256? That is the value. Now, is there any recovery from the employee? Is there any recovery from the employee? How much is the recovery? 2 lakh is the recovery from the employee. So you can deduct that. And how much will be the remaining amount? 56,000 shall be the taxable perquisite. So 56,000 shall be the taxable perquisite for the motor car. Are you all with me? If DA forms part of the exemption, 330, yes. Okay, 330, how 3 years? Please explain again. Check the dates. Okay. Why not 15% in SLM? Check the perk value. Very simple. What is the perk value? Listen here. Are they saying 15% SLM? No. What department say? 20% on WDV. Okay. That's why we took 20% WDV. Got it? What they say in the question is irrelevant for us. So what is happening? Okay. Yeah. Ali Nawaz, you check the question, you will understand how 3 years. It's from date to date. Yes, moving on. Moving on, what is next? 2 years only. You do one thing, go take a calendar. Go take calendar from your mobile phone and check. From 2021 to 2024, how many years are there? In your calendar, it's showing only 2 years. Date is 3 years. 21, 22, 23, 24. Start counting with the finger also, it is 3 years. You don't have to take calendar for that. Now moving on. What is next? Where were we? Okay, so pension, missed the question, 1 second. Yeah. So an amount of 3 lakh has commuted pension 2 by 3rd of his pension commutation. So he commuted 2 by 3rd and he got how much? 3 lakh. He is getting gratuity. So how do you claim exemption? 1/3 of the amount if he. Okay, once your default microphone has changed to. What happened? Come again? Video stopped. What's happening? That too with a perfect. It got stuck. Video only have a problem. So it's scam, but it's not working. It seems like some kind of error. Deactivate, that's not working. Where is the deactivate? There's a problem with the mouse also. Why it's not working? It's a it seems like an imported mouse, okay? It's not at all working. What is this? Oh my God, somehow. Yeah. Now working. Okay, got it. So friends, where were we? Where were we? Online friends, am I audible? Online, am I audible? Please, whichever is lower. Yes, perfect. All right. So listen. So pension commutation. So we will write the commuted pension over here. So pension commuted or commuted pension. How much is the commuted pension? 3 lakhs. No. How much is the commuted pension? 3 or 2? It is 3 lakh. So 3 lakh is the commuted pension. You write that over here. Then you can claim an exemption. And how to claim the exemption, friends? Very simple. Since you are receiving gratuity, your exemption shall be 1/3 of the pension if you would have received had you commuted the entire pension. So you commuted how much? 2/3. Yes or no? So 2/3 and you received how much? 3 lakh. So how do you do it? Into 3 lakh into 3 divided by 2. So into 1/3. How much will be the exemption? 1 lakh 50,000. Now if you claim that 1 lakh 50,000, how much will be the amount taxable per 1 lakh 50,000. Yes. Now then, is there anything else? Yes. Company presented him a gift voucher 6,000 on its retirement. What to do? Up to 5,000 you can claim an exemption. Excess taxable or full 6,000 taxable. It's up to you. Gift from employer. I am saying 1,000 taxable because the value is 6,000 and exemption you can claim up to 5,000, and in my opinion only 1,000 required to be taxed because that's what we do in office. We always interpret everything in the benefit of assessee, so we know normally like that. Then what is next? His colleagues also gifted him a TV LCD worth 50,000 from their own contribution. What to do? Not taxable under salary and IFOS. Why not taxable under IFOS? First of all, 2 reasons are there. Number 1, the value of the TV is exact 50. The gift value have to be how much? More than 50. Even though the TV's value is more than 50, it is not taxable. Why? TV is not a movable property according to the definition under IFOS. Because that definition have certain items like jewelry, bullions, coins, etc. There are certain things. Drawings, paintings, archaeological collections are there. Only those are considered as taxable gifts. TV, car, etc. are not a taxable gift, and hence it is not taxable under IFOS as well. Are you with me? We will cover 56 subsection 2 clause 10 as a part of this revision, so don't worry about that. So for the time being, it is not taxable under salary and IFOS. So I think done. Can you compute the gross salary now? Gross salary. Basic salary 2 plus 1 plus 10 plus 80, 769 plus 130 plus 56 plus 150 plus 1000. 7,27,770. Then you have to deduct what? Standard deduction. And how much is standard deduction? 50,000. You deduct that, how much will be the taxable net salary? 6,77,770 will be the taxable salary on an assumption that DA does not form part of the retirement benefit. Yes. DA forms part 627, 770. Okay. That's the answer you are getting. Car portion alone gone wrong. Now I am corrected. Then I understood about the car year. Okay. Hope you understood. Sir, please zoom out. Okay, zoom out. Okay. But if I zoom out, this is the problem. Yeah, I think almost everything is there in one page. Got it? Yes. Uncommuted pension, we have already computed, okay? Look at the third item. Third item is uncommuted pension, 5,000 into 2.